Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, but not too early. Come on, wake up. Pour that coffee down your throat hole. It's hot, a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. Tasty, not a coffee.
Good morning. I'm not going to say knuckleheads because I am joined by two of my favorite brunettes on the planet. We've got both to this side. Jenny Andrews and Vanetta Logan. Well, how are you guys?
Good morning.
Good morning, ladies. Happy Friday.
I know we made it. The short week. We made it.
I know. And you guys were on the floor 2 days this week, right?
2 days. Only one day next week. We're going to be in the office.
Oh, that's exciting. Yay.
We'd like to put on the books and meet with you on just a couple things.
I want to help. As long as you guys will make some TikToks for me.
I will, but I need a lesson on social media. I told Liz, I said, we'll start really amping up our social media presence, and we need Vanetta to help us. I don't even know how. I'm going to get started on Instagram, and Germany's going to be our coming out party. Instagram.
Yep. Sprechen Sie Deutsch.
Well, you guys have a high bar because, as I mentioned on today's show, Dylan Radigan's Instagram is crushing. He was born to be an influencer.
I think that's where Jenny got her from. She's like,
when you said it, and I looked at Dylan's Instagram, I thought, do this, Liz.
It's good.
Well, I think he's got some help. He's got some help, doesn't he?
I don't know. I think it's all. I mean, his friends are truly beautiful women.
It helps. It adds.
But I think he makes his own posts though.
That's pretty funny. Yeah, Dylan Radigan is Jenny's inspiration. I believe he is. He our age, or he's older than us, right?
He's close to our age, I think. Maybe a couple years older than us. I think he's pretty close to our age.
He's younger than Tom and Tony, isn't he? I know he's younger than Tom. Is he, Tony?
Yes. Be surprised if you find out like how old Dylan actually is. Like I was like,
he's younger than you would think. Right?
Yes. But we are all 27, so.
That's right. Vanetta, your best friend's boyfriend, or your best friend's fiance.
Yes, my best friend's husband.
Yet, right? Aren't they just?
No, they're not. No, they're not married yet. No.
Your best friend's fiance has been proud of Jenny's favorite stocks, AEO.
Oh my goodness, American Eagle. I've been holding on to that stock for so long, Vanetta, and it soared yesterday because they're doing well. They had one girl that they were using in our marketing campaign.
Sweeney, Mom. Yep, Sydney Sweeney. Yep, Mom. Yep, Sydney Sweeney. Yep.
And Travis Kelce for a line.
Yes. His True Colors collection, and affordably priced, so you can go to American Eagle and get a bunch of stuff. So.
Vanetta, I thought the thing today when you were closing it, when you were talking about how, hold on, for the fantasy football, the fantasy football punishment, because my son, his punishments are ridiculous each. It's pretty funny. So I don't know if you saw this yesterday, Jenny. So if you lose, this person who lost their fantasy football, they had to recreate the entire Travis Kelce photo shoot, the GQ spread.
It's amazing. That guy was a true soldier. He did such a good job.
I remember face. There were so many photos. It was funny, cute.
But there have to be consequence.
Well, I mean, keep in mind he's 18, and it's the neighborhood. So he's been doing this since he was like 13. They're dumb, like real dumb, like real dumb. Last year, no, it was 2 years ago. They had to get into our dog mustard and ketchup and like flour and stuff on him. And I had to put the kibosh on it. I had to be like, he's going to choke to death. In flour in the cage and he can't get out.
And I'm sorry, and who were the gentlemen who were volunteering to clean up the mess afterwards?
Oh, so I made him take it in the back with the hose. I was like, no dog cage. You can use mustard and ketchup, no flour. Go nuts. Here's the hose. Flour. Go nuts. Here's the hose.
Well, I'm very you're having my very own fantasy team. I'm in a league. It started yesterday, and so I'll be watching football all weekend because I have my own. They let me
What
in.
is your team name, Jenny?
I'm Trader JNY. I've always
Oh, okay.
so husband travels to Germany a lot, and last year I would have to make his picks when he was in Germany, because in Germany you can't go onto DraftKings. I don't know if you knew that. So he can't go into DraftKings.
You're gonna make your picks when we're in Germany, Jenny.
I've got it all taken care of, Liz. So I would make his picks when he was in Germany, and I would every time I would win. So then offered me a spot on the league. So now I have my own team.
Look at you. You were like a ghost mayor, and now you get to be your own commissioner. I'm very proud of you, Jenny.
Give her some fun names. Give her some fun fantasy football names that she can choose.
Oh, there's a lot on TikTok because more and more, women are getting into fantasy, and they're creating their own names, and some of them are just really funny. They're not appropriate for morning TV.
I think I'll stick with Trader JNY.
Yeah. No, that's good. That's who you are. So it's iconic.
Vanetta, my question to you is: do you miss your San Francisco treats this morning?
I do not miss working with unmedicated boomers. I would much rather have your beauty and your insight and your ability to form a sentence.
It is right about now. Doors are opening, right? They're opening. They're greeting the people.
I think it's like 5 a.m. there. I don't know that doors are open.
Oh,
it's San Francisco. So I'm sure Tom is up for 6 hours already.
Probably watching. We're watching you, watching us, Tom. We know.
Yeah.
Oh, he does watch when he's not in town.
He hate watches. He's not on the show. But there were so many people signed up for San Francisco that they had to go to a wait list. So I'm sure people are already headed to the venue.
Because we know, that I know that we know that our viewers
are dedicated.
They say doors open at 8. They're there at 7, or they're there at 5. Right? They're waiting.
Yeah.
On tour, viewers would be lined up at the there. So we would have to be there at 7 for doors. Doors open at 8, and there'd be people already lined up.
Oh yeah.
So, yes.
Yeah. So, but hopefully, market gives them lots to work with. So,
yeah, Spoo's up 6, NASDAQ up 107. We are watching to see what happens when the number comes out. I'll keep everybody updated.
Jenny, I asked about this before the show started, but you have a medical update on your son, your dog.
Yeah, Clarence, I said they have 2 weeks. Thursday was the 2-week mark, and miraculously he started running up and down the stairs. Exactly 2 weeks. I've been carrying him. My bag is killing me.
My neck.
I posted his picture on Twitter. So later, Liz and I will pop into Twitter. I posted his picture. He doesn't look heavy, but he is, and he made a full recovery.
He's not heavy. He looks so skinny there. What'd you do? How'd you take that photo? And can you run me through that filter?
You don't want to see?
Okay, yeah, go to Twitter if you can. I don't know.
I'm not sharing my screen. Hold on. Let me see if
Show it to me, Rachel.
I didn't edit the picture at all. I don't know why he looks so. I guess he's a little skinnier than he used to be, maybe, but he still felt very heavy.
And let me try to do this real quick. I mean, as I say, real quick, it's not happening, but
no, that's okay.
So,
yeah, the hills are alive. Aww.
There he is.
He's so small.
That's what I'm saying. He's pretty chunky. What'd you do? Whatever filter you got for this, I need you to run me through it for all of our Germany photos.
I did not run him through any filter. That's Clarence. Right after the mobile show. Yeah, Liz and I were on the show yesterday, and I said, Liz, I have to go. The mobile makeover is here. And Liz thought
she said my mobile makeover is here. And then an hour later, I'm sitting there. I was like, did she just get a mobile makeover? And she's like, no, it's for the dog. You look so cute.
But there he is.
All right, I will stop sharing now. So there's Clarence. Stop. We can jump right in. Sorry to do that to you guys, but yeah, we had to jump in. There's Clarence, and he looks very skinny. He looks very happy too.
Yeah, he does like he loves getting his mobile makeover.
It's good. Have you guys gotten updates from your children who are in college now? Everything's going okay? No new piercings or tattoos?
Oh, no, Vanetta. I hope not, but I finally stopped. Okay, so I'd like to say this for 2 full weeks. I was very concerned about his well-being, and I would track him. I have stopped doing it. I wake up in the morning and I stopped tracking him. So all's good. He's loving it.
That's called growth. I'm so
Growth.
proud of you.
Well, I'm glad I gave myself until Labor Day, and I did. I was weaned off by Labor Day.
Good for you, Liz.
Yeah.
Today is Vanetta. Actually, today is Lily's birthday. She turned 17 today.
Oh, happy birthday, Lily. You know, September has the most birthdays out of any month, and the most popular birth date, September 9th. More people have a September 9th birthday than like.
What holiday is that before? What holiday?
January. It's like winter January, right?
I don't know. Oh, when all the people are doing it, I don't know.
Well, it's so funny because if you look at the hospitals, you know, like after Valentine's Day, they come after, I think it's New Year's Eve. Lily's probably a New Year's Eve baby.
I don't think
Good
there
job,
would ever
Jenny.
I don't think in my life there'd ever be a New Year's Eve baby. New Year's Eve, I'm usually passed out around 2 a.m.
Oh, by 2 a.m.
Nope, I could say something right now, but I need this job.
But yeah, that's what I love. Like the most birthdays in September. So I bet that's gotta be right around January, Christmas or January.
Yeah, I mean, it was a good time when we were at our old office, and a lovely lady named Doreen, like she would just be cooking up a storm because there were so many September birthdays. We would have really fun, like she'd bring in cakes and pies and Swedish meatballs.
And you know what I loved about Doreen? She would always bring in cocktails for us too. So
yeah,
it's the spirited cocktail with the appetizer that she was making. So
I still text with Doreen, and I don't know if you follow Doreen on Facebook, but she's living the life.
oh, she's living her best grandma life. I mean, yeah, I'm so happy.
Yeah.
All right, Vanetta, what's on tap for this weekend for you? You never get to talk about yourself, so this is go.
You were going to be gravely disappointed. The weather's going to be nice. I don't know, probably just go for a motorcycle ride. I rode home last weekend and because the weather was perfect. So probably just ride around.
When does the bike get put away for the season?
Not normally till like November. I try
This is your season. Too hot is not good, right? Like
yeah, no, too hot is bad. Because you basically already have an oven between your thighs.
It is
You put it into storage. Does it get stored for the winter then?
Yes, yeah. I will fill the tank with stabilizer. I'll pull the battery, put a cover on it, and then just wait till it gets warm, and then put the battery back in, take it for a ride, and then it's fine.
It's like your boat.
I was gonna say
Yeah, like your boat, like a boat or RV, but it's a less strenuous process. Like you don't have to flush any of the fluids out of it, so it's fine.
Yeah.
I don't know how we got onto motorcycle maintenance. But how about you guys? What are your plans for the weekend? It's going to be nice.
Oh God, you know what? I'm golfing, and then we have Taste of Lamont.
Ooh, I'm sorry. And what does Lamont taste like?
Now, I'm not exactly sure, but all the restaurants come together. So that's
Okay.
what we're doing this weekend. Nothing exciting. I don't know what Jenny's doing this weekend.
Oh, it's Lily's birthday. It's Lily's birthday. So I have 10 girls sleeping over at our house tonight. And tomorrow it's a busy weekend.
Do you prefer girl sleepovers or boy sleepovers as a host?
I'm anti-sleepover for both.
So the girls sleepover is like very pretty and fun where I'll make a candy bar, a sundae bar, like lots of, it's a lot more work that goes into decorating the basement for the girls sleepover. For the boys sleepover, I don't do anything. They walk in the door, they go downstairs, I never see them.
Like 20 pizzas show up, it's fine.
Yeah. So it's a busy birthday weekend. And it's crazy to think when I started this show, when we started our show, she was 2. Now she's 17.
I know.
Yeah. Oh my gosh.
Yeah.
And I didn't know this because we had two 2-year-olds, 1 4-year-old, and 1 7-year-old.
Yeah, and Vinny was a baby, like Bat's son too. Had just been born, and like he's 15 now.
No, it's bonkers.
What?
Right.
Time flies when you're having fun, Vanetta. Time flies.
I know. And Katie's getting married today.
Oh my God, I know. So did
Yay.
you post pictures?
Yeah, she'll post pictures.
Okay, good. I want to see her. I bet she's gonna be a beautiful bride. And her
Oh.
husband is so sweet.
He gives me so much hope for the male species.
I want to see pictures. I hope we get pictures to post on the show. Post some pictures on Monday.
I wouldn't post them on the show unless you got her like permission.
Yeah.
Jenny.
Everybody loves Katie. I mean, hey, Vanetta, the one thing Tom said when we all signed up for this is nothing's off limits. Your life is the show. You like everything's on air.
Oh no, if I get married, I'm going to put out a billboard in Times Square because it will be an amazing feat of achievement. I'm going to see if I can blast that from space. But for Katie, I don't know. She's a very private person. I don't know if she wants her photos, but if I get married, I'm making it everybody's problem.
What are the chances Taylor Swift's wedding would be like broadcast?
It's not. I don't want that for her. I don't
think she'll do that. I don't think she's going to make, she doesn't need any, let's put it this way. She doesn't need any more PR. Vanetta, do you think she's going to do the Super Bowl halftime show?
No.
That's like the biggest debate is like, are they going to try to rope her into that?
No, I don't. Again, and I had to tell Dr. Data this too. Dr. Data was like, "Oh, are you going to the wedding?" Let me be perfectly clear. I'm not delusional. Like, I don't think that Taylor and I are actually friends. Like, I don't know anything extra about her that you like. I just want to be very clear that I am based in reality. I am a big fan, and I think it's fun to lean into that. But I do not think I am going to personally be invited. I do not think that she's going to stream it. I don't think it's going to be pay-per-view.
I think if you put it out there, it'll come to fruition. You keep telling everybody it's your best friend, they're going to start to believe it. I love it. I love the fact that
it's just cheeky humor. Like,
I will say they're going to be paparazzi that find their way there anyway, so they might as well just broadcast it for everyone.
That's a terrible train of logic.
That's a terrible train of logic. I'm on Team Vanetta for that. I think it should be a private event.
Anyway, something that is public though is this morning's show. We got a lot coming at you. I am tickled pink to be with
the number is in like 13 minutes, so we'll pause at 7.
Yeah, we're cranking and rocking and rolling already. But at the top of the 8 o'clock hour, we got Jamal in the house for the weekend stocks hanging in the balance. He's going to recap everything from some big tech earnings that we had this week to probably the number that came out. That's going to be at 8 o'clock. 8:40, one of my favorite segments, Fast Market. It's where viewers submit their own trade ideas. Liz and Jenny are going to do viewer submitted trades. Then 9 a.m. market measures, ETF correlation and options performance analysis. What?
Can you review that again? Can you say that again? Because what is it?
It's just a bunch of words put together. ETF correlation and options performance analysis.
Beautiful.
ETF core. I mean, you look right now. Nasdaq's up 122. The Dow's down 118. So that would be inversely correlated today.
We will see what that market measures reveals. That's at 9 o'clock. And then 9:20, my schedule just says Tasty Extra. Is this where you guys are debuting your TikTok dances? What was happening at 9:30?
Yes. So there is no Scott Sheridan today. So Jenny and I are going to go into a little bit of the Liz and Jenny show-esque type thing where we'll pop into Twitter. So if you have any tweets, put the hashtag LIZJNY. We'll manage our own position at that time too. So that's what's happening at 9 whatever today.
Oh, that's perfect. Well, Scott Sheridan is my favorite rich guy ever, and I believe he's at the U.S. Open. So I love that for him.
Yeah.
I think
he is living his best life. He is the best. I don't know, billionaire, mega millionaire, but he's the best rich guy we know.
Yeah. So anyway, hey, let's get this show on the road. Like Liz says, we got a number coming out. So get a couple stories in, then we'll pause for the number. Hit me with my daily dose. Let's go.
Our leading story, breaking news,
across the wire.
Leading story, top story, jump in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It is September the 5th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Woo!
So the S&P 500 hit a record yesterday at its close, but falling rates could bring relief. But beware the tale of two bond markets. We've been hitting you guys over the heads, me and Vecchio, with stories every day this week that September is historically bad for stocks. But now we're at like all-time highs. How are you guys assessing this market as we currently stand?
It is pretty interesting, and I do love listening to you and Vecchio saying that September is notoriously bad. However, August is supposed to be like a little bit on the choppy side too, and we were straight up in that one too.
Sure.
Yeah, we'll see. I think people have just kind of scaled back vols low, so that's helpful. It's helpful when vols low and markets at all-time highs because people scale back. So if we get a down move, people don't have too much risk on. That's kind of what I think is going on with tasty traders.
Are you guys doing anything in bonds? I know bonds have been kind of all over the place, but
I mean, at 115, they're 115.15 right now.
so they're holding there. Okay, good.
So we would get long when it dropped down into the 113 handle. Now at this level, we have nothing on it. I'm going to watch if it drops back down this morning. We'll get long again, but right now we have nothing. Just kind of waiting to see what it does.
Yeah, and I mean, these should move on the numbers. And it was funny listening to the macro boys last night because they have two different views on it, right? So, I mean, all eyes are going to be on bond, gold, and stocks. Bond, gold, and silver. I'm going to put those together in stocks because,
Sure.
and with the number that's coming out, there was two differing opinions on which way it's going to go depending on what comes out. So, all eyes will be on those.
We will find out, like you said, the employment situation due out in about 9 minutes, and the Fed meeting less than 2 weeks from today. So lots happening. The August jobs report is expected to show further softness growing in the U.S. labor market as Fed rate cuts near. Private ADP numbers came out yesterday, softening the market in early morning action, and then the market just got strong and went straight up. So it was funny because I actually clipped a segment from Market Measures to put on social media, and Tom and Bat are like, "Oh yeah, we're down on the day." They're like, "As foretold." And then by the time I posted it, we were up like 55.
As foretold. I love it.
I was like, oops. But what is the expected move in the markets today? Can you ladies tell me that?
Oh, I can tell you. Hang on one second.
If you're taking a look at, you want to look at SPY or SPX? What are you looking at, Jenny? Or SPOOs?
I was just going to look at SPX.
Okay.
So SPX daily expected move. Sorry, Vanessa, it's taking me.
No, you're good.
$37.
Oh, Liz beat me to it. Yeah.
I have three computers up. $37 for the day. So, I mean, you got to cut that in half if you're looking at E-mini S&Ps will be wrapped around there as well. E-mini S&Ps are, like the SPOOs, are going to be $36. So, I mean, that's a big move for today, for one day.
What are you in, Liz? Because I'm just curious because mine says 38.38. So I was just curious what you're in that says 37.
I'm in the SPOOs right now, 36.18.
Oh, so you're in, yeah. So I was just glancing at SPX. So you're in
SPX 38.38, but it wasn't a second ago. It was 37 when I looked at it the first time.
Okay.
Constantly moving.
It's moving around. Markets move.
Moves with volatility.
The SEC has unveiled a new agenda. They have unveiled their rulemaking agenda for upcoming months, and you could see broad proposals to revamp cryptocurrency regulations and reduce rules Wall Street has decried as being overly burdensome. The SEC formally outlined yesterday several of their initiatives to overhaul cryptocurrency policies. Of course, I was like, are there any crypto policies that are still left? But I guess there are. So those are going away now too, but I didn't know what you ladies were doing with your crypto or ETH or anything in the digital asset realm.
I mean, I hesitate to say this. They caught a little bit of a bid last night into today, both Ethereum and Bitcoin. But I mean, so I don't know, and I want to see what's happening today because they were down yesterday. So cryptos were down a little bit yesterday, and sometimes they're the precursor to what the market's going to do. I mean, I'm making that up because it's still so early, but it's kind of like they're kind of moving in tandem with one another. So they're catching a little bit of a bid today, but with the market.
Bitcoin's almost 113. It's almost 113. And yesterday, how low did we see it? 109? 111?
111.
So it's moving. Hopefully, I mean, we would love a bigger move up in Bitcoin, but
with the regulations off, maybe it'll start to take its wings up again. I mean, Bitcoin went as high as in the 120s, so it's fallen from grace since then, but.
Yeah.
Ethereum's up a little too. It's like 44.49. So
do you guys trade like Coinbase at all or Circle or And
I got back into Circle yesterday because Circle had taken a hit. I got back into Circle just yesterday.
okay.
So, and that's up. That's not. No, it's not. It's really not moving today. It's at 117. I mean, it's up like 20 cents.
So in the show account, we step out, we avoid actually the actual coins and do more proxies, your circles, your IBITs, your things of that nature. So because we use the options wrapped around them instead of just going out and buying Bitcoin or buying Ethereum in this account.
That
Now,
makes
we
sense.
don't have anything in Circle in our show account because it uses quite a bit of buying power.
Okay. Getting to some of the big earnings before the number comes out. Broadcom sees strong AI growth for fiscal 2026, and then they hinted that they're going to have a $10 billion transaction from a mysterious customer. I was like, ooh, I love the mystery. They're like, ooh, a new bombshell has entered the villa. But Broadcom expects AI revenue growth for fiscal 2026 to improve significantly. And like I said, they secured a $10 billion in AI infrastructure order. What did you guys do in Broadcom, and what are you seeing in Broadcom this morning?
So I actually am long Broadcom in mine, but Broadcom's trading $3.45 and
it's up $40.
Yeah, it's up $40. That's up big, and on the heels of that news, Nvidia's taken a hit because I guess Broadcom might be dipping a toe into the Nvidia's water.
Well, and so now we didn't have to wait very long to find out what the surprise was. The surprise is that mysterious $10 billion customer, it's OpenAI. So that's OpenAI, go into the next slide. So OpenAI is going to start mass producing their own chips with Broadcom starting next year. Of course, seismic ripples going now through the chip industry. Like you said, Nvidia's down. I'm sure AMD is also not doing good. I check on SMH. But OpenAI is going to produce their first AI chip next year in partnership with Broadcom. And the news is developing because it kind of got teased, and then we figured it out last night.
Good job. The surprise guest is OpenAI.
It's OpenAI. Like, who else has $10 billion? It's OpenAI.
Well, and I don't want to step on your toes, but who else has $10 billion? Did you have the Elon Musk news in there?
No, I don't.
Oh, this morning it was breaking news. Tesla said they're putting together a $1 billion package for Elon.
For what?
I don't know. That's what I said. I was hoping.
So Tesla's up. Tesla's up
on the news. They said they're going to give. They put a package together for Elon Musk. They're going to give him $1 trillion. Did I say billion? I mean,
yeah, you said 1 billion, and I was like, yeah, okay.
No. Like I'm saying, it was like insane. Like whatever the package they put together for him was insane.
Pretty sure the Delaware Chancery Court is going to be like, no.
I know, right? But so it has to hit certain milestones. If Tesla hits milestones, and that's why Tesla.
That's why they got a package for him to leave. Like, here you go.
No, it's for him to stay, an incentive. And that's why I was hoping Vanetta was going to give me more sugar on this because I only heard it.
No. Well, maybe you guys give me insight on this.
Yeah, 1 trillion. Thank you, Harvey. I saw it in there. 1 trillion up to one with a T, not a B.
Lululemon shares plunge. Its earnings guidance falls well short of estimates. The company said the effect of tariffs and the removal of the de minimis exception are hitting its sales. Stock down $40.
I know, it's crazy. It's crazy, down to 166. Thank goodness. We didn't play it, Vanetta, because we were saying like all the girls now are wearing other things. In high school, they're all wearing this ALO, or you don't see Lulu as much as you used to.
Sure.
Well, now at least now it's back in the stratosphere where a pair of pants is the same price as the stock. Because before, when Lulu's in like the 500s, I was like, this is insane. A pair of pants is $175. If the stock price is over the pair of pants price, things have gone horribly wrong.
Honestly, with Lulu down to 165, now it's a player again. Now we can get back in selling naked puts in there. We could afford it. We couldn't afford it before.
Yeah, true.
And to all of the people that Dr. Jim took down with his Lulu trade, you may be entitled to compensation. No, I'm just kidding.
I was laughing because I was watching Nick and Mike, and they did a great show on Last Call, and they were a tale of two cities. Nikki was bearish, and I think Mike was bullish. So
yeah, we'll see what happens. I mean, but this is a massive move. So all joking aside, like just be very careful. You know,
1 minute until the.
I know. Hold.
Like 350.
Spoos are up 3 right now. We can wait until the number comes out. Spoos up 3. It's like a tale of two cities. Everything's pretty unchanged.
I don't know. We'll see. Just real fast, sneak this out. DocuSign reported their numbers. Stock soared. Stock was up a lot. I know you probably don't trade DocuSign.
We just took off a trade in DocuSign yesterday.
I mean, so it's up quite a bit. It went from 76 to up to 82.
That's a lot.
Yeah.
for signing some documents. Good job, DocuSign.
I do like DocuSign though.
I do too. I love it. I was like, what a great company. This is awesome.
It is.
So
yeah, big move for DocuSign. We had a position. We had a position we were struggling with, Vanetta, and yesterday we just closed it and kind of washed our hands of it because it dropped so much, and now it's roared. It's kind of had its roaring move back up again, and but we're out.
And the number must be out because SPOOs just turned red.
Oh, SPOOs are down 7. So they moved 10 points. They went from up 3 to down 7. Nothing crazy.
Well, they're still moving right now, so I don't know. They're just digesting it, but it's not skyrocketing. And I know they were pricing in what they were saying at the 25 point move. I wonder if this number will change that in the CME Fed Watch. Let me look real quick while you guys are talking.
Oh, well, yeah. But you said
economists expected the U.S. economy to add 75,000 jobs. Yeah. And the unemployment rate is expected to have risen 4.3%. I don't have the actual numbers out just yet, but
I don't know either.
And now we're back to just an unchanged.
Yeah.
So it doesn't look, kind of right now looks like a nothing burger, but
yeah. So they just it used to, not that this is a big number, but yesterday it was 97% chance of a quarter cut. Now it's 99.1.
I like those odds.
And the bonds have ticked up slightly. They went from 115.15 to 115.20. So nothing really, no opportunity there for the bonds didn't drop for anyone to have the opportunity to try to get long again. Because I doubt people are still long here.
Yeah, I know what you mean at the 115 level. Bonds up, gold's up, stocks up. Bonds up, gold's up, stocks up. So you got the trifecta. Congratulations on your wealth, America.
Yeah, everything's up except the Dow. What is taking down the Dow? I don't know.
I don't know what is taking down the Dow.
Maybe Salesforce still from yesterday.
Could be. It could be. And then also keep in mind we got the jobs report and we also got non-farm payrolls. So just there's a hodgepodge of news that are coming out right now.
All the stuff. Hey, well, if you are one of the people who is looking for a job and you are reflected in the employment report this morning, OpenAI could be coming to your rescue. OpenAI is announcing an AI-powered hiring platform that looks to take on LinkedIn. Oh, no. I mean, it makes sense. They want to use AI to help find the perfect matches between what companies need and what workers can offer. It seems like a synergy with stuff that they're already doing. What are your thoughts, though, of more AI coming into the job seeking process?
Well, I think LinkedIn needs some competition because I don't know anybody that's competing against LinkedIn. So I'm open to it.
No, I think it's good. Logan's in a class right now. He's a senior. He's about to graduate in May, and he's in an AI class in college right now. And I think it's good. I think all the college kids should take an AI class.
Sure.
But Vanetta, what do you think of the new IPO Figma? Because have you looked into that product at all?
I have not. No.
Okay. So I was just looking into it a little bit, which it looks cool too. Also, using AI to do things. I
know Adobe wanted to buy them. Yeah.
Yeah. So I looked into it. It looked pretty cool. I got long it yesterday thinking the actual product itself looks cool.
Okay. Well, you got it on sale.
I'm all for AI. I'm all for AI. Now, do you think AI is going to take over, like all these kids going to school for like, marketing or do you think AI is going to take over a lot of those jobs?
No, I think they're just going to change. I think it's kind of like the jobs are still going to be there, but you have to be able to adapt and weave, just like us on the trading floor. Like, so all those traders are gone, but now there's millions of other traders, right? So the jobs aren't gone, they just morph. That's my opinion.
Mm-hmm.
Yeah, I nobody knows. I mean, we integrate AI to some of our processes for doing things, but I mean, I don't.
I say my favorite AI that we've got is after the show so Dr. Data put together that whole AI thing so you can get the transcripts and things after each show. And after you press the button, you get a cartoon figure of Dr. Data like this. That's my favorite thing that I've seen in AI.
But it has been a game changer. It's nice. It's nice doing the titles and summaries of all the segments instead of someone actually writing them.
Yeah.
You can't trade OpenAI, but you can trade Microsoft. Not sure what Microsoft is doing this morning.
Let's take a look at Mr. Softy.
I wish you could trade OpenAI. It's annoying that the only way to do it is through Microsoft.
Microsoft is up, but slightly. It's trading 509. It closed at 507 yesterday. So it could be up on the lift of the market too. I don't know that getting a
Sure.
lift from OpenAI.
It's up 15, so we are seeing quite a rally.
Okay, pretty good.
Yeah.
Hey, here's something interesting. Honeywell, I know them because they make thermostats. Well, now they're a quantum computing stock. What? Honeywell International could get some more street cred after Nvidia's venture capital arm joined a group investing in the industrial giant's quantum computing business. The company has a $135 billion market cap, so quantum computing is just a relative blip on the radar for the company. But the capital raise is nothing to sneeze at. Honeywell's Quantinium business is at a $10 billion pre-money equity valuation, and I just found out that it existed yesterday.
Well, that's good. They've been keeping it under the radar because that's crazy. I did not know that.
Yeah, HON. You can trade Honeywell, obviously, but again, I thought they made thermostats.
Liz, you'll be happy to know that Honeywell is very close to 217. And whenever a stock is 217, Vanetta, Liz will
It's
throw.
Liz. Yeah, that's Liz's magic number.
Yeah.
It's on a calculator. You can write "Hello, Liz" on a calculator and turn it.
Hey, you can also write boobs on a calculator, but here we are.
And Vanetta, so you're about our age, and the reason 217 is my favorite number is, did you have a pager? Please tell me you had a pager.
I did not have no. I've never had a
In the
pager.
time, this is before cell phones, people would have pagers, and if I did have a nefarious boyfriend at the time, and I could send him just 217, that meant he had to call me.
Wow.
I see Vanetta's a little younger than us. So she the pager thing was at the very end of us.
Very
Yeah, I don't, and probably, and also too, my dad would probably be like, "What you need a pager for? You ain't a doctor."
No, I didn't have the pager. I didn't have the pager, but my boyfriend did, and so all I had to do was hit the number and say 217, and he knew then he had to call my cell phone number. Those are.
I'm just saying, my parents were not going to buy me a pager, but I was, but I legitimately, I never had one. So
I will tell you, this is probably the FX boys are probably going crazy because the dollar's getting smacked right now. So that is. The FX markets are going wild, is my guess.
Okay. Well, somebody get Glenn on the phone.
Call Glenn. Get Glenn in here. What do they call him? G-Dog? G-Money?
Yeah, G-Money. Hey, little meme stock action. Colt stock Open Door has now hit a 3-year high. Little meme stock action. Open shares up around 16%, registered their highest close since August 15th, 2022. The noted bull, Eric Jackson, continued to champion the stock. Okay, I guess.
Hold the phone. OpenAI. In an ironic turn of events, I have OpenAI in my IRA because it was the cheap stock, and it's in there.
It's not OpenAI. It's Open Door.
Open Door.
The symbol OPEN.
Which I think people just think it's OpenAI.
It's $6.32 stock. It went from $5.97 to $6.32. But I'm telling you, I'll take it.
It's massive.
And I feel like Tony was talking about this once, so we all bought it. I remember Tony talking about this on air.
It's turned into meme-like stock, but I mean, yes. I bought it at 15. It's now 6.
I mean, it's cheap enough that you could do stuff in there without some serious consequences. So yeah. We'll see. Hey, Amazon stock popped yesterday when the market was down. Amazon and Meta were the two kind of leaders yesterday. Then the whole market just went green. But Amazon stock popped yesterday after their Starlink-like product, Project Kuiper, landed a deal to provide internet service on JetBlue Airlines. Amazon stock gained 4% yesterday afternoon after the company announced the partnership. JetBlue stock fell 6%.
Amazon went from like 225 up to now it's 235.
Yeah.
So.
And Meta had a big pop yesterday too. I know you kind of said that on the heels, but did that have to do with Amazon?
No. They finally brought the Instagram app to the iPad.
Really?
Yeah, 15 years.
That's why it popped?
No, I don't know why it popped.
Oh, I was like, whoa.
I don't know why.
And JetBlue is only $5. Now JetBlue, was that the company that one day was supposed to buy Spirit Airlines? Who was supposed to buy Spirit Airlines and that fell through? Was that JetBlue?
Yeah.
Yeah, I don't know. There's been so many mergers. I know there was like Frontier was trying to get in there. I'd have to look. I have to go back to my notes and look. I
Yeah.
don't know off the top of my head.
Jenny loves Spirit Airlines.
No, I don't have it anymore. I'm all out.
Well, in other airlines news, Southwest announced free Wi-Fi for everyone months after taking away free checked bags. I consider Southwest just a regular airline now because all the things that made them Southwest are gone.
Yeah.
But it is at least something that's nice. You can now get, if you are a Rapid Rewards member, you can now get free Wi-Fi starting October 24th through a partnership with T-Mobile.
And their stock dropped yesterday.
Well, people are just mad at Southwest.
Yeah, people are mad at Southwest. I mean, now, yeah.
Well, but if you're mad in general, you're going to have less ways to get recompensated because the U.S. Is now dropping the Biden administration plan that would have required airlines to pay compensation for disrupted flights. Who does this benefit? The airline corporations. Who does this penalize? Consumers who have to sit on a tarmac for 6 hours with no air conditioning and the bathrooms don't work. And now you got nothing.
Yeah. That happened to my husband. That happened to my husband yesterday. He sat on the tarmac for 6 hours.
Yeah.
Oh, did he?
Yeah. Oh yeah.
Yeah.
In New
Really?
York, there was a bunch of storms. At least he got out. The guy behind him, who was actually going to California, did not get out.
Yeah.
So I don't know if you remember this over the summer. Lily was dancing in New York, and when we were trying to come home from New York, our flights were all getting canceled, and I didn't even realize this because. So our Southwest flight got canceled, but then I switched and rebooked on United, and I never realized this. But then I had a nice voucher. Southwest emailed both of us a nice voucher, so I was surprised they did that because they didn't have to.
Yeah. Well, now they really don't have to.
Yeah, they refunded our flight and sent us a voucher.
Yeah. Well, we'll see what happens. But this is it's just worse for consumers all around. So good job, everybody. Hey, but Waymo is going to begin testing at the San Jose airport. Do you know the way to San Jose? That's okay. Waymo does because the self-driving car is going to pick you up at the airport. They're going to start testing at the San Jose Maneta International Airport. In 2023, Waymo launched at the Phoenix Sky Harbor International Airport, which has become the most popular Waymo destination in the Phoenix service area. So there you go.
So, does anybody know this? Is there a set, like, let's say the speed limit's 55, can Waymos go 65, or are they set to the speed limit?
I think they're set to the speed limit.
I don't know. Your questions are
I can't imagine them being like, the speed limit's 55. We can go 70. No, like,
Because, if you're on a certain expressway and everyone's going 10 over and Liz, this bothers you with the slow car, you always think.
I think they're only allowed to take like city street. Like, I don't know that they're allowed to get on the freeway.
Jenny, the slow car is going under the speed limit.
Yeah.
Oh, if I were on the expressway, so around Chicago, I don't know if people know this, but I drive in, it's called the Dan Ryan. And there's like, I don't know what, there are other names for the Dan Ryan, but people literally go like 90 in a 55. So if the little Waymo's going 55 and everyone's going 90 around it.
Jenny,
Dan
again,
Ryan,
I'm going to hold your
70.
hand when I tell you this. Waymos, they're not allowed on the freeway. They're only on city streets. We don't even have Waymos here in Chicago. It's going to be okay, Jenny. Hey, just real fast, because I don't want to step on too much of Jamal's time. This is interesting. Gap, which owns Old Navy, says that they are going to offer beauty products this year. What? Gap announced they're expanding into beauty, starting with their Old Navy brand, making a strategic shift. Gap, what are you doing in Gap?
Well, isn't it GPS? I searched GPS, it doesn't come up.
It's Gap now. They changed their ticker. It's Gap.
Oh, okay.
Gap. I'm glad it's Gap. GPS was dumb.
Yeah, that was weird. It made me think of Garmin.
Like Gap stores, right?
Right,
Now,
yeah. Yeah.
So Old Navy in their checkout line always had other brands of makeup. Why not carry their own?
Yeah, there you go. There you go. Hey, Costco's monthly sales are on a roll. Thanks to a surge in online orders, Costco same-store sales rose more than 6% in August. Actually, they rose nearly 9%. And then August sales rose 9%. Same-store sales were up 6%. So good job. Costco reported net sales of $21.56 billion just for the month of August. I'm responsible for half of that.
I'm responsible for the other half. Costco is trading $9.57. Will it break that 1,000 mark?
Will it split?
Oh, yeah, I believe so. I think it's a split candidate, but what do I know?
I
don't
wish
know
it would
anything.
split. It's been on a little run this week, on from about 9:35 up to 9:55. So,
I just think the
Aw.
hot dogs are still only $1.50.
oh
I
my,
know. Well, some good news. There was no winner in the Powerball jackpot
Wait,
and
the other one's tonight, right? So there's no winner.
Saturday, tomorrow. I believe it's Saturday. So the jackpot has grown to $1.7 billion. It's the third largest in U.S. total lottery history. That's crazy. A lot of people, though, did win, some $1 million prizes. But yes, the next drawing
I'll
is
have you
tomorrow
know
night.
that I got an email saying you won the lottery because I do it online, and I was so excited. I opened it up. $4. $4.
yeah, Liz
She
has
doesn't buy
subscription.
Starbucks.
She has a subscription, Vanetta. She has a subscription to the lottery.
I do.
Liz, no.
I do. No. It's actually kind of fun. It's so I'm always in the Powerball, and it's like all my kids' numbers. It's once. What is this? Once every 3 days. It's $2 or whatever. So
Yeah.
we do it. I do it every year because then I never have to go in and play it. So with the 1.7 billion, when I open it up and it says you won the lottery, and I'll get emails probably a couple times a year being like, congratulations, you won the lottery. They don't tell you didn't win the big one. Then you got to go into your account and see what you won.
Well, that's just good marketing. That's
It is good marketing. It's very
Hey,
good.
well, good luck to everyone involved, but this is kind of crazy. 59-year-old Mike Tyson is now set to fight 48-year-old Floyd Mayweather in
But
the
at least
spring.
he's fighting somebody who's a little older than, what was that kid's name?
Oh, Jake Paul.
Yes.
Ryan, Logan Paul. I'm not sure which Paul it was.
Paul it was, but I was like, you got to be kidding me.
I was like, don't write me.
Fighting
Also,
a
I
trans-
still haven't recovered from seeing Mike Tyson's ass.
Oh, no kidding.
I'm
And
still scarred.
How old is he?
Mike Tyson is 59, and then Floyd Mayweather is 48.
I mean, that's at least in their same realm. Jake Paul's what, like 23 or whatever?
Right,
Paul
yeah,
is,
sure,
like 23.
sure.
That doesn't make any sense.
Sure. Well, two of the greatest boxers of all time have agreed to fight. The match will be put on by CSI Sports and is currently scheduled for sometime in the spring of 2026. Whether it will be on the lawn of the White House is TBD. But we are going to get these two dudes to fight. I don't know. I don't care.
The lawn of the White House.
No, well, they're going to have a UFC fight on the lawn of the White House next. You did not know? Yeah. So I think everything's just up for grabs. That's where we are now.
Like, if you didn't know that, I would think that was a bit you were doing. But it's
Right?
not.
No, everything is real.
Yeah. Oh my gosh. So funny.
Anyway, finally today for my viral video of the day, because I got you guys. You guys are two busy moms, but we were getting into fall, and I love like the fall baking and cooking season, because let's be real, summer, it's too hot to turn your oven on. It's too hot. So I love my air fryer. But this recipe is going viral because, one, it's very easy to make, and two, you can get everything you need at Trader Joe's. Ooh, little segment I like to call Will Tom Eat It? Watch this.
Ever a viral Trader Joe's recipe? I'm in my car so fast, and this dumpling bake worth every red light I ran to get there. Shh. With pot stickers, coconut curry sauce, and just one dish to wash, she's giving weeknight hero energy. Whisk together soyaki, red curry sauce, coconut milk, garlic, and water. Drown your frozen dumplings in it, cover and bake until they're golden and cozy. Top with cilantro, green onions, maybe a little chili crunch if you're extra, which if you follow me, you probably are. It's creamy, a little bougie, and way too easy. Follow for more easy, healthy-ish recipes that keep you fed before the soccer run or whatever chaos your night holds. If there's...
What do you think of that, Liz?
I think it looks delicious, but I like dumplings.
I don't like coconut, so but
I love coconut.
You
I
wouldn't taste it. It's more like the curry. It's just like the red curry. Like if you like Thai curries, but if you don't like coconut, then yeah.
I mean, it looked pretty. It looked pretty.
You gotta know. You gotta know. I'll eat anything. Like I'm like Mikey. Like I'll eat anything.
I will say for fall, I'm super excited about this. And Liz, this is right up your alley. You'll like this. Because we're gone so much. So I'm away like 3 weekends in a row, and between Germany and parents weekend at college, and I'm gone for the end of September. I hired someone for $300. She's going to come and transform my porch from summer to fall. Pumpkin.
Oh, I've seen those. That's great.
Yes,
What
I
a
saw
great
her
job.
She advertised on Facebook. I messaged her right away, and I'm already on her calendar. I'm going to come home from Germany and my house is going to look like fall.
That's amazing.
I love that for you. I think
I love that. I love that for you too.
Hey, we're going to take a very quick break. And when we come back, the lovely ladies are answering your questions on a little segment we like to call Confirm and Send. You're watching Tasty Live.
Another happy weekend. We'll see you.
Happy weekend.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Jenny, we are back and we are running a little bit behind schedule. So do you want to jump right into Confirm and Send?
Let's jump right in. Let's fire him up, John. First question. Let's see what we have today.
Confirm and Send. There we go.
Okay. Friday, September 5th, Lily's birthday.
I can't believe it's Lily's birthday already. Okay. I've heard it mentioned on the show that it's okay to roll for a debit. I don't understand the thinking behind this. Can you please explain?
Okay, so you have to pay attention to what kind of extrinsic value you're getting. If you have something that's deep in the money and you want to be getting more extrinsic value, let's say your put is a 75 put and the stock is trading $60 and rolling to the 75 put is not giving you any extrinsic value, then you're going to have to roll for a debit. You're going to almost have to. I mean, sometimes losing positions, you have no choice than to roll for a debit.
But naked options to naked options, you should always either be getting a small credit. Naked options. It's kind of if you have a spread. It's a spread that you'll roll for a debit.
No, it's like
time out, and you mean out in time? So if I'm rolling 75 to 75 to 75, it should be at least 1 penny credit. It doesn't matter if it's out in time.
But I'm just saying, if something's so far in the money that there's no extrinsic value left, yes, if you roll from September to October, you'll get 20 cents, or there might be barely any. But if you actually want like an actual chunk of extrinsic value,
then you're rolling for a debit.
You gotta move your strike, and you're actually rolling for a debit. So.
And so keep in mind, sometimes it's easier, and Jenny and I have a tendency to dive deep into these. So if you're doing naked option and rolling for a debit, and you're rolling down and out, you're rolling for a debit. Sometimes it's easier if you close a position and reestablish, because then you can see exactly what you're doing instead of rolling for that debit. Because if you're rolling from the 75 to the 70 and you're paying $2 to do it, that you're getting extrinsic value on the one that's beneath, but you're paying a debit to roll it.
And so for the two of us, we rarely have short calls. So we're mostly dealing with short puts. And if we're dealing with short puts that are deep in the money, when they become so deep in the money that we can't get any extrinsic value, we usually change that position and we might roll and move the put down. Maybe we'll add on another out of the money put. That's typically how we do that. But yeah, sometimes you're forced to roll for a debit if you want to move your strike.
Yes, but they just wanted to know like how it works, and it does just kind of understand what's happening when you do it. And to Jenny's point, which I think is excellent, keep an eye on your extrinsic value.
And we always want to improve basis, and we know if we're paying a debit, we're not improving basis. But sometimes it's just like a long game. If something turns into a big loser, there's a longer game of trying to make your money back.
That's correct. Okay, number 2.
Okay, let me take a look at this. One of the mechanics for tasty traders is trying to maintain theta of around 0.1% to 0.3%. What I've noticed in my account is that my theta number varies even if I don't make any adjustments as we get closer to expiration. My theta will typically increase. My question is, does that theta target hold as a constant, or is that 0.1 to 0.3% range where I want to be at the beginning of an expiration cycle, because it'll likely get bigger with time?
Yes. The answer to that is yes. It is at order entry, because as you get nearer to expiration, that theta number gets higher and higher and higher and higher.
And honestly, like if you're playing the 0 DTEs, you kind of have to throw that out the window. Like that whole 0.1 to 0.3% is when we're, trading 45-day options, and then you'll see your theta get bigger as we get closer to expiration. But then when you roll, it gets adjusted. But if you're trading the weeklies and 0 DTEs, that number is not the same.
Well, and we always joke saying if you want a higher theta number, throw in, you want an earnings, like if you have an earnings trade in where you're selling a strangle in the one that's in the weekly, your theta numbers are going to go up like crazy. We know how to get the theta numbers up. Understand that is for your durational trades. And I'm glad.
Right. So if you remove your theta of your, 0 DTEs and your short-term weekly trades, and then look at your theta, that can give you a better gauge.
And it does. So if you put it on at 45 days and at 21 days, the theta will be different. But I think the theta number that you're looking for is kind of put in it at portfolio entrance.
And we have no studies on, like, if you're trading 0 DTEs, this should be your theta, because I think
you have to take all the rules and throw them out the window with the 0 DTEs.
Yeah.
Yeah. Okay.
Which our thetas are always huge now. My theta is always huge now because I'm playing a lot more 0 DTEs and weeklies.
And we almost fell off our chair the one time we were on the road. This is before 0 DTE options. And some guy comes up to us. He's like, I got my theta numbers this high. And we were like, whoa.
It was crazy. So like the higher your theta, the more risk you have on. But then that's not necessarily true if you've got super high theta due to the 0 DTEs.
Correct.
Okay. Just understand your risk. Realize your risk in the trades. I focus more on my risk than my theta.
And so I always said the Greeks are, and so theta's a Greek we look at, but it's got to be in conjunction with everything else.
Yeah.
They're just, and they're theoretical numbers, and they will change. Okay. Number 3. Is this number 3 or number 2? I can't see them around it.
It's 3.
All
right. Do you ever layer in multiple 0 DTE trades? For example, I put one on yesterday using an at the money straddle with wings $20 wide. I collected $15. The trade then moved against me, so I put on another new trade, same strategy, different strikes. Is there anything wrong with this?
So the answer to your first question is yes, I do it. And the answer to the second question is no, there's nothing wrong with it. That's right, because I do it all the time. I'll put on 0 DTE and I'll layer multiple different strategies on top of it. Because a lot of times with those, there is no management. So I'm not trying to overmanage something that I originally put on. I'm just going to put something else on.
I mean, this could have been from Jack Tucker or Eric or any of our SPX 0 DTE traders, because you'll see when they post their trades, they'll have a tranche here and a tranche here, and there are different sets of strikes as time passes.
Yep, and a tranche here, and a tranche here, and a tranche here. And you'll see the blue wackadoo Eric. It was just like trade after trade after trade after trade. And they're transparent with it. So it is, I think with those 0 DTEs, I have no problem layering into them.
All right. We're flying through these. We're catching up.
1 minute. Are there any underlyings you don't, this is funny. Are there any underlyings you don't trade even if they are liquid? I've had some bad luck with a couple specific stocks and wondering if it just makes sense to stay away from them, or am I just being paranoid?
There are stocks that, and Tom said this the other day, like, I can't remember what it was, but he looked at his P&L, and his P&L, no matter what he does, is like negative in it. Then why keep trading it? Why keep battling it? So if you've got stocks that have got your number and you just don't do well with them, don't trade them.
I've got stocks. I'm guilty as charged. I have stocks that have my number and I've written them off. And the weird part is Jenny loves those stocks, right? So there's certain stocks I hate that you love, and there's certain stocks you love that I hate that have my number. And so absolutely, if there's something that just has your number and you can't get away from losses in it, there's nothing wrong with staying away from it.
It's funny because sometimes I'll be like, oh, Intel, and then Liz gets so mad. She gets so mad. She hates trading Intel.
I hate it. It's like the dumbest stock ever.
And you saw in our show account, we got so annoyed with our DocuSign yesterday.
Yeah.
But what are you going to do?
Yeah, we have sworn off stocks, and then just like taking the mind eraser shot, they'll be back.
We'll be back in. We'll be back in. All right, next slide, please, John. Do you ever use AI to try to find good trade opportunities?
I do not. So that is a very simple question for me. Now, I've seen it all over, and I've heard the ads like use AI, don't think, just do. All those ads that are floating around. I don't look at AI for trading opportunities. I mean, I will trade AI stocks, but I'm not using AI to be like, tell me what is the best stock.
Right. No, I don't either. But again, I don't know. Maybe some people do. I've never tried. Maybe I'll try after the show and ask AI, give me some good stock tips. I'll see what it says.
Are you a good stock picker? Can I have one? Right. So, I mean, I know there are lots of people that do that. And I do think that a lot of and this is what I tell even, like my son and other people, I don't care how you find your direction. If you learn about options, you can overlay a strategy. It's more about because AI is going to pick a direction, right? They're not going to give you a good complex options trading strategy. So if you get your direction from somewhere else, it's the strategy that could work.
Right. So, and I don't mind when people say, and that's why I often listen to Tim Knight, get some ideas from him, and then find my own strategy.
Right. You're not just out there going and so I know Tim Knight, if he's short, he'll buy puts, and if he's long, he'll buy calls. And so that's great. But Jenny and I both know that if somebody gives a direction, we can overlay something where you can be bullish. You can kind of do something neutral and make your own trade wrapped around it. So.
Okay. I think there's one more. Maybe there's a couple. Sometimes I'll hear you say you won't trade the stock because it's not liquid. How do you determine what liquid means?
So it's funny because I look at liquidity as the width of the options market. And I know that's not, some people look at the width of the stock, bid ask of the stock. I look at, if I'm opening up, because I'm a derivatives trader, I'm an options trader. If I open it up and the options markets wrapped around the at the monies are wide, that's when I say it's illiquid.
And I know people will write in about certain stocks. And even that new Figma, I think Tom and Tony's show, they said all these markets are too wide. But I still got into it. I think what you have to realize, if you've got wider markets, like 15 cents wide or 20 cents wide, or even 30 cents wide, if you have wider markets, and you get into a trade, you can be giving up a lot getting out. For so long, I was trading Birkenstocks, and then I was giving up too much, like rolling each cycle, that I stopped trading Birkenstocks because those markets never got tight enough. So if you're giving up a nickel or 10 cents every time you roll, it gets annoying, and that's the problem with illiquid products, where the markets aren't tight and you're giving something up every time you're getting in or out.
Yeah, and to your point, if you wanted to get in Figma, it doesn't matter how liquid or illiquid it is. But if you're just doing it to put a high probability trade on and not care what the stock is, then you want it liquid, right?
Right. Yeah. And again, it's kind of like the common sense slide. There's a give up. And if you want to get long a product, we always say you're better off just selling selling puts to start. And if you're okay, eventually, if the stock goes down, you get long it. That's fine. But there's a give up. And then if the market goes crazy and we get a big move, that's when those liquid products become almost impossible to trade because the market's become so wide.
Yeah, it's true. They do become crazy. All right, do we have one more, or are we done?
That's it.
All right.
We did it. Time to bring in Jamal.
Well, we're going to take a quick break, and then when we get back, we'll have This Week in Stocks with Jamal. I'm very excited. We'll be back in 90 seconds.
Stay tuned.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. Welcome to This Week in Stocks with my friend and yours, Mr. Jamal Chandler. How you doing, Jamal?
How you doing, ladies? What's going on?
Not too much, not too much. What are you doing this weekend?
This weekend, I guess, let me see. Saturday, my kid has a football game. That's second game. He was a monster in the first game. I'm not saying that
He's
because
gonna
he's a
run
kid.
through everyone. Is he playing up or is he playing people his own age?
He's playing 12U, 12U, and he just turned 13 last week.
Like your hat
So
down because he runs through everybody.
nah, he can't. Well, that's so the best part about it, and the worst part about it is that the worst part is that he can't really like run the ball because he's
Oh,
so
because he's
big.
got
So
a stripe. Is he a stripe?
yeah, he's a striper. He's a striper. But the best part about it is that I give him full power to tee off on defense, and he did last week, dude. He had 2 tackles for loss. He had 4 deflected passes from the quarterback because the quarterback was so short, couldn't get it over him. He deflected like 4 passes. He blocked a punt. He had a pretty damn good game.
Oh, pretty good. That's amazing.
Yeah.
For those of you who are new to Tasty, Jamal's kids, he's a pretty big kid. Like I always said, he should play up 2 levels in every sport.
Yeah. So with basketball, he definitely does. He plays up like 2 levels in basketball, and he's going to try out for the basketball team this year. Hopefully that should go well. There's probably a slight chance he could play up there, but I don't think I would want him to. I think when you play on your team, I think it's better to play with like your friends,
I think it's good to play with your friends, but I will tell you, we've talked about this before. We had a real big kid. Growing up with JD, and he always played up 2 levels. He would in basketball, and I mean, he was then as a freshman, he was on varsity, and he was great. But he had to because kids his age just weren't even competition for him, so it almost brought his level down.
Yeah, absolutely. I think for sure with basketball you should, and I think by the time you get to school, you're going to play on the team, like maybe with friends, maybe sometimes a level up, right? When the team play, but in the summers and any other time, you should always play up. Football is a little different. I think it's good to play for him. I think it works to play with his friends because the level of physicality is going to jump up really quick in the next 2 years anyway. It doesn't matter if you're playing with your friends or not. Kids just get stronger. I mean, that's just kind of how it goes. But basketball, skill-wise, you can be better for multiple years with friends, I think, and that's why you should play up for sure.
Yeah, absolutely. Very cool.
What about you guys?
Probably
Weekend play?
fun. We missed those days of watching the kids play.
Yeah, I know. This is the last hurrah for me. It's gonna be done soon. You never know.
We might show up on the sidelines one day.
Lily was in a golf meet yesterday, so that was fun because I go in a spectator cart and you drive the course and follow them along and watch. So that is quite enjoyable. We never had anyone play golf before, but it's kind of fun.
Yeah, that is kind of fun.
That is pretty cool. Yeah, it is kind of fun. You want to talk about the week?
Sure.
All right, let's pull up some slides. Let's talk about the week. I mean, it really did feel like the week is hanging in balance, and it still could be. I know we just had a big number, but let's move to the first slide. So that was the thing of the week. We were basically waiting on this non-farm payroll, and it just came out, and it was a weaker number, showing further softness in the labor market. And look, I know it's counterintuitive. It is. I mean, trust me. But basically, we could see that the market was expecting a weak jobs market so that we could have more rate cuts from the Fed. We've already priced in a 25 basis point rate cut for the SEP meeting. Now it's going to be, you're going to start hearing people talk about it's time for a 50 basis point rate cut or at least, 3 rate cuts before the end of the year. I'm sure that's going to be the talk going forward, but the market so far is liking this. We'll see how the day ends up.
You did a great job yesterday on macro. Was it not macro money or the what's after your last call?
Overtime.
Overtime. That was good with the macro boys. That was pretty interesting. So, I mean, I like that you guys all 3 had different takes on this. So, are you on Team Ilya or Team Vecchio? So you think the market's going to turn bearish with this news eventually?
I could see how the market turns bearish with this news. I think it should be positive. You guys know how this macro stuff goes. This is actually one of the things that the market has been driving higher on. The labor market is weak. We already knew that that's the case. We've seen 3 different things this week that showed that's the case. And so the market's already been moving higher on that. But the truth be told, it's a bad thing if people are not having as many jobs in the labor market, right? Like, that's a bad thing. And it's always a situation where, the Fed wants to either cut. The Fed's job is to make sure that the unemployment rate isn't too terrible and we don't have too much inflation. And right now we're in the middle, right? And so they have to cut rates when one of those isn't working or move rates around when one of those isn't working. And so in this case, they're going to have to cut rates if the job market is struggling. So sooner or later, the general consensus is going to be like, well, this is not a good reason to cut rates. It just happens. You guys know how it is. This is one of the reasons why Tom hates when we talk about macro stuff.
I do like that segment, though. I do like it, and I think a lot of our viewers like it.
Yeah, I think it provides context. Everybody likes context to what's happening, right?
Well, what I like about our segment versus the macro stuff that you hear on other networks, and I'm not shaming other networks, but is the fact that like I watched yesterday and there were 3 different opinions. And it wasn't like everybody's like, well, macro, like you didn't all follow the same to be the same drum. To Tom's point, these are still just opinions, right? You're looking at macro stuff, but it's still just opinions. And I kind of like that.
I think what really differentiates us is not only do we provide those opinions, we tell you how we are going to trade those opinions, and I think that's the big thing, right? Gold is at all-time highs. I have the all-time high from yesterday's close, but I think we're even higher as of right now in pre-market.
36.39 right now.
Yeah, so this should be a good thing for gold. Should be a good thing for silver.
Yeah, silver. Somebody was saying silver's higher than gold. I don't have that up right now. Silver's like picking more wings under it than gold. Yeah, 1%. That's pretty big. Silver, gold, silver, gold. Burl Ives was right.
Burl Ives. Salesforce had earnings this week, and it's been struggling. It's one of the dogs of the Dow. It's the second worst performer, only in front of UNH. And there's talk of fears of AI eating away at software. Who knows if that's actually the case? Google popped big time this week. They avoid the breakup of the antitrust and the fact that they might have to divest Chrome was a worry, but that's gone. Apple ran on that too because Apple still gets to receive money from them being in the having them the preferred browser on the iPhone. And then VIX has kind of fallen off this week. We're reading below 15. If this bullishness continues, we'll see how low VIX goes today.
Yeah.
Are we just going to be in this, like, if the market just keeps grinding up and the VIX stays here, there's going to be a slow, just, I feel like Thanksgiving, Christmas, the whole rest of the year is going to be slow. I don't know.
I mean, so to kind of Vanetta's point and Vecchio's point that this month is typically one of the most volatile months of the year.
Do you guys like pay attention to that, like seasonal stuff?
I just like listening to it. I mean, I do enjoy a good Santa Claus rally. I mean, do I listen to it? Yes. But do I put any credence into it? No. Like, do I pare down my bullish positions or take positions off because of volatility? Or do I pull them down waiting for the volatility? Not really. It's just something, I feel like that's more retro than forward looking for me. I'm not like, okay, well, I'm going to do something. I might look back and be like, oh, they were right. It was a volatile month, but I don't change my positions because of it ever.
I kind of just rely on my memory of the past. And I think for so long we traded waiting for a down move, waiting for a down move, waiting for a down move. And we would get them infrequently. And I still remember the dates, like August 24th, we had that big down move, but the market rallied back by September expiration. And then I remember being at the zoo one day on September 12th, and we had a down move. And I remember calling Liz, like, I'm at the zoo, but look at the market. It's down. But then the market rallied back. So in our history of trading, we've had some down moves, but then we get these quick bounce backs. So I don't play for that anymore, Jamal, like I used to.
For those listening, Jenny's talking about August 24th, 2015. I remember that date very well. I lost a lot of money that day. I lost a lot of money that day. Let's move ahead to the next slide. I was trading on my own too. That day sucked.
Hurt. Yeah. You always remember the dates when it hurts.
Oh yeah, for sure. I got another memory later in later in the presentation I talked about. Gold, obviously, big performer on the year. I just thought it was interesting looking at gold, looking at SPX, SPOOs, whatever. TLT, long-term bonds, and the dollar. I mean, you can see what kind of year it's been for all 4 of these. Kind of fascinating.
Bonds are having a huge move right now. The bonds just hit across the 116 level.
No kidding. Oh, they're up big. Wow, I didn't check them.
And we all wait for a little, dip down so we could get back in. But I don't know. Do you know anyone who's still in now up at this level?
I mean, no tasty trader I know, because I think everybody that we know is like 13, 15, 13, 15, 13, 15, and bouncing in between. At the 16 handle, I'm out.
I know.
Yeah.
It's tough.
That's pretty amazing. I mean, yeah, I know. It was 113 early in the week, wasn't it? To start the week.
Yeah.
Right?
We'll always dip a toe in the water at 113, and then we get out at 115. So we were just kind of eating. I was hoping for a little bit of a pullback to get back in, but.
And like for those of you who trade TLT for like a smaller scale position, that's almost back to 90. It's over 88 now. So we haven't seen that level in a while. Mm-hmm.
I think. Oh no, I'll talk about this. Let's move to the next slide. Here. Here, yeah, here. Okay, so more steepening. I think it even moved higher today. I think I saw it was like 65 basis points. This is gonna run a little bit, right? Because 2 years are falling for the most part, especially if we're talking rate cuts, and then people are already trying to talk about 50 basis point rate cuts. This is gonna steepen more, and should be good for banks. It should be good for home builders. That's actually the area I want to put some trades on and going forward because I mean theoretically this should be good for those areas of the market.
So what would you be doing with this? Like, what would Jamal put on as a trade for this?
You know what's crazy? I've been on this zebra kick recently. I really have. And you guys, I know. Now I'm not sure if I'm doing them right, and by right I mean like in the right term. I'm actually going further out because look, when you do macro, the idea of macro, right? Like this is actually true. Banks borrow at the short end and they lend at the long end. When you're lending you a house, it's 30-year yield versus you giving them money in a CD at 2-year yield, right? So yeah, naturally, this is going to be good for banks. Bank automatically make money in that way. And so I want to be long banks, and so I want to get long a zebra. But I want to go out to like November, honestly, December, because
That's not too far. That's not too far. I've got some zebras
okay.
out in January.
Okay, exactly. I've just been on such a kick. You know how they go? Sometimes you just get on a kick for a strategy. Oh my God, I've just been.
They're amazing. And then do you ratchet them up too? So if you get the move you're looking for, you can just keep closing and reestablishing, and then you still have the unlimited profit potential and you have zero risk.
Yeah, exactly. I did that yesterday in a couple of long-term, and some in my long-term account. I did that yesterday. UNH was one of them. So I did UNH. I think I told you guys this. I did UNH a month ago, right? And that was, I had it at the 220, 230 strikes. It's upwards of 300 now. I just re-rolled it and moved it further out yesterday in a long-term account.
Yeah, that's awesome.
Let's move to the next slide. So yeah, to answer your question, I mean, I'm getting long deltas, and it's mostly through zebras. Is basically what I'm doing.
Sometimes if there's like news coming out or you don't want the that much risk on, I'll take my longer term, take them off, and then move it to a shorter term because they're much cheaper. You could, take in a big credit to move them longer term to shorter term, and that way, if there's an event coming up and you're worried about event risk, you've got less at risk by moving them a little shorter term, and then after the event, you could put them back out.
True. Yeah, very good point. You guys are down at the SIBO all the time. I was about to say every day. I know it's not every. It feels like every day at this point.
Tuesday and Wednesday, every Tuesday and Wednesday, live from the SIBO.
There it is. There it is. SPX zero DTE volume. I mean, it's just through the roof. It's up quite a bit year over year. It's about 70% or so year over year. I mean, this is a lot. Everybody's trading them clearly.
And you can see it. You can see the volume and the big volume that's going up. So when we're down there, we try to take a look at like the big trades, the unusual activity that's going through. And a lot of times most of it's in the zero DTs.
Right.
Yeah. I trade maybe one a week. I mean, I think that's the thing. Like, I don't feel the need to put a ton of capital towards there, right? I think we talk about 45-day window. We talk about where we sell a lot of volatility, but we also have some trades further out every now and again. I think you need to have your capital. You don't want to have too much capital in the front, right? And I know everybody probably sees this as like, oh, cool, this is where I should be at and all of that. But I think you just got to be, you got to have. I don't want to know the number, but it could be probably 5% of your capital in the near term in zero DT. You don't have too much there.
So I don't look at it as a percentage of it. I kind of agree with you. I don't have too much in there because no matter what, because it's cheaper to define your risk, the capital is never that much in the front month because no matter what I'm doing, I'm defining my risk because you can. It's cheaper too. So that's just it, is I don't look at it as a percentage. But I will tell you, these things are pretty enticing to newer traders that are getting in because they see the instant gratification within like a day or two.
Mm-hmm. Yeah. Let's move to the last slide.
Did we just drop Jenny?
I know. I think she's gone. It's just you and me.
She just left.
She'll be back. Kraft Heinz calls it quits a decade after merging. So they're splitting into two publicly traded companies, one for snacks, one for sauces. Kraft Heinz, I said earlier I was going to have a story. Kraft Heinz, man, I had some Kraft calls. This is when I was trading. This is actually 2015 too. This is 10 years ago. Interesting. I used to like this strategy of things that were really low on the RSI. And really big names, right? Like really like names in the Dow, et cetera, like things that weren't going to drop 30% in a day, but over time might fall. They're low on the RSI. I would look for like 3 months out and buy some calls. And Kraft, I had some calls, but it was Kraft, kind of slow moving, right?
Oh, it's like a tanker. It's a slow moving vehicle.
For sure. And so I had these long-term, I had these like 3-month out calls. It was boring. It wasn't really moving. This is the one that wasn't working out of my 10. Like there were 2 that weren't working. This is one of them. I said the hell with it. I closed it. I usually close things most of the time towards the end of the day. I closed the calls out one day. The very like 10, 15 minutes later after the close, news comes out. They're being bought by Warren G. I always say Warren G.
The worst. How bad is that? When you throw in the towel, I think that hurts worse than staying in a trade and closing it, and then the move comes that you're looking for, that you've been holding on for dear life. That's the worst.
I had like a 50 lot of calls, Liz. The stock ended up jumping like a whole bunch. I missed out on like a 50 grand trade. I was so I was so mad. I was so mad. I always remember that about this merger. AVGO had earnings report a 63% jump in AI revenue as they beat estimates. Sportsbook CEOs are expecting a record year for NFL. They're expecting it to grow by 8.5% to $30 billion. So look at your DraftKings flutter. We had a big game last night. Apple's supposed to hold an event this week for their new iPhone products on September 9th. And then we got PPI and CPI this coming week as well. We'll see what those yield. Again,
Mine are PPI and CPI this week. So they're going to be on Wednesday, right? Tuesday and Wednesday? Usually
Wednesday and Thursday this time around, I think.
Okay.
Yeah. So again, we already know inflation is high, but we'll see how the market takes that. And then research, September 2nd, the OJ, 5 Ways to Short a Trade is really interesting. Check it out.
Did you do anything in Broadcom, or have you been trading a lot of earnings trades? Do you trade earnings trades?
I do. I usually do. I usually kind of try. I usually just try to stick to just one way, unless it's a name that I really think there's something going on in. I honestly should have gotten. I usually do these calendar spreads, and I usually do calendar call spreads. I had one on I had some on in Lulu. Obviously, Lulu went to the downside. I don't know what I was thinking. It was almost like easy to determine they were going to fall because it's just not a good situation for them.
In Lulu, when you looked at that, when I looked at it yesterday, the calls, there was such call skew in Lulu, it wasn't even funny. So
true.
Yeah, both. Now that being said, Jamal, I just got a breaking news. Jenny lost power at her house. I don't know what I don't know what your plans are for opening bell. But
I'm here if you need me.
We might take a quick break, and I might be able to keep Jamal. So I figured if I ask you live on air, you can't say no. So we'll take a quick 90-second break, and when we get back, we've got opening bell. We'll see you. Stay tuned.
Got friends?
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights,
and some life-taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody. We've got about a minute until the opening bell, but we got Jenny back after a power loss.
Oh my goodness, that was crazy. Our power, it's very windy here. I don't know if it's windy near anybody else, but the power went out, but then it quickly came back on.
So I've got trees right out there. No wind.
No? I don't know. I have no idea. We'll see. At least, I mean, it went out for literally a second,
No, it blips, right.
But then it took the internet a minute to get back up and running.
Hey, Jamal did a great job, and he even offered to stay if you weren't going to come back.
Yeah, what did I miss?
I was like, I don't know what your plans are, Jamal, but I've got opening bell next. He's like, I can stay on with you if you need to. It's pretty cool.
Yeah, opening bell 1 minute.
Yeah, 1 minute. I mean, so SPOOs are up 22, NASDAQ's up, but you've got the Dow is still down. Is it CRM that's taking down the Dow?
Oh, you could always go to the watch list. We're in the platform, so we're in the platform. Why don't we take a look?
So you can take a look. I'm just going to go to Tasty Default. Where's Tasty Default?
Not Tasty Default. You can go to market indices. So you go to market indices and then just go to the Dow and see what's in there that's down. But actually, it's up now. It was down, but it's
up. So I mean, we're come spinning out of the turn. SPOOs are up 25. That's what we saw after the number today. They went up. I think we've seen them as high as about 30. So now we've got everything in the green. And look at this big bond move, Jenny. This is what I wanted to show you. I was talking about this with Jamal when we were on there. So bonds are over 116 now.
I know, it's crazy, and I'm kind of mad. Like I wish that I had more of a position on.
And somebody in the chat said they had a zebra on in ZB, which was awesome. So
good.
Really well. And I love to hear that Jamal is doing a lot of zebras, because zebras are a good way to get bullish with defined risk, right?
With defined risk, and you keep that unlimited profit potential. Yeah, look at that move in ZB. Now, I know I mentioned TLT, and I said it hasn't been up here in a while, but it has, just a couple weeks ago. You can see it got up in that 88 handle.
Yeah. It's a big move for this, right?
So a big move, big jump up. Yeah.
Jamal was referencing this too. Take a look at gold. So gold is having another, it's hitting almost all-time highs again here. And I want to take a look at silver because I want to see if that's doing the same thing. So silver is gapping up as well. Now silver's been actually leading the charge, I think, versus gold recently.
Well, yeah, look at the move it's had, between the end of last week and beginning of this week. That's quite a move for silver.
It is a big move. And silver is a big product. It looks like it's 40, but this is the silver futures. It's a big product. What else is on the move today? Bitcoin is crossing the 113 level. So that's catching a little bit of a bid. But in my mind, in the words of Tim Knight, these seem to be like lower lows and lower highs. Although maybe we're moving in,
I don't know. Hopefully we're moving in the right direction. Take a look at AVGO. I want to see how that looks. We saw it down up 40 something. Now it's up 43, up 14%. Big move for Broadcom.
That's a big move. So
yeah.
Some cities. So AVGO, and Vanetta brought this up, that was taking down, wait, hold on. I want to see what NVIDIA is doing on the AVGO news, because that was supposed to be down. Oh, NDA is not right. NVDA. Yeah, so that's, you'll see that that's being taken down by the AVGO news. So it is kind of a tale of two tapes, right?
And then what else did she say was down? AMD was down a little bit.
Well, AVGO is up, and all the rest of the chip makers are down. So you're going to look at Smash and AMD and
what's Intel doing? Will you take a look at what Intel's doing?
If I could type, I can tell you what Intel's doing.
It's down 20 cents.
Yeah, I mean, they're all taking a little bit of a hit because of that. I mean, so what do you think? So today we've got opening bell. We're going to adjust, because Jenny and I usually adjust our positions. We're going to do that a little bit later in the day, right before our show. So right now we're doing opening bell just like they do. Now, usually on the opening bell, they're closing any of their earnings trades. We didn't really have much in earnings.
But let's take a look at some of the earnings. Also, go to Lulu. Let's take a look. I mean, Lulu down. Look at Lulu down $37, down almost 20%. What a move.
That is a crazy move. But I'm telling you, Jenny, in my heart of hearts, and you know I love Lulu. It used to be my uniform for years and years and years. But I never liked it above 200. So I think you were spot on accurate. This is now a player again. And look at this, Ivy rank of 104. And this is usually what we see. We haven't seen this in so long. You're getting that down move and you get the Ivy rank high. We've seen so many down moves like this where the Ivy rank will be like 12.
Right. That's a huge rank. That's a huge rank but it's a huge down move. If we go to October, I'm curious, what's the margin? Go to the expected move, the 20 delta for 290. What's the margin on that? Not bad. Not bad.
Oh, that's not bad. So
you take 50%. If you get $300 and you were looking for 50% of our total credit, you're making 10%.
Yeah, you are. I just want to take a look at something. So 130, you can bring it up. You can take it.
I mean, I hate that it adds on the extra buying power.
I hate that it does too.
Because it's a $5 wide.
You're taking 50% of that. That's not bad. That's Lululemon at 150. I mean, has it been? Could it go there? Sure. It's not on the chart right now. But I love what you brought up, that it makes it a contender again. You're back in the game because take a look at this. For this long, we weren't in the game in Lulu.
Right. Yeah. What do you want to say?
Back to when it was under 200. I'm just trying to go back in time and I'm still not there yet. Take a look at this.
I mean, do you want to sell those puts in Lulu or do you want to do a downside ratio spread just in case?
I'd rather do a downside ratio spread because I think you want to catch, it's kind of like catching a falling knife. I'm still not there yet, Jenny. Here. What year is this?
20. Wait, move your arrow up on the page.
What do you mean?
2020. 2020.
In 2020 was the last time it was wrapped around here, in 2020.
Well, and you know what? Because then there was the 2020, the COVID boom for athleisure, and everyone was wearing athleisure. Now everyone's back to work, and people aren't in athleisure all day anymore.
It brings it back to a certain price point, but I do think there's a lot of competition now. Lulu used to have a corner in the market where they were the quality product of the athleisure wear. Sure, there were lots of other things, and now there's different ones. So I don't know.
You're always the expert on it. What is your go-to now besides Lulu? Like besides Lulu, what is your go-to athleisure wear?
Oh, I'm ALO. I've been ALO for a while, and not the guy from the trading floor. I've been into ALO for a long time.
Just wait till Tuesday when we see old Doug on the floor. His trader badge is ALO, and he's the one who comes.
I asked him that the other day. He's like, everybody thinks I own that store. I don't. I was like, well, it would be awesome if you did, because that thing's making big.
Yeah. Now, is that tradable?
ALO? I don't believe it's publicly traded. No. It's ALO, and you know what else I love too? Viore.
Okay.
Yeah. ALO and Viore are my two new favorites. Okay, but let's get back. We can trade Lulu, but I do want to get back into more general market stuff. The bonds are going to seem to keep their wings up. I think they're going to stay above the 113 level. VIX, I want to take a look at that. So Jamal was saying that too. VIX is 14. Down 3%, 14 handle. I don't like to see that.
You know, the VIX, we always say this, the VIX kind of tells us what's happening with the market. So the VIX has not, but I mean, yesterday closing at just, the low 15s, it didn't expect much. And now with VIX in the 14 handle, it's not expecting much. So if we're going to go by what the VIX is telling us, the markets, we're not going to see any big drop in the market anytime soon.
So, so I know we were talking a little bit with Jamal, thinking that maybe there would be a reversal today. I don't know if we're saying that on air or in between.
I just said he had his long iron condor, and I just said, if the puts, if you've got a long put spread and a long call spread, and we're way up on the open, buy back your short puts for a nickel, and then have that extra long put just in case we have a reversal. I didn't say I think there'll be a reversal. I said just in case there's a reversal.
Jamal was talking, not you. Jamal was saying he thinks that he wouldn't be surprised if there's a reversal by the end of the day or even sometime next week. And like I said, I don't know if that was during the live show or if we were talking in between. But just because, the numbers come out and they're not necessarily good numbers, right? If that's the case, so the jobs are going to be bad. But that's not a bad thing to look at. But the VIX, the indicator, is not telling us that. The VIX
not telling us. Yeah. It doesn't think we're going to get a reversal today. The vol doesn't say that.
It does not. I want to take a look too at Tesla because of the $1 trillion package, and it was getting a lift. It's up 3% from that $1 trillion package that they're presenting to Mr. Musk.
Yeah, that's a decent move. Also, what else did I want to? There's a handful of things I wanted to look at. Open. We talked about open and the move, and Vanetta talked about that. If you go to the chart. I know it's only $6, but it's had quite a run from a dollar to up to $6.
This is where it became the meme stock. It was 50 cents. So
Yeah.
that's why I have it in my IRA. I bought it a long, long time ago. And I know you clean this stuff up. I remember this because we probably bought it at the same time. You're like, what do I need this for?
I just bought it recently when Tony was talking about it, after when they were talking about it being a meme stock. See that day that a few days later, that big run up. I bought it that day, but I'm pretty sure I got out of it on that big green bar. The next, just like I think I got out of it at 4. I don't think I kept it long. But I don't have it anymore. It's not in my account anymore.
This has been a player a while ago. It's $4. I mean, I remember I got in a long time ago. So it's back. That's what I was saying. I was like, $6. It's only, 12% is a big move, but it's 72 cents. So you kind of got to put it into perspective.
But it was only $1. Take a look at AEO. Is it going to continue its run up? It had such a run yesterday.
It's down a little bit.
It was up 450 or something yesterday. I mean, what a move for American Eagle.
Yeah, so that's what I'm saying. If you're gonna look at Open, this is a move. Open's a stair step up, but this is a big move.
Well, Open went from $1.50 to $6 in a month.
No, but I'm saying overnight. Like this is when you go from tonight's move from it opened at 570. It's 12%. That's a move. But you look at AEO and that's a move. Like that's a.
Now, if you go back in time in AEO, it has been, at the 40 level. That's why I joked. I said, I'm not selling this till it gets to 40. It was there before. You have to go back a few years, but it was at some point in time, I think.
I wonder if it was 2020.
Oh, yeah, there. How long ago was that?
2021.
Is it?
Yeah, 2021.
Yeah.
Yeah. Well, it seems like we're going to keep our wings up. Oil is the only thing that I see that's down on the day here. And it's only a little bit. It's down 2%. That's nothing. That's the only red I've got.
You know what's been down lately? All the softs like corn and soybeans. And what are those doing today? Because we didn't even talk about those or look at those this morning. If you go to the chart just to see, no, they've got a bounce.
They've got a little bit of a bounce, but nothing crazy.
Well, if you go to the $ ZC, it looks like a different story. You got it, the $.
Oh, there it is for you, $.
Yeah, $/ZC. Then you'll see.
No, that looks the same.
Yeah, it does. What are your charts like? Super zoomed in? No.
The 1-day 10-year.
No. And what else? Soybeans. I thought they were down more.
I don't think they've been down, were they? What soybeans? I can't remember.
ZS.
No, that's down a little bit.
I guess just down this week. Maybe just down this week.
But they do have a decent IV rank, which I think why they've been a little bit in play too. When you take a look at that, the softs have had a bit of a. The softs are the only things that have maintained a rank. I think that's probably why they were in play.
And that's why, if the VIX is low and there's not much going on in the general market, people will turn to these. But looking at these charts, I don't know that it's not like, oh, jump in because they're really at some kind of extreme. They don't look like it.
Yeah, gold has been the craziest thing to me because I'm an accidental gold bug, but I have such a baby position in it now because as it rose, I was like, I can't do this anymore. I can't maintain my gold going this far. So I have a baby position in it, but it's kind of sad to see it rise like a phoenix. Anything else we want to take a look at before we take a quick break? Because we do have fast market and we're going to stay on time.
I know you pulled up oil. Did you go to the oil chart? What was the rank and what was the rank in oil? Because that's something that we could sell puts in. 18 rank isn't terrible. Oil at 62.
Here's what's Liz and Jenny-esque. You can go to MCL and it's small enough where you can hold it for a while. I'm gonna go to the 41-day. This is a regular. What do you think about a Jade Lizard here?
Sure, yeah, we can do a Jade Lizard in MCL. It's not going to use that much buying power. $600.
So taking a look at that, you could just sell the put, but I was just going to try.
Have to go in like 868, 69.
No, don't like it.
Just sell a put for $1.
I was thinking too. I'm going to go back down and I'm going to go just sell a put for. You're coming up quite a bit, but I'm just going to sell the 57. Let's take a look at that. So you've got the 57 put, not even on the chart. We were there in June. I'm cool with that.
And again, this is MCLV. If you go to $MCL just to get a bigger view,
looks the same.
Yeah, I mean, you see at that one point it got down to like 56 handle, but I'm okay with the 57 put. This is the micro crude, so
Yeah,
it's
same place. June is when it got back in the 57 handle.
yeah.
Yeah, so let's just sell it for $1. We'll sip it's using $800 though. That's fine. I mean, for 50 cents.
Well, I see what you're saying. Like $800 to get 50 cents out of this. This is the battle of smaller accounts. Like to use $800 to only get 50 cents is a struggle for us. It's easier. We say this all the time. Like the more money you have, the easier it is to trade, right? That's just unfortunate. That's the facts.
Shipping it.
Yeah. Yeah, we have $9,000 in buying power.
So that is shipped. The other thing that we can take a look at, only because we're in it right now and I see it, HPE, we did those 2 calendars, or we did 1 calendar at the 23 level, but I put it farther out in time.
Yeah.
On a calendar, I'm closing that thing.
Right. So it didn't move at all. So we made, that's pretty good on one little calendar.
Yeah, that's not bad. So, and I'll push all this stuff through so we can do it live on air. There's nothing else that needs to be managed in here right now. So let's take a short break. And when we get back, we will jump into fast market. I'm excited. I haven't looked at them yet.
No, I haven't either. So a good thing we have some buying power. We've got lots of trade ideas coming in. Stay tuned.
Right. Stay tuned. We'll be back in 90 seconds.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as explore traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix.
Netflix.
you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Okay, I'm not gonna lie to you, Jenny. I've never seen you dance to an intro before because usually
I kind of like that song.
usually it's me being like, Jenny really likes that song, John. So maybe we should play that a little bit more often.
I do. I could see. You know how like some songs you're on a dance floor and some songs come on and you're like, yeah, I can't dance to this, but that song,
you are into it too. We recorded that break, but yes. So, Jenny, this is the point of the day where we're looking at fast market.
Fast market. These are trade ideas that come in from viewers, and they're not assumptions; they're actual trade ideas. So, right. I wish we had Tom's account so we could trade as if we had Tom's money, but we don't.
We could say two trade ideas, what lay people will do and what Tom should do.
Yeah. Yes. So let's see. Fire them up, John. What's the first trade idea?
There we go. Fast market. Love it. Jenny's favorite theme song.
Okay. Intel sell October 23 put, sell October 30 call for a credit of $1.04. Yeah. I mean, honestly, sometimes we talk about how we're afraid of naked calls. I don't think I'm afraid of naked calls in Intel.
Okay, so what are we doing? They want to sell the October 23
put and 30 call. Do you want to pop in the platform and put this on?
Look at me, Jenny, while you are talking, because this is teamwork makes the dream work. You talk about what it is. I pulled it up. So let's talk about this. This is almost a synthetic Jade Lizard like we used to do it, right? So you've got 70 cents on a put, 30 cents on a call instead of a call spread. So you're definitely leaning a little bit on the bullish side. This has got a 14 delta. I don't mind it.
It is. Now I will say, like I did sell not that long ago, the 26 call in Intel, and then it was running through it. And I said to myself, like, oh man, why did I sell that call? And I was sweating it. So I do get mad at myself when I sell some calls and it starts running through it. But the 30 call, I think we should be safe.
Take a look at this. This is very, like I said, this is very conservative bullish delta, meaning you're adding that extra 30 cents in. I don't mind. Now let's take a look at what we have already to add to the position. We've got a zebra. We've got the 23.25 zebra. It's not.
Oh, so that's fine. It's like a strangle around our zebra. You can even if we have a zebra, it's like a strangle around it.
Yep, I'm shipping it. So we're using an extra $338. I'm actually going to take it down to 99 cents.
And if we change that zebra, maybe we get rid of it.
We can. We're just going to lock in a loss. That's what I'm saying.
Well, I don't think so. With Intel back up to 24, I don't think that we'd be locking in a loss because it hasn't
23.25.
I think we probably ratcheted it.
Let's review the tape, Jenny Andrews. I'm going to go to order chain. So what did we do here? We rolled it. We were rolling it. Yeah, we ratcheted it up.
I mean, you could leave it for now if you want to, but
yeah, here's the deal. We're going to leave this for one day. If we can get it over 25, let's close that zebra. We've got strangle around it, and I'm fine with that.
Yeah. Okay.
Next up, let's go back into the fast market.
Lulu, 178 after earnings, same level as 2020. Lifetime opportunity, buying stock or selling 30 delta October puts.
Oh man. Okay. So let's did this say love Jenny? Who was that from? Was it from you? So I just pulled up the 30 delta, closest to 30 delta, you got 27 or 32. The 30 delta put, it's not bad. Now the only thing here, we were looking at it earlier, I was hesitant to press the button because of the capital required. If I were Tom Sosnoff and a Tom Sosnoff account, I love the 30 delta puts.
It's only using 1,500, which isn't bad for you're getting.
It's using 2,100 because they said 30.
Oh, because he brought it up higher.
They're using the 30 delta. So, and you could even go to here if you wanted to get aggressive. So,
how much is the diagonal? Because they said get long stock or sell that put. If they are interested in getting long stock, you could look at a diagonal.
No, I agree. No, I'm just going to state for the record what I would do if I were Tom, and it would be this. I would be selling, I might even go to the 165 if I were Tom and putting up $2,800. I might do it in my account. I really might, but not for this account. It's too much to hold up for this account when we don't have that much. Now, to Jenny's point, diagonal, we could even do it nearer term.
You could buy the October and then sell the September.
Buy the October because it's trading right there and sell, let's see. Yeah, then you're using $785. You're bullish.
I like the naked put better.
I like the naked put better too. And both of us like the naked put better because take a look at this. You're spending $736 on a $10 wide. You can only make $300 anyway.
Yeah, I like the naked put better. And if we can't afford the naked put, let's just do a put spread. Do a TP style. Pull up a $5 wide put spread to where we're getting $1.66.
There you go. The 165, 160. I said if I was Tom, I'd go to the 65 put. We're gonna ship this.
Yeah, it's what we can afford here. We can't use the $2,000 in buying power right now in Lulu.
No, we cannot. All right, let's go to number 3. I want to see who these are from too. I don't think we're giving people their credit. This is from Brad from Fairhope, Alabama.
Yep, 0DT Iron Fly, $20 wings, 10% profit target before noon. And you know what, Liz? It's perfect timing because it's 8:54. Let's put on an Iron Fly and SPX.
Okay, Iron Fly and SPX. So if you're taking a look at the Iron Fly, $20 wide wings.
You might just do $10 wide wings.
We'll pull up theirs as we speak. So this is from Brad. I've got it pulled up. Let's pop back in the platform. So the 0DTE here, I'm going to close all this so people can see what we're doing. 0DTE is right here in SPX. You open it up. I sold literally the at the monies. Now you can do the which one has more extrinsic value, you think?
What's he getting for the 20 delta?
Was it 20 delta? And it was $20 wide wings.
Yeah, $20 wide wings. That's what I mean. $20 wide wings. What are you collecting?
1505.
That's not bad.
Not bad. Now, here's what I do with my son, and I've been leaning towards this. Here's $10 wide wings for $880.
That's not bad either.
$870. I'm locking this. We're going to do $10 wide wings. This is what we usually do.
I like both. I'll be shocked if you get filled at $880.
Big money, no whammies. Come on. I know. That's what I was going to say.
You might need to bring it down a little bit.
I feel like that's too good to be true.
Yeah, I'd take it down. And then put in a 10%. So if you got filled at 865, then
falling off a little bit. We are at the 65.15 level. I just wanted to state all that for the record. I'm going to go into SPX. And Frank the Great, this is for you. I just want to show something. If I highlight them and right click and I go to 10% of profit, this is for you, Frank. I hope you're paying attention. And then just go like this, it automatically goes to GTC. It's not as if we think that this is going to be in here tomorrow. It automatically does it, but we don't mind just leaving it.
It's a 0DTE. It'll cash settle at the end of the day. If this fills and we take 10% out of it, great. If it doesn't fill, it'll cash settle at the end of the day.
I've seen Frank in the chat so many times be like, these girls in the SPX GTC, they don't need it. It just auto fills to that. So just keep that in mind.
We put in our closing order, and it's not a good till cancel. It's a closing order to take 10%
order, because we know, you and I both know that it's gone after today. There is no more SPX in the 0DTE after today.
All right. Next fast market. This is from Donnie in Cleveland, Ohio.
Is it our Donnie?
I don't know if this is I don't know if this is like rumors. I should have asked Vanetta, but I saw it could be AI or like made up stories on the internet. But I heard like Travis and Taylor Swift were looking at some like mega $1 million home in Ohio.
She's got them all over, so I wouldn't be surprised.
I don't know. This is from Donnie. Football season has started, so sell a put ratio spread in DraftKings. Yeah. DraftKings. I'm betting. Okay, if anyone wants to join me, I am betting on. I'm going to DraftKings after the show. I don't want to forget. I wanted to do it before football season started, and I am betting on Detroit Lions making it to the Super Bowl.
Why?
Because I love their quarterback.
Who's their quarterback?
Jared Goff, and I think that. So he's the quarterback I picked for my fantasy league this weekend, and I'm going on DraftKings and betting on Detroit Lions. Dr. Jim will be happy to hear this.
That's what I was going to say. Dr. Jim, I hope you're listening. Tune in. Dr. Detroit. Doctor. Dr. Detroit. Yes, he's hopefully watching.
So we'll see. We will.
So now, if you were from Donnie from Cleveland, Ohio, and Jenny clearly likes the Detroit.
DraftKings. I'll put on a bullish trade in DraftKings. Sure, let's sell some puts in DraftKings.
No. He wanted a downside put. He wanted a put ratio spread. So
Okay.
when they say put ratio spread, if I'm opening these, I typically go a little bit nearer term. So I'm going to go 14 day instead of the 42 day for a downside ratio spread.
Downside ratio spread.
Fan is telling me that Jim is not a Lions fan.
But Jim is from Detroit. Jim's a fan. Listen, Jim's a fan of whatever team is winning. And if Detroit starts winning, he'll be a Detroit fan again. Detroit. Don't you agree? Jim's a fan of whoever's winning, and he lives in Florida, so he could claim many teams. He can claim the Tampa Bay team, or the Miami Dolphins, or he'll claim Detroit if they're winning again.
Okay, so where do you want to do here for I don't mind being bullish DraftKings. I am not a Detroit Lions fan, just a little FYI. But so I don't mind being bullish DraftKings. I think kids gamble. I think that this has only upward potential, which is why I put my money where my mouth is. I have zebras in DraftKings.
Yeah, we've been in and out of DraftKings for years. DraftKings last year was one of my biggest winners on the year, if not the biggest winner on the year. And that's just and honestly, I don't have zebras in DraftKings. I just sell puts in there.
I do too. But the fast market said put ratio.
Put ratios. No, I'm just saying, it doesn't. You don't have to just be long to do well in here with it going up. Just selling puts and keep moving up your puts. Yeah. Put ratio. It's the same. Put ratio or selling puts. What are you collecting?
83 cents. You are collecting exactly the same amount as if wrapped around if you were going to do that ratio. So you could either sell this 46, you can sell that one. We're actually getting a little bit more to bring our break even up. So I'm shipping this one. We've got 80 cents on the put ratio in DraftKings. Okay, what's up next?
Next up from Ryan in Burlington, Vermont, of ETHA. And it's up today a little bit. ETHA's at a better price now, and I don't want upside risk. What about an October Jade Lizard, 31 put, 34, 37 call spread? I like that credit. It's a wider zebra. He brought his put up, and the call spread is a little bit wider. Let's take a look.
I wanted to show you. I pulled it up as you were saying the strike. So this is from Ryan, and I pulled it up. So he's got the 31 put and the 34, 37 call spread. So it's not bad. This, I would say, is almost bearish if I'm in the platform. If we can jump in the platform and take a look at it. So I don't mind it. I like your idea. I like all this stuff. But you're selling your call spread. The 34, 37 means that if it does go up, this is more. I know it says it's
like more neutral.
It's more neutral. It's neutral to bearish almost.
Well, if it stays right here, you've got a lot of theta decay. It's a big collection. You're collecting, $300. So you've got a lot of theta decay. You don't want it to go up and through your call spread. You can narrow that call spread to a $2 wide.
So the one thing I don't like about ETHA that we've gotten creative with, and we do have an ETHA position, is it's using $2,100. That's a lot of cash for a normal account. So what we do in ETHA is we've been doing this in iBit as well. Is you
know what? Why don't you take his trade and turn it into a big lizard? Because his trade was a $3 wide spread, $3 wide call spread right at the money. Why don't you just turn that into a big lizard?
That's $4 wide. There you go. That's actually probably a good idea. So this is pretty much the same trade, the 34, 37 call spread. And then I sold the 34, 28 put spread with it. That's a big lizard with a fat tail.
So you've got no risk to the upside. You've got the hefty theta per day. Your risk is only to one side, but we bought that put. We had to use less capital. If you don't care about the capital, I don't mind this trade either, or his trade with the put a little bit further down.
If you don't care about capital, I would for sure be doing Ryan's trade. So, but we do in this account, it's very similar. We just had to tweak it a little bit to make it ours. We still have a little bit of overage right there, which means I could bring this up if we needed to. There you go. You're using 177.
Not bad. Not bad.
We'll ship it. And shipped. Okay. I loved getting the 0 DTE and I really hope we get filled on it on our.
Well, you were not going to get out of it for a while. It's early. It's only 9:02 in the morning. So
the GTC is in, and usually when we put those on, I'm out of them just a little bit after. Right, I've never gotten filled before 11. Actually, one time I got filled before 11. Once when there was a lot of premium, and we were getting like 850 or 860 or so. Like, but I think we're on the early show. We're off at 10. I doubt it's going to fill before we're off. So I'm going to ask this, and I think I know the answer to this. Have you ever seen the movie Johnny Dangerously?
No.
Oh God, that's one of the other greatest lines that ever happened in the movie, and it happens. It's just like I want my $2, where throughout the whole movie he goes, "I did that once." That's exactly what happened.
Is that worth watching? I'm always looking for new.
It's hilarious. Johnny Dangerously. It's old. It's old and it's funny. You would like it. But when I say it's old, I mean it's got Michael Keaton in it, and so some of those movies I watched it so long ago that sometimes they're more inappropriate than you would think they are back then.
I'm always looking for movies for like Lily. Last weekend I had 4 girls sleeping over all weekend. We've got 10 girls sleeping over. I'm always looking for movies for them. Last weekend I had them watching like
it's a mobster slapstick comedy. I don't think Johnny Dangerously is good. But I think you and Keith might thoroughly enjoy it. How about that?
He lives his life on an airplane. He's seen every movie known to man.
Yeah, I mean, 80s. It was an 80s movie, and it was good. It was good. It was a good movie. Okay, I'm gonna bring that to the show. Okay, now we've got those in. We're working these. I will cancel replace to make sure we get filled on some of them. But let's go to the next one. Q. Okay.
Hannah from New York City, getting close to new highs and IVR dropping fast, buying 580 Octave calendar. Yeah, sure. We'll get into a triple Q calendar with the VIX so low. It's not going to be that expensive.
Do we have anything in triple Qs right now? We are out of our triple Qs.
We had the calendar. We had a calendar on. We took it off for about $100 win. We can put on a new one.
So Octave, what strikes did they have? I didn't.
580.
Octave 580. Okay, so they're doing a call calendar. No,
I don't know.
They're at the money. 580 Octave call calendar.
No, it said like getting close to all-time highs, and so I don't know if we want the 580 calendar or if the only way we're going to get out of this if we get a tiny drop and a little boost in vol, so then we need to move it a little bit to the downside out of the money.
So you're spending $700 on this. It's not bad. Calendars are a good way.
$700.
$700. That's what I'm saying. They said Octave, right? I'm just following their instructions. $700 on an Octave calendar and an at the money calendar. So what can you make out of this? If it stays right here and time passes, let's go through that whole process, Jenny, just because I don't think we've done it in a while. $42. So it's actually not bad. Your front month is $13.35. So if time elapses and we go through and nothing changes with IVR and we're still right here, this in X amount of days, which is like 30 days, it could be worth $13. That's not bad.
No, it's not bad. If we don't have to just sit right here. We can move around, but when this one's about to expire, if we come back to about this level, it's not bad. But in my mind, those $700 is a lot to put into a triple Q's calendar. Like it's just the QQ.
A non-directional triple Q's calendar. I agree with you.
Yeah, I mean, if you remember the days we back in like doing the big calendars and like the rut, we could get them on for $1,100. So I have a hard time putting that much money into a triple Q's calendar. I feel like there's a better use for $800.
I do too, but this is fast market. If I were Tom, I'd press that button. But it's so funny because we just used $800 in a lot of other trades. You know what? We might as well just put on like a 10% GTC.
No way. I'm not putting. I do not want to put that much money into a calendar because we've seen them. We've seen $1,000 calendars go to zero. We have. That's facts. Like we've seen $1,000 calendars go to zero. I think they're too low probability of a trade to risk too much in it.
Are you just trying to bring up some sick points that I've had throughout the years? I've had a $3,000 calendar go to zero in Chipotle Mexican Grill. Just a little.
Yeah. Yeah, so we've seen calendars go to zero. They're a low probability trade. I don't want to put too much into it. And again, keep in mind, like, what did I say? We have $9,000 in buying power. So that's almost, a tenth of our buying power that we have left to put into a calendar that's going to be a slow grind to get any money out of it. And it's a low probability trade. It's just not worth using that much of our capital in that position. But if
and I was going to try to narrow it, like bring it down, so show how you could use less in the calendar. And I went 10 day, 21 day, and it's still $400. So let's just go to the next one. We can say we're 4 for 4 so far. We're going to pass
and I
out.
would say, like, I haven't gotten anything to push out since our MCL.
Well, we've got a lot. Hold on.
So yeah, if you want to push these out to the follow page, because especially like the SPX, so they get pushed out in real time.
Okay, those are all pushed out. And then let's go to the next fast market so we can keep ourselves in line.
Ooh,
Starbucks. What does this one say?
Starbucks is lagging everything. How about a 90.85 zebra? Although, yeah, I mean, I know this is a fast market. I kind of like what's your assumption better, where we come up with the trade. Because I don't mind puts in Starbucks. I don't mind puts in Starbucks.
Well, and they were saying October 90.85 zebra. So this was done yesterday. So I will tell you, and Starbucks is really unchanged. Is that really 0%? It hasn't moved at all?
Yeah, it hasn't moved.
It's nothing at all. So the zebra, what you're trying to do is wash extrinsic value. If you were doing the 90.85, you're actually paying extrinsic value for this because these are both the same and you're buying 2 and selling 1. So a true zebra would be selling 1 of the 85 and buying 2.
What do we have the 85 call in Starbucks?
We have, I will show you our Starbucks position because I glanced at it. I think we have a calendar. We have a diagonal.
Oh, a diagonal. Uh-huh.
We have a diagonal. So in full disclosure, we kind of have a version of it on. So we used less capital. We used $467. We have a diagonal where we sold the 90 and bought the 85. It's working according to plan. We're down a little bit of money on it, but we still have a bullish position on in Starbucks.
So and how much are puts in here? Because I don't mind selling puts in Starbucks.
I think that's too expensive in Starbucks.
It's not bad. It's not bad. You're getting $230 for $1,500. It's not bad. But if they want a zebra, they want unlimited profit potential if Starbucks runs up. And maybe it will. Maybe he's onto something. Maybe he's onto something with fall coming up and all the pumpkin lattes. So yeah.
I wouldn't put a zebra in Starbucks with Tom's money because I think Starbucks is crap. But we do have the diagonal in, so we put a little bit less capital into it. So same thing with the bullish trade.
I'll tell you, ever since our Seven Brothers opened up, Starbucks is not as busy. All the kids are going to Seven Brothers.
But I mean, life is cyclical, right? So just like Lululemon's out and Alo and Viore are in, there's going to be a new coffee shop that pops up or a new place to go that will eventually take over. So I don't know when it's going to happen, but we have a bullish trade in Starbucks. I don't want to put any additional capital into a zebra.
Oh, no, I don't want to put additional capital on, but if he thinks Starbucks is going to run up, a zebra is the way to replicate stock and use less buying power. And then you may have profit potential 1 for 1 to the upside. That is so, and how much was
that is? So if you're going to put on a zebra, in order to wash extrinsic value in October, you almost have to buy, you'd be putting $1,200 in, which is the same price as the put.
I mean, look at the markets. Boosts are only up 6.
I know I was going to say that. And look at this. The Russell's turned around. So this is exactly what it was before the number, by the way.
Right. Yeah. We're right back to where we were before the number. And when the number came out, the market went down initially.
Yeah, it did. It did. It went green and then we popped right back up. So we're right where we were. That's Sage Jamal Chandler.
No, Jamal has the Iron Condor on where he can.
Jamal's the one who said he thought it could be down by the end of the day.
Oh, yeah. But what he bought yesterday, he needs a big move one way or the other.
Yeah. Okay, let's go to the next one.
All right, EA. Hi, ladies. EA is releasing Battlefront 6 on 10/10. Technicals suggest a move higher. Crab trade. Okay, Crab. I'm going to read this to you, and Liz, you can put this in. Buy 1 Nove 170 call.
Hold on. Buy 1 Nove 170 call. Okay, got it.
Sell 2 OC 180s.
Okay.
Buy 1 OC 190 for a 505 debit.
Okay, so you want to pop in? I've got it pulled up.
Yeah.
So crab trade. This is a la Nikki and Mike, right? They're really good at this. They're very creative. They do the broken heart butterfly. They do the crab trade. They do lots of stuff. So the crab trade is a version, in my mind, of a diagonal where you're paying less for it, right? So I'm just going to do things real quick. I'm going to eliminate this, and I'm just going to do one of these. So this would be your diagonal. You're paying $6.33 for it. What the crab trade does is it gives you, you're doing a similar trade with less capital.
You're paying less. You're putting out your debit is less, so 513 instead of 600. And if it goes up, great, but it can't go up too far.
Right. So it's same thing. Well, the diagonal you make money no matter what. You're getting this for this for like $1.50 discount, right? Then the diagonal.
Right. And if EA goes up to 180 by October expiration, great. But if it blows through, then you have, like you see, you have the 170, 180, but you're paying $5 for it. So that has $500 in profit potential. And your break even is about, then you've got this embedded spread here. So it's not equal, right? 170. Oh, it is 170, 180, 190, but you're paying $5 for it.
So in my mind, when I'm looking at this, I'd rather pay $6 for the diagonal.
I know, me too. Because then you'll make money no matter what. Where if like you go through this, you won't make money.
So I almost like the crab trades for earnings. This is an opinion. I'm sure the boys are better at this than we are. They've been doing it a lot more than we have, these crab trades. I like crab trades for earnings because then you're kind of getting that discount of what if it doesn't move, you're getting it at a discount. Here, I'd rather pay $6.33, and then no matter where it goes to the upside, we can't lose money.
We can't lose money. Right. And I don't even mind it shorter term because I like my shorts a little bit shorter term because if it goes up to 180 in a week or two, that 180 in the 42 days is going to have a lot of extrinsic value. You'll see it.
They had a date. There's a reason for this because
October 10th. So it's coming out October 10th. Why not? Let's try to buy the October call and sell something before October 10th.
Okay. Either we just get filled on. So let's do that. Let's buy the October call. Let's buy
the regular October call. Or I don't care. I don't care if you go. Yeah, so that way we have it. Buy the October 17 call at the money. And then sell like the October 3rd. And you can keep it tight. Keep it like 170, 175. We're only paying $335. And then if that 175 rolls off, then we have another sale. We've got the October 10th release of the game.
The rise is like a phoenix from the ashes. We've got the long. Okay. That's shipped, but I love it. A la Nikki and Mike. They do a great job. Okay. How many more do we, let me check I'll check the chat too. How many more do we have?
This is, let's see. I can't read the.
Two more.
Okay. I had the chat up. Okay. So mRNA, what is it saying?
Stock sitting on, this from Sean from Hong Kong, stock sitting on multi-year bottom, catching this falling knife with the October 22 and a half puts. I like puts in Moderna. Sure, it's a pretty cheap.
So I have not been in Moderna in a long time. To say that it's going to be the 22s, I was shocked.
Yeah.
Look at this. So let's pop back into the platform. I don't know why I was shocked. I guess I don't look at Moderna that often, but this is talk about one that's the bottom of its range, 31 rank. There is no earnings on the horizon. I've got the 22 put in. It's not bad.
It's not bad. No, it's not bad. If you can buy the for us, maybe buy the 20, just because this was using $800 in buying power for us, and I don't want to type a lot of buying power, so we could still get something, or the 19 or the 17, just release some buying power.
I'm not gonna lie to you. Do you know what I see? I would do this. I would take it up because I don't mind. You're taking it up $1.50. I get it, but it's at the bottom of its range.
So we're just selling a put spread instead of the naked put.
Yeah, or we're going put spread instead of naked put. Okay, shipped, done, and dusted. And I will push out things that are happening, and then we can go to the next one. Push follow. Yes. Okay.
Okay. ENPH, Enphase Energy, Austin from Atlanta, selling 35 puts in October. I know. Have these? Enphase was at the bottom. Has it had a little bump?
Yes, Jenny Andrews. You can pop in the platform. Enphase has had a little bit of a pop, so we'll pop in the platform for the last and final fast market. Enphase Energy, it has had a pop from the bottom. It went from 30 up to 38, but they were selling the 35 put. What I like about the 35 put is it's only using $418.
Yeah, that's not bad.
So if I was to go back to the chart, the 35 put $418, you're getting it, your break-even's about here.
It's not bad. No, not bad.
Oh my goodness, look at this booze. We have taken a turn.
Yeah. Booze down 6, down 5. And, you know, sometimes when those at the money iron flies seem too good to be true, that last time we had those at the money iron flies close to like 850, 860, 870, the market, the blue, you know, far away from it. Because sometimes when it seems too good to be true,
it usually is. I'm shipping the Enphase Energy. We'll see if we can get filled.
I will say, I just had a message from a blast from the past, someone that we miss dearly, Daria, who we love, who was a viewer from the beginning. Now, unfortunately, she's working every day. Ooh, Daria, we miss you.
So I'm working. You should be watching every day. I'm just kidding.
But I did just get a message from her because it's Lily's birthday, and Lily and her son were the same age, and you know we watched them both grow up together. So.
Oh. Yay, that's so sweet of her to remember. She's a doll.
Yeah.
Okay, so that is the end of Fast Market, Jenny Andrews. Let's take a quick 90-second break because we're coming back with market measures.
Yeah, stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend. I really appreciate it. You made my weekend, man.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
And welcome back. This is Market Measures, and Jenny is going to be a surprise to both of us because we know it's something about ETF correlation.
Yes, I'm actually looking forward to it.
I'm
looking forward to seeing what the ETF correlation is these days.
Absolutely. So let's bring it up. Let's pull up the Market Measures because we are running a little bit late on time, but that's okay because then as soon as we're done with Market Measures, just a little FYI, Jenny and I are going to jump into the platform, do a little bit more of like a Liz and Jenny show because it's Tasty Extras. So put the hashtag LIZJNY if you'd like us to look at your tweet. I did see 2 cute, adorable dogs, and I can't wait to go to those. So,
oh, nice. All right, John, fire them up. Here we go. ETF correlation and option performance analysis.
Wow. Okay. Does this literally say 1 of 10 slides?
Let's see, 1 of 10. Yeah, 1 of 10.
Right. Get your helmet on, Jenny. Okay. When individual stocks IVRs decline and market uncertainty rises, sector ETFs become valuable trading alternatives. Okay. So this study analyzes the performance of correlation between heavily traded sector ETF and their top components and option strategies. I love this. So let's just kind of break down that sentence. When individual stocks, meaning your Apples, your Googles, your things that are individuals, IVRs decline, the ETF sector becomes valuable trading. And I kind of agree with that.
Well, and I know we've been doing a lot of like deep diving into old research as we prepared our presentation that we're doing at the RMC. And one of the research pieces I found from the past said, and I don't know if you remember this, and it's not in our RMC topic, but we did talk about it. When IVR is super high, trade individual products. When IVR is very low, trade ETFs.
And I bet this is springboarding off something that they've done, which is fantastic. Okay, so good. Number 2.
All right, we first examined the correlations between the 5 most popular sector ETFs. So we've got energy, technology, financial, healthcare, and utilities. So XLE is energy, XLK is technology, XLF is financial, XLV is healthcare, and XLU is utilities. So I was thinking like we'd be looking at other ETFs, just like SPY.
You were thinking triple Q, SPY, things like that.
Yeah,
not in the sectors. So if you're taking a look at this, if you're taking a look at technology, and let's just say, your Google or the technology sector goes down, the ETFs or the IVR goes down, then you can take a look at if you want that sector, go into something like that.
Right.
Okay. Next up. So here's the correlation. As of September 4th, which is yesterday, XLF demonstrates a stronger intersector correlation at moderate levels. The remaining 4 sectors maintain minimal positive correlation. So let's take a look. So this is the 3-month correlation between all of them.
Correlation. So you're comparing them. And it says XLF demonstrates a stronger intersector correlation. So
the financials are kind of, the financials kind of stay correlated with everything else. And you can see that because it's kind of, the green lines are thicker at the middle.
And if you see like a number closer to 0, right? So the higher you get towards 1 or -1, that's a stronger correlation. If you're very close to 0, so like XLK to XLE is 0.03, really no correlation there. Or XLF to XLE, 0.06, really no correlation there. So you can see many of these aren't correlated. So if you're looking for a diversified portfolio, it's okay to be into various of these X's that aren't correlated.
X's. This used to be the super pit. All the X's were in the super pit.
Yeah.
All right. Let's go to the next one.
Over the long term, their correlations strengthen moderately, falling within low to medium ranges, meaning they tend to move in the same direction about less than half of the time. Utilities display weaker relationships with other sectors due to their heightened interest rate sensitivity and frequent use in defensive allocation strategies. So that last one was just looking at a shorter time frame. This is looking at a 120-month correlation.
Okay, so that's good. You can see the correlations pick up a little bit then.
Well, yeah, like longer term, but recently they haven't been as correlated. But if I'm trying to sell puts and sell strangles, maybe I don't, and I'm not afraid selling strangles in these X's. So let's say I'm selling strangles and I don't want to have two correlated products. I would, maybe sell a strangle in XLU and sell a strangle in XLE, or what? That's probably the least correlated here, XLE, XLU.
Yes. I was just kind of looking at the prices of them, XLE and XLU. So they have like a 20 Ivy rank. So I know this says when the rank is down on everything else, kind of to look at some of these. But if you're looking at them, these utilities, like I'm trying to think of give me a utility. I can't think of one. I was going to look at the IVR over that. But so nonetheless, that's what they're saying. So you're right. You can kind of take a look. If you don't want to be in an individual product, you can sell strangles in both of these because they're not that heavily correlated, right?
Even XLE, XLV, XLV, XLE, XLU, there's a handful of these you can find that aren't that correlated, and you can sell some premium and have some positions on if you can't find things to do in the general market because the VIX is too low everywhere else to be trading individual stocks.
You see the SPOOs are down 30? We'll jump back in there. SPOOs down, NASDAQ, everything is red right now. Everything across the board is red, which is crazy. Okay, back on. Next.
And I'll get to this, but just a side note. So it's interesting. So we're doing the morning show, and our show is usually 10 to 11, which is great. We're trading in our own accounts before our show starts. I don't know how Tom and Tony the traders at heart, and I know Tom trades during the morning show. And so I guess, it's driving me crazy that I haven't been in my own personal account to get in there today.
Well, he trades in his own personal account. So that's we're trading in a show account. So it's completely different. Like he's already been trading at 8:30. I'm just wondering what they're doing right now at Work by 11 in San Francisco because I wonder.
Well, they're doing their live trades, but you know what? It's only 7:30 there, so it didn't start yet.
Yeah, it didn't start yet. So, they're hunkered down in the corner, not talking to anybody in their own computers. I'm just kidding. They're probably shaking hands. Okay. The 5 primary holdings within each ETF demonstrate an average cross correlation of 0.27, weak to moderate level, consistent with their parent ETF relationships. The level supports effective diversification when constructing multi-sector portfolios.
Yeah, great. Okay. So, and you talked about XLU. Here you can see the 5 primary holdings: NEE, CEG, SO, DUK, VST. When you asked me to come up with
I couldn't have come up with those if you paid me. That's what I'm saying. Give me a utility. I couldn't come up with one of them.
What are the top holdings of XLU? No idea.
Any of the other ones I could have, right? When you're looking at this, XLE, I could have named some energy technologies. I could have named those. XLF, I could have named those. So any of those, and I ask you for the utilities. It's NEE, of course. I never would have said that.
CEG, don't you remember?
That is interesting that those they do have a kind of consistent relationship with these.
Yeah. Well, it says though consistent with their parent ETF relationships, this correlation level. Okay. Yeah, I think that's good. Again, VIX is low. Trade the ETFs instead of the individual companies.
Well, it doesn't say VIX. It says when individual products IVR is low.
AVGO. I wonder how much AVGO is boosting XLK today.
Oh, well, let's see if it's still up. Hold on. We can go to the next one while I'm looking at that.
But are the other ones falling enough to offset it?
AVGO is only up 10%. It was up almost 20.
Yeah.
Okay, so let's go to the next slide. Oh,
now let's examine the 45 DTE 16 Delta Strangles performance.
It's so funny because I was like, this is the easiest one to read. Let me jump in on that one. Okay. Both ETFs and their constituent holdings exceeded the 68% theoretical success threshold. The success rates were similar across all sectors, ranging from 72 to 84. So this is the 16. So let's go back. That last slide, we don't have to go back, but that last slide was 16 Delta Strangles in all of these. And these are the results, okay? So between the ETF and the stock holdings. So they're pretty consistent.
Yeah, it's similar.
With their number one holding, it's very similar.
It is similar. It's so.
It's similar, but everything but healthcare. Oh no, never mind. And utilities. I was going to say the ETF slightly beats its number one constituent. I like using the word constituent.
All right, and the slide 8, please, John. Technology sector results align with historical patterns, showing modestly lower success rates compared to other sectors. This happens because tech stocks have high volatility and have moved mostly upward over the past decade. We next analyze how success rates correlate with option premium relative to underlying asset prices.
Ooh, now we're getting into it. All right, next slide. So premiums levels show weak relationship with strategy success. Rates. ETF performance remains stable across sectors and mostly matches or outperforms SPY. Okay.
Okay.
Success rate of the energy versus the stock.
Well, and here we're talking about the premium level. How much premium is in those strangles.
So look at the financials. The financials has a 5.9% premium, and it's got the highest success rate.
So you're getting the most bang for your buck in those options?
In the options, yes. It looks like you are. In the ETF, right?
Right. ETF performance remains stable across sectors, mostly matches or outperforms SPY. But here, in all these scenarios, you've got a high success rate. This is 16 delta strangles. So here, what does this tell you? The 16 delta strangles have a high success rate. And we saw in the previous slide, it still had a high success rate if you're doing the stocks or doing these ETFs. But I've seen previous market measures saying you're better off trading individuals. Like when the market falls and the vol rises, I think if they're testing the opposite, when the market falls and the vol rises, you see much better results on individual products than ETFs.
Right. And I think that the one that we're kind of mixing up it was about VIX levels. This is about IVR of individual products of its major constituents. When the IVR of the constituents are down, go into the basket, right?
Yeah. Okay, good. This was good. Last slide.
This is going to be the takeaways, right? Okay. Correlations between sector ETFs remain low to moderate over long-term periods. We saw that, providing diversification benefits for multi-sector portfolios. And sometimes it's easier if you don't want to jump into like a main person, like a main name, just go to a basket because it will smooth out the deltas.
Premium levels demonstrate minimal correlation with success rates, suggesting that sector selection based on volatility pricing may be less critical than sector fundamentals for strangle performance.
Okay, that's good. So so you can just, if you want to be an AVGO, just jump into, and I'm using that one just because it's topical today, you can go into the technology sector.
Yeah, end it. Bring us home, Liz.
ETF strangle strategies across all sectors and their major holdings exceed theoretical performance expectations comparable to SPY.
Excellent. So thank you to our research team for another great market measure. Now I'm anxious to pop into the platform and see what's going on. Now, was there another? We're also going to pop in.
Well, we're going to take a quick break.
Quick break.
Because I have to go back to sharing. So we're going to take a quick 90-second break and we'll pop back in the platform. So stay tuned.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Hello, everybody. We are back. We were very excited to jump back in the platform. Look at this, Jenny Andrews. Let's jump right in the platform so everybody can see what we're looking at. SPOOs are down 35.70, 35.50, 35.75. This is the lowest I've seen them.
Now go to the SPY and go to a minute chart, and we can see the turnaround. We can see the and it'll, if you go to the day and minute, we can watch as the numbers first came out. The yeah, you put that to a day. Oh yeah, well there you go, 1 minute. So
no, these are days. I don't want.
Oh no, yeah, you've got it. You got it. That's got to go to a minute. This one's got to go to a minute.
There we go. 1
minute. And then then you're on 1 month. That's fine. And just go to today.
This is so here you go. This is 7:30. We open at 8:30. This is about right. We open at 8:30. The number came out at 7:30. We got the
And you
pop.
can see how we got that blip down. Like at that point, SPOOs went from up 3 and then they dropped down. And now we're much lower than we were when we had the initial drop down when the number came out.
And so take a look at this. The high point of the day was right around, 8:50, just before 9 a.m. Just when we put our SPX on, because it was not 9 o'clock yet. They always say wait till 9. If you waited until 9, you'd still be screwed.
So I know when we were doing fast markets, we were just saying every trade we put on fast market is a loser right now, pretty much. But they were mostly either premium on both sides. They were strangles or naked puts or had some kind of naked put component in them, or bullish trades, and so they're all almost losers. But when the SPX trade came up on fast market, I looked at my clock and I said it's 8:54. Is almost 9. So it was 8:54 when we put on our SPX trade that we were looking at, selling the 0 DTEs, and we're pretty far from it now. Pretty far from it.
You are pretty far from it. I mean, we're not, it's not.
It's not crazy, but.
No. So I will say too, and we were kind of talking about that. If you're selling premium, which we were, in a lot of the things with fast market, we were selling premium. When we were looking at the VIX this morning, it was in the 14 handle. Now
SPOOs were up 25, 27.
Yeah, look at this. So we were looking at, and it was right here. Look at the VIX popped up just pretty high, but we were in the 14 handle when we were looking at it this morning, even before the open. We were looking at the VIX right here. And then take a look at this. This is, I kind of like this minute chart. It's fun.
I know, just watching as we had the move from the day. And honestly, I mean, you think about it, the expected move for the day was 38 for the day. And we could close the day within that expected move, because even though we've had a 60-point range, because we were in from up 30 to down 30, so we've had a 60-point range, but the expected move from the open to the close was only about 38, and we may still land in that range.
And that was, hold on, that was SPX. So I'm going to do that same thing here, because that's what we were looking at, was the SPX. When we were looking at it was 36 or 38, depending. One was SPOOs were 36, one was 38, something like that. And to your point, you've got 65, 30. Well, this is 90 points move.
No, we're down 38. So SPX is down 38. I'm just saying I'm not saying from where we for the day, from yesterday's close to today, it said 38 was the expected move. So if we're down 38, that's the expected move on the day.
And we are down 38 right now because this was yesterday's close.
Yeah.
So don't mess with the odds makers that we call the market, because they're usually not accurate, right?
And so we were up the expected move and down the expected move, but we've had a big range in the middle of the day. We've had the 60-point range.
So what really kills me is the VIX. So that, we were looking at it earlier. So that's why we thought the rally was going to hold, because the VIX was down the 14 handle.
Yeah.
And up 8%. That's not
a surprise. I think this little bit of a down move is a surprise. Are we going to stay here all day? Are we going to go further? I don't know. I don't know.
Jamal's right. So the bonds are still in the 16 handle.
That's what I wanted to know. Like, did the bonds move at all? No, they're still 116.11.
No, look at this. So this was, the number came out at 8 o'clock and they stayed right here.
Oh, 7:30. Go back to 7:30. You see that jump. Yeah.
But then they stayed. They never moved. Like, they're not getting a reversal like we did with the other things.
Right.
Jenny, I'm telling you, I think I'm a 1 minute, 1 day chart person now. I really like it.
Especially when we get this kind of movement. I mean, some days, Liz, it's going to just look like nothing, where there's nothing going on. But when we've got,
wasn't it Jackie who said you got to let it shake out? I don't think it ever shook out.
I hope Jamal did what I said when I said buy back your short put of your put spread, so you'll just have that long.
Yeah, no kidding, because then he'd be in great shape.
Yeah,
buy back for a couple pennies when it's like that, when you are long.
Right, when screws are up 30, when he had a 0 DT, when he put on a 0 DT iron condor yesterday for today, and when we were up 30, he could have gone and bought that short put back probably for, I don't know.
Wait, hold on. I just want to be clear, because I'm just going to do it for this one. He bought it, the iron condor. He
bought it.
Yeah, so that's why when you're saying it's kind of like reversed to what we usually do. He bought it, so he would be. Did he do the iron fly or iron condor?
He bought an iron condor. So like here, if he bought, like let's say $20 wide.
Yeah,
so
like a 38 delta. So he's buying this one and selling this one.
So then when we were up so much, and Vol's gone up now. So when we were up so much, and that his short put of his put spread
down here, this one.
Yeah, the short put of his put spread. Now you're in the 3 days, so there's a lot more premium in it.
Well, and I have to, because if he did it last night for today's move, that's the only reason I went to the 3 day. We can go to the 0 DT to keep it kind of apples.
But I just said, like, when we were up 30, the long put of his put spread was probably very cheap.
So if we down here, if you were going to buy this,
I mean, I guess it's still more expensive than I expected.
That's what I'm saying. It's kind of crazy. They're keeping their wings up. So if you were going to take a look at this, I don't know where his put would have been, but
it would have been more expensive than I thought.
Look at how expensive these still are, which leads me to believe. Let's take a look if there's call skew or put skew.
But we're also getting a boost in vol, right? Or earlier VIX was 14 something. Now we're 16.
So, and let's see if there's call skew or put skew. I'm just going to go, let's go. What do we had here?
So it's just go $20 up, $20 down. So 64.80 is $7, almost $8, and it's 40. There's a little put skew.
Yeah, a tiny bit of put skew, but I mean that this does have wider markets. You're looking at 64.58, 64.63, so you're kind of in the middle. That's what I'm saying. I consider this pretty symmetrical skew.
Right. It's like pretty normal.
It's not glaringly obvious put skew or call skew. Right.
Down 40, going from up 30 to down 40, I would expect to see some put skew.
Would. It's so funny. Chris and Ilya are both going to be happy today, because Chris wanted it up, Ilya wanted it down, and everyone's a winner, depending on what you did with it.
I mean, you're not happy if you didn't do anything with it this morning. Like, if you didn't do anything with your bullish trades this morning when we were up, you're not happy now. You wish you would have done something.
I closed my AVGO, but that's still up.
I didn't really do anything because I have not. I know I've just been paying very close attention to the show.
Yeah, good job. I was trading the entire time I was doing this show, but no one could you tell?
No, Liz, no. I did not.
SPX. I want to take a look at our SPX and see how far away we are, because take a look at this.
It's very far away.
It's far, but it's still. Take a look at this, Jenny. Kind of to your point, it's far, but take a look at this. The long. It's still worth 80 cents.
But you could buy that call spread back for 20 cents. I don't know but I don't know that makes. I don't know. Oh, it's not worth it. Not 40 cents.
That's not worth it. We only have $125 in risk in this. What do we get it for? We have $112 in risk. We got it for $865. That's all the risk there is in it.
Yeah. I mean, there's nothing we could do but leave it, but I doubt that's coming back, honestly. Like, if I had bigger risk, and it's hard to say what we're going to do by the end of the day, but if I had wider iron condors, I might be rolling down some calls, trying to make some adjustments.
Possibly, right. Oh, no, I think I would be too if I had white iron condors. I don't think we have anything to do in here. I'm just going to try to take some baby profits while we can. So we're looking at
That was just someone who wanted to get long. We bought a call.
We bought a call. We're going to get out of that. Okay.
And then Rivian, we could probably take up our Rivian.
Where is Rivian? Oh, here we go. Oh, yeah, we'll take off Rivian. It's a short put, right? We got 42%.
Yeah, sure. Take that off.
Take a little bit of profits off the table. That CDE, it doesn't matter if we close it or not close it, but I do want to, I'd kind of like to take the $100.
Yeah, sure. Take that off. What else? Let's look at IWM. Are we coming? We're still been so far. Remember, we said we had to drop so much to get back to the center of our IWM butterfly. We still have.
We butterflied it off, so there's no risk in it, right? So this is what we're looking at.
Oh no, that was the butterfly we actually paid for.
Okay, so here IWM is 235. I mean, that's not that crazy. Let's take a look at on the trade page so we can look at actual probabilities.
Oh, it might. I mean, we've got 14 days for it to come back into that.
Look at this. Our long is at the expected move for the cycle. Now, if we're gonna go old school on this, Jenny, I know you know the answer, but I'm gonna give you a quiz. So the 227 level, you're looking at it right now. At the 227 put, it's trading 167 at 168, very tight market. What is the probability of IWM touching 227 at some point in the next 14 days?
46%, Liz, 46%.
You'll get a gold star. And how did you get to that number, Jenny Andrews?
So you take the delta, and we talked about delta a little bit Wednesday when we had Jacob's study in the SPX pit. But the delta 23, you can look at that as probability. So 23% probability that put will be in the money at expiration. You double that to 46% probability that IWM could touch that 227 level between now and expiration. And this is just a 14-day.
True. So good job. You get a gold star. And then
when we put this on, Liz, we bought that butterfly, and to pay for it, we sold the strangle in IWM. And the reason the strangle's gone is because it was using up too much buying power. But I'm glad we did take that off because it would have blown through our short calls.
Thank the Lord that strangle's gone, because otherwise that'd be a bigger hit in there.
Problem than it is.
I wanted to bring this up because we were talking to our buddy from the Seabone, Nishank one the other day, and he was saying by the end of the year, we were just kind of joking where we thought by the end of the year what price SPX would end up, and we were giving him the probabilities, and I was using the deltas as the probability of it getting there.
Yeah.
Right. So I mean, I think he said 50. What did he say? 57.
67.
I'm sorry, 67. Yeah, with the 37%. He said 67.
Yeah. Do you want to pop into Twitter just to see if we've got any tweets to get to? I know a couple people posted their cute little dogs.
I do. So let's pop into Twitter and see what's
already 10 to 10. So we don't have. Look at those cuties.
I know. It was cute because you posted Clarence, skinny Clarence, by the way. Skinny Clarence.
His head and his bows, they put he's got like a bandana on. Somehow it's all like camouflaging his little overweight body.
You just matched your dog to your outfit today. You always have a matching scarf with your light green. He looks so little. I was like, this could never hurt your back. He looks like he's 6 pounds.
He does look little, but no, he's 23 pounds.
Oh my goodness. He's 23 pounds?
Yeah.
Yeah, Will's only 18. Okay, and then look at these two cuties. That's why they did this. So Frank met these two beauties in the True Value parking lot. Oh, that's so cute.
It's super cute.
Jackie thinks.
What does Jackie say? Jenny should buy the Powerball. The god of gambling will bless Jenny. Go. Okay, Jackie. Yeah, I'll go buy. Liz has her Powerball ticket. I'll go get one too.
I've got my Powerball tickets. Jenny, on air, I will tell you that if I win the Powerball, I will pay off all your mortgages. Yep.
Don't start making promises you can't keep.
I win the power. If I win, I better give you more than that. If I win $1.7 billion.
Any one of us wins the Powerball, nobody's ever going to know, and we're going to be hiding out, or you'll be like kidnapped for ransom, murdered, stolen. All your money's stolen. Like I think when people win a large sum of money, they have to just be in hiding.
I don't want to win it. I'm going to return my tickets. Okay, and Ajit comes in, and we love this, Ajit. Thank you very much. Names with the highest IVR, IVP, and IV this AM. Okay, so we've got Adobe. AVAVA, don't know what that is. BE is Bloom Energy. GIS is that's General Mills.
Gilead Sciences?
I thought it was General Mills, isn't it?
Oh, maybe.
And then Oracle, but we'll see. So let's see. So, and then CC. calendars into earnings work out very well, and then looking for the crush or expansion thereafter. Either way, I've got a top secret, tasty way. I love
Top
it.
secret. I love that. Super secret. What movie is that from? Where it's like
more sugar.
Super secret. I can't think of it. I'll have to think about it. I'll bring it back next week.
Okay, that's a good recall. Okay, so thank you very much, Jeet. I think we got to everybody on Twitter. It's not normally our live show. And when you were in the middle,
and lucky for some of the people who got their trades off, like Jackie. Oh no, that was over 21 hours ago.
Yeah,
I think
this was a long time ago. What you were asking me when we were talking about this, was there another number? And my go-to move, Jenny, and I don't know if I told you when we were, because it was in the break, I was like, no, there was not another number. And you know how I know that? I went straight to Frank the Great's.
Yeah. Yeah, so we just turn around out of nowhere. Why don't you pop into TastyFX and look at some of the currency moves?
Ooh, that's a good call. Okay, so let's take a look. This has got to be killing. What's his name because he's in San Francisco with the boys.
Chris.
Not Chris.
Leah?
No, our FX guy.
Oh, Glenn. Let's see. So click on like USD, here's Euro USD, and hit the trade page to see the chart, to see what's moving and shit. You got to just hit trade.
Euro USD.
Well, yeah, we're on it. Like Euro USD, we're on it. Now you just hit trade. So then here we can see the move. So little blip up, meaning euro got a little stronger compared to the dollar. The dollar got a little weaker, euro got a little stronger, but whatever's in front, like euro is in front. So if the chart's going up, the euro is getting stronger.
So I had seen that the dollar was getting, and I had heard from another network that the dollar was getting whacked.
Let's look at, and go back to watch list. Let's take a look at like USD JPY against what the dollar versus yen is doing.
Nothing. I mean, I don't consider this a big move. Do you?
No, I mean, look, we're right back to where it was a couple days ago.
Yeah.
And so here's the opposite, where this chart is going down, but you see USD is first, like US dollar is going down, it's getting hit, so the chart's going down.
So the chart's going down. I kind of like that. Whatever's first is happening. Like who's ever the top dog, whatever's happening here, that means US dollar is going down. That's a good rule of thumb. So it's not too crazy in here, and our positions here have not done much. We're still down in everything.
No, we only have 2 positions on.
They're very small. We still have our shekel position in.
Which isn't going to help us that the dollar's down. Like that's going to be worse for us with the dollar down. And then our other one isn't a dollar position at all. It's a euro pound.
Yes. That is the euro.
It's only down 34. It seems to be settling down. We're not getting. I didn't know if it'd be like down 30, down 40, down 50, down 60, down 70.
Look at the V bottom.
That's the minute chart, Liz. That's the minute chart.
I love the power of the minute chart is amazing.
Yeah.
Somebody just came to join me. Can you see him?
Oh, look at Will Ferrell.
Showing their dog. I had to. Okay, you can get down now. But he just came up like he needed something. I said V bottom.
He was mad his picture wasn't represented on Twitter. He was like, "Where's my picture, Liz?"
That's what he said. That's what he's thinking. He's like, all these other dogs are being shown. He put his paw on my leg. He's like, let me up. So do you think this is the beginning? So now down 34. Here we go.
I don't know. I don't know what to think.
I don't know what to think either. I mean, I do think during our show, which is going, no, it's not the show we're in right now, but I do think during our live show is when the European markets close. And sometimes we get a little pop. And we've done this before. And we used to do, around 10 o'clock, around 10:10, you sometimes will get a little bit of a pop because the study was there are more 5-minute up bars than there are 5-minute down bars. I don't know on a day like today.
5-minute up periods, then 5-minute down periods after like 10.
Yeah.
I don't know. As far as like new trades go, I did get long fig yesterday. I did. Just it's down $2 today, but maybe it's down more right now. But I did get long fig yesterday, so now I'm in this.
And here's your days. Here's how fig worked out today for you.
Well, I put it on yesterday.
No, I know, but I'm still in the day chart. So here's how your day looked, Jenny.
And the day chart.
Here's how your day started. So yeah, you got long fig. I actually did a bullish AVGO position, but that was like an older one that I just altered. But
the DocuSign's still up because I know we got out of our DocuSign, but I've been keeping my DocuSign going, and it was up $5. I didn't know if it made a turnaround, so it's still up.
It didn't. It's still up. Let's see if what goes up comes down and Lulu's up. Nope, still down.
Still down. Still down.
Still down. And there's no earnings. Today's a Friday, so there's not going to be any earnings today. Well, typically there's not. There might be something a company's trying to cover something, but nothing that we usually will have.
I know that we don't have our show, the Liz and Jenny show, coming on after this, but I wanted to say that the Rising Star that's coming up is great. So there's a Rising Star show coming on, and if you didn't see it this weekend, keep watching because it's really good.
So, and it aired on the network. It aired right after First Call on Sunday night, and it aired on YouTube on Saturday. And it caught my eye on YouTube because it's an 18-year-old trader named Anthony. So that's why I think when it first launched on YouTube, there's only 6 people watching it, and I was one of the 6. So it's a really good rising star because I'm very tuned into 18-year-olds nowadays.
Hey, when you said it caught my eye because there's an 18-year-old trader named Anthony, I didn't know if the Anthony part caught your attention or the 18-year-old.
18-year-old. They did a snippet of it, but like the prequel of it, I don't even know where I saw that from. When he's like, you're 18 years old, and I think maybe it was Tom was talking about it. And that's why I was looking for it. So his dad gave him money to trade and he lost it all. So his dad gave him, I'm making up the amount, so I could be wrong on this. Don't quote me. His dad gave him, I want to say like $2,000 or something to trade. And he lost it all really quickly. And he's like, I need some more money. And the dad's like, no way. So he had to work and then he made $2,000. And from the money he worked with is how he wound up like making all of his money trading. So I thought the big difference is when you're handed it, you're not going to like it as much as when you have to make the money yourself.
Well, it's a good story, and everyone should tune in. Don't miss it. It's a great rising star piece. Well, the first thing I thought of today when Lily, what we were saying, happy birthday, and she's 17, is that 1 year from today, she gets her trading account. So that's what Liz and I have been doing for our kids. Turn 18, they get their trading account. And so next May, Annabelle will get hers. A year from today, Lily will get hers, and I'm very excited for it.
It's usually like 1 year because I tried to open it up to give it to them on their 18th birthday. It's usually 1 year and a week because you have to go.
I have my coffee mug. Do you remember this rising star?
Oh, yes. Yes.
So I have this coffee mug. He was a rising star. I want to say he started with $25,000 and turned his first year of trading, turned $25,000 into $50,000, and then used that $25,000 and made this beer company, Xena Brewing, and he gave us all mugs, and I used mine for coffee, and he was one of our first rising stars.
You're just trying to tell everybody you're not drinking a morning brew. I use mine for coffee. I promise. There's no beer in here. I can't imagine you drinking a beer in the morning. Okay, let's pop one quick thing and then we're done for the day. I just want to pop in so Jenny can see.
It's down 50.
I know. That's what I was going to show you. The V bottom, it's over. So you could say the V bottom is over, and now we are hitting all-time lows right here. We're going down a little bit more. So
today could get ugly. Let's check on our UVXY. Is our UVXY making any kind of comeback?
No, this thing kills me. Let's take a look at it. What do we have? A 16?
Yeah, we've got a long way to go.
A long way to go. All right, Jenny, happy birthday to Lily. Annabelle and I we're going to try to take her out. I want to get the schedule, but we know what we're going to get her for her birthday. So.
Oh, that's sweet. She is like so busy. She doesn't have any free time until October when golf season ends. Because now she's doing golf and dance, which is insane.
And that's fine. We understand the busyness, but we're locked and loaded and ready to take her out. All right. Enjoy the birthday weekend. Everybody out there, good luck with this market.
Remember to trade. Well, we'll close it our way. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny in the morning. Liz and Jenny, good morning. Can we get a new theme song, John?
Enjoy the rest of your day, everybody.
Hello, everybody. We're back again. This is going to be a fun episode today. We're going to do a future store. Anthony in the house. How are you?
I'm good. How are you?
I'm good.
That's good.
I'm excited you came up here. You're a Florida boy?
Yep, all the way from Panama City. So we're very excited to be here in Chicago with y'all.
I'm glad you came in. And we haven't done a future store segment in quite some time. And I love these because there are some kids that
I had their first interview when they were 12, 9.
Yeah, pretty young.
15, 16 over the years. And they're all still trading.
Right.
They're all still trading. So the good news is you're doing this at an age when you're probably like one in a tiny handful of kids in your school.
Yeah.
How many kids go to your school?
Probably around like 200 now, maybe 300, because school's still growing because it's so new.
Oh.
But yeah, so very, very small amount, and even smaller that have even looked into investing. So
Sure. And you're going into 11th grade.
yes, I am.
Got it.
Junior.
If I was to say, hey, what's your favorite like what do you excel at?
I'd say I really excel at math. I like math. Yeah.
And that like this is like at Tasty and really for trading, it's just a big math game.
Yeah, exactly.
Everything we do is pure quantitative probabilities.
Right.
That's
pure numbers. That's
pure
why
numbers.
I think I was able to fit in so well with this, because it was numbers, and I'm used to that.
It's just a crazy numbers game, and it doesn't. In the world of like stocks and futures and any other kind of like asset, let's say, it's very black and white. Like if it goes up, you make money, and if it goes down, you lose money.
Yeah.
That's it. In the world of trading, it's completely different. It's all
Right.
strategic, so it is all numbers.
Yeah.
And all the numbers are kind of you can back into probabilities.
Yeah, exactly. And I really like how you can still make money if you're wrong, but you can also lose money if you're right. So you can make money and
That's my line.
Yeah.
Use that line like
Yes,
other ties.
yes, I've heard that a lot.
Yeah.
Right, but yeah, you can make money in bullish markets, standing markets, and even bearish markets. So it's very nice.
How long have you been following the stock market?
Probably around a year and a half now, maybe 2 years.
Yeah.
So
Are there certain companies you like, or do you care what you trade at this point, or is it just?
Well, normally I like to stick to tech and companies that I hear about, like Chipotle, Intel, things like that. So bigger companies, more liquid too, and so yeah.
Just companies that you recognize.
Yeah, exactly.
Yeah.
Right.
Do you trade any indexes or anything like that?
Sometimes the S&P 500, but no, not too many indexes.
Okay, so you're going into 11th grade. You started trading maybe like halfway through your 9th grade, and then all the way through 10th grade.
Right. Yeah.
Okay, a friend of your parents got you involved.
Right. Right.
Okay, and he's a trader.
Yes, he is a big time trader.
And he talked you into it.
Yeah, he basically talked me into.
What kind of psychopath talks a 16-year-old, a 15-year-old kid into trading?
A very persuasive psychopath. I'll tell you that.
Okay.
A very persuasive one.
All right, that's good. So very persuasive psychopath talks you into starting to trade when you're 15 years old, which I actually love. And do you remember do you remember going to your dad and saying, because you didn't have any money, right?
Right, yeah, I had no money at the time. I couldn't even get a job.
Okay, well, yeah, I mean, you're 14, 15.
Right.
And you went to your dad and you asked for what?
So I basically, I asked him for some money to get to trading with, and he had told me that if I was able to show that I was actually, willing to commit to this and to do the research, that he would give me some money to start off with.
Because I'm not sure if my 14-year-old son or 15-year-old son, who hasn't at that point even learned to hit the toilet, when I would be confident in giving him money. So I got to give your dad some kudos, because I'm not sure that I would have done that with my own son.
He was not confident either. In fact, he told me, he was like, "Son, I know that you're going to lose this money," because with any kind of market, only like 5%, I think it is, of traders are actually profitable throughout the year. So
it depends on the statistics. Vary with it could be as much as 40%, 45%. It could be as much as 5%. Depends on product, style, everything like that.
That's true.
How much money did you ask for?
Well, I asked for around 3,000, because I saw that was really like the baseline, right? Basically the minimum to get into trading. And so he said, "Son, I know you're going to lose this money, but I want you to go into this being able to learn from the kinds of strategies you do, and to be able to really pick up from this." Because he said the goal for me was to not try and make money, but it was to try and learn really it was that I was doing, right, in trading. So
you got a good dad. And
Yeah.
he believes in you,
Yes.
because I'm not
Yes.
sure I would have done that with either of my kids, and they're both pretty successful now. But I don't know. I don't know if I would have done that. So he gives you 3,000. Now you're like, you're obviously trading in his account, but he gives you a couple thousand trade. He doesn't trade.
Right. He does not trade.
Does your mom trade?
My mom doesn't trade either.
Okay.
No.
So you're on your own.
Right.
You got this. You got this one friend of your dad.
Right. One mentor that's giving me, decent advice, but nobody in my family trades.
Right. Okay. And giving you some decent advice, and you can obviously reach out to him by email or call him if you have any questions.
Yeah.
So but you're still pretty much on your own.
Yeah.
What's your first trade?
My first trade, I think, was an Iron Condor on Meta for their earnings, because I dropped in around earnings.
Oh, so you went straight into the heavy stuff.
Straight into it.
You do a Meta earnings trade.
Yeah.
And did Meta blow up either way? Was it a crazy?
It did actually blow up. Yeah. So my first trade was
a full loser.
Yeah, pretty much.
Got it.
Full on loser.
Full on loser. Then you're like, oh, this isn't as easy as I thought it was going to be.
Yeah, it was very rough on me.
Okay. Before I get into a lot of the fun stuff, how long did the $3,000 last you?
It lasted probably around, I want to say, 6 months, maybe.
That's not bad.
Oh yeah, it lasted
6 months, and then you blew up the account.
Yeah, and then I just blew it up.
As you were in the process of blowing it up, you kind of realized that you were blowing it up.
Yeah, pretty much.
At some point, you probably doubled up to catch up.
Yes, I was
All the classic mistakes.
Yep, exactly. I was panicking. I was like, I need to get out of this. I can't be I was worried about letting my dad down, even though he had told me he knew I was going to lose all the money.
Now, was he tracking you this whole time?
He would ask me how I was doing. Every week or so.
He didn't actually look at the account.
No, not really.
No,
He didn't.
so he's just asking how you're doing.
Yeah, exactly.
And are you trading all the time?
Yeah, around like once, twice a day, couple more. Yeah, more or less.
So you're making a lot of trades. You're learning.
Yeah.
But you're not doing very well, and you're
no.
And you realize that you're in trouble.
Yeah, exactly.
At what point, after you kind of blew up, did you let your dad know that you blew up?
It took a lot longer than the day it happened. I'll tell you that. It was probably maybe a week after, because I was so worried about it.
But you came clean.
Yeah, I did come clean. He did find out eventually, and it wasn't by looking at the account. I told him. So,
when my son was growing up, and he scratched my car, a nice car.
A nice car.
Yeah, and he scratched it whole side, and came home. I saw my car, and I'm like, and I didn't see the scratch for a couple of days. And I said, "How'd this happen?" He goes, I don't know. Somebody did it while I was parked, and I'm like, and he totally
negated from himself.
Totally. When he gave the commencement speech to his graduation, and he copped to it in front of everybody. He goes,
Wow.
Dad, I scratched your
At the
car.
graduation.
So anyway, it took him 2 years.
Oh wow.
So a week's not bad.
Yeah.
Okay, so you tell him, okay, and what does your dad say to you?
He said he wasn't surprised. He knew it was gonna happen. So, but
he probably said cheap lesson.
Yeah. It was. He said it was a good lesson that I learned, but that he wouldn't help with funding me anymore, because he had looked at the kind of poor decisions that I was making towards the end. With trying to catch up, and because somewhere during that period he said if I was able to actually prove that I could
prove concept.
Yeah, prove concept, that he would try funding me a little bit more, and this was basically proof to him that I wasn't capable of holding on to it. And so I felt super defeated. I was like, darn,
Are you competitive?
Yeah, I'm a very competitive person, actually. So this was a really sad moment.
You do what kind of sports?
I do jiu-jitsu. So
I don't know a lot about jiu-jitsu, but do you have?
It's like a physical chess, sort of, in a way. And
so do you fight other people?
Yes. So you spar people, and there's all these different kinds of positions, and I kind of like to think of it as the physical chess, because there are situations in which the opponent is up against you, even though you might have not totally lost. They're up, you have an advantage up on them, and so it's it's a very competitive sport, and it's not really team-based.
So you're super competitive.
Yeah.
So now you're mad.
Yeah, I'm very mad. And so,
how about your friends? Do they think you're crazy?
My friends think I'm crazy. Yes, they were like, this. We knew this was gonna happen. You know, like you, you like this couldn't. They were basically telling me that this was proof that it was basically just gambling. You know?
Did your dad's buddy offer to back you, to fund you?
Not necessarily, and I didn't want to go to him for backing because.
But you still like trading.
Yes,
You're
yes,
just
very
you're just
much
mad
like-
that you weren't
yeah,
successful.
Right. This is a defeat.
So your dad says to you, if you want to trade, get a job.
Yeah. Well, I came to that on my own.
Okay.
But yeah, he had said that the account is still, you know, you can still manage the or not, you can still manage the account, and so I thought to myself, you know, I'm gonna go in January, I'm gonna get a job, right? Because that's when restaurants pick up. And so I went to my my local pizzeria.
You're 15.
Yeah, I'm 15 at this time. So you know, I wasn't.
You work at 15? I guess so. Yeah.
You can, but it's a lot more difficult than 16, right? Because you don't have a car that you can really drive to work.
Oh, how far do you live from the pizzeria?
I mean, at the time, it's like a golf cart ride because it's right outside the community I'm at. So it was perfect that they picked me up. So, but yeah, so I drove my golf cart there probably around April of this year.
By the way, only in Florida can you drive a golf cart to work. Okay, in Chicago, that doesn't.
It would not work around here, not in this city.
You can't drive a golf cart. Nobody does that here.
Yeah.
Yeah.
So I guess it was good that we lived in Florida, or we live in Florida.
So you drive a golf cart to the pizzeria.
Pizzeria.
How much they paying you?
They pay me around 11, 12 an hour.
So
So
$11 or $12 an hour. That's a lot of hours you got to work.
a whole lot of hours I was working.
You get tips.
Yeah, and I'll tell you, since there's a cap on how much you can work during the school year, it was not fun. It was really tedious.
How much money did you make?
Over the next couple months, I made around 3,000, 3,500 probably.
3,000. You saved it all.
I tried to save as much as I could. So
That's impressive.
yeah, I mean, I was surprised with myself.
And you put it back into your account.
Yes, I came to my dad with the bills in my hand, right? I withdrew from the bank. I told him, Dad, I want to put this back into my account.
And what did he say?
He said, go on right ahead, son. And so he took the money and he transferred it into my account. So I was back to where I was before.
That's pretty cool.
Yeah.
Yeah, that's cool. So now you're back to your $3,000 account.
Yeah.
And now you're trading like smarter.
Yeah, I came in with it. I was in the same spot, but I had a lot more knowledge than I did before. So, you know, I was able to trade a lot more logically than before, and eventually I was able to before I had deposited the next 1,000 in, I was able to make around 1,000 on the 3,000 I had deposited.
Oh, that's nice.
Yeah, very nice.
So you'd figured something out.
Yeah,
You became more mechanical.
Yes, a lot more mechanical.
Now,
than I was.
what kind of strategies? I mean, small accounts. You're not doing anything naked, right?
Yeah, yeah.
So you're mostly trading what? Verticals, spreads?
Yeah, yeah. Iron condors, bull puts, sometimes bear calls, but yeah, mostly debit. So, or credit.
Mostly credit
Yeah,
spreads.
credit
Mostly like you're selling put spreads.
Yeah, yeah, exactly.
Okay. And sometimes you're doing both sides.
Yeah, yeah, sometimes.
Okay. And what kind of stocks you using or index? Same thing, tech stocks?
Yeah, primarily tech. You know, things that had like a lot of volume in it, and that I knew about pretty well. You know, like Chipotle, Intel, things like that. So pretty well known.
And you're still doing this kind of on your own. I mean, you don't have your friends.
Yeah, exactly.
None of your friends are sitting by your side.
No, not exactly. After seeing what had happened last year.
Okay.
So
somehow you got your account up to like $8,000.
Yes.
How'd you do that? Did
So-
your dad give you more money?
No, my dad did not give me more money. He promised me he was not going to put anything else in.
So how'd you get the account up to $8,000?
I kept working.
Okay.
Of course.
And you kept putting the money from working.
Yes, I kept putting
the account.
as much money as I could into into the account, but in $1,000 increments, so I could still keep track of how much I had made from trading. And so yeah, I basically deposited over time, and now I'm sitting at around 10,000. So plus profits and deposits.
So the cool thing about this story is that in the last year, you're up about 25% trading.
Yeah.
And which is impressive because it's not easy to trade, you know, to get a $3,000 account, even with adding $1,000 every now and then
Right,
that you're making on your own.
Yeah.
To to 10,000. That's impressive. You happy with that?
I'm pretty happy with how I'm doing. So,
did your dad ever tell you if you get to a certain number, then he'll put more money in?
well, actually, he did tell me that if I had, if I ever wanted to, at around maybe 12,000, or if more, if I wanted to, he would put in the same amount that I had in, so I could have even more buying power and more things to be able to do in the account.
How often do you trade now?
Probably at least like 3-4 times a day now. So I've trade daily.
So you're kind of like a little, like you're more than a future star. You're kind of a future, trading junkie.
Yeah,
At this
you
point.
could put it like that. Yeah.
Yeah, you're never going to be able to stop.
Yeah, I don't think I could ever go back.
Because I started when I was in my early 20s, and I've never looked back. I was a little older than you when I first started, because I didn't even know about. First of all, there was no online.
Yeah, it was all more niche,
Well, we didn't have an internet.
Yeah, exactly.
But it's, once I started, I couldn't stop. So you'll be doing this for the next, 50 years. So in some capacity.
Yeah.
What do you think you want to study when you go to college?
I definitely want to study medicine right now. I want to become hopefully an anesthesiologist.
Oh, nice.
So yeah.
We have a lot of anesthesiologists who are customers here.
Really?
Doctors have a lot of downtime, and they also love trading. So this year, as you get into 11th grade and stuff, I think there'll be a lot more. I think other kids are going to get interested.
Yeah, I've definitely been. Actually, it's a bit surprising. Those same kids that it said you have no chance in this.
Now they're gonna say, "Hey, how do I get in?"
They were asking me. They've been asking me how to get into it. So it's it's been a fun journey. So
yeah. By the way, that's what always happens. We've had some, just to give you some really something to look forward to. One of the kids who I first interviewed as a future star when he was 12 is now running a prop firm in Chicago, and they've been building their own software for 4 years, and now they're running a high frequency prop firm, and it's an amazing operation that they've built, and very successful so far. So and that was, let's see, they got to be 24 now, so that they started 12 years ago.
Wow. Okay.
Same kind of story, except he was 12 when he started, and then started managing his dad's money. Another kid that we interviewed when he was super young, went on to become a full-time trader, working for a prop firm. So there's lots of stories, where this stuff wasn't just like a passing, it just wasn't some phase that you go through.
Yeah.
I mean, it's something where like either they got into the industry, like, you might, as an undergrad, you might study whatever you need to study to go into medicine. And I'm not exactly sure what's required now, but you might take like finance as a minor.
Yeah.
Or math. What we do is really just, some version of calculus.
Yeah.
It's like you can call it whatever you want, but it's all math related. So, and the other thing I think that you're going to notice, and tell me if this is the case so far, like your ability to do two things: take risk and make fast decisions.
Yes.
Do you notice that compared to like your friends?
Yes, I definitely have.
I mean, definitely learn how to take risk.
Right. Yeah. Exactly.
I mean, probably when you first started, you're like, oh man, you're like nervous about the iron condor or whatever it is.
Yeah. Exactly.
Now you're thinking like, it's just.
Yeah, it's it's all mechanical. Right. Exactly. So.
And then how fast do you make decisions now?
I'd say I act on decisions I make pretty quick, but also I assess the risk that's involved. I know that there's going to be risk, but
well, that's the whole thing. You're able to. It's all part of the same process.
Right.
Like,
exactly.
Yeah. It's all the same back of the envelope calculation, but you just do it in your head.
Right. Yeah.
Most people can't do that. I mean, it's a very rare skill for a high school kid to be able to do that. Like most people overthink everything.
Yeah, exactly. So I've learned how to kind of cut most of that noise out and just be able to act on it.
Your stories, like, I don't want to say it's typical because it's cool, but it's also something that I wish there was 100 of you. but there's not.
Right, exactly.
You know, so, but it's a really fun story, and I think you're on your way to something special. So
I really hope so too.
Congrats on your success.
Thank you.
Your 25% return.
Yeah.
And just remember, it's just a start.
Yeah.
Thanks so much.
Thank you.
Hello, everybody. Welcome to This Week in Stocks with my friend and yours, Mr. Jamal Chandler. How you doing, Jamal?
How you doing, ladies? What's going on?
Not too much. Not too much. What are you doing this weekend?
This weekend, I guess, let me see. Saturday, my kid has a football game. That's second game. He was a monster in the first game. I'm not saying that
He's
because
gonna run through everyone. Is he playing up or is he playing people his own age?
he's playing 12U, 12U. And he just turned 13 last week.
Like your hat down because he runs through everybody?
Nah, he can't. Well, that's so the best part about it, and the worst part about it is that he can't really like run the ball because he's so big.
He's got a stripe. Is he a stripe?
Yeah, he's a striper. He's a striper. But the best part about it is that I give him full power to tee off on defense, and he did last week, dude. He had 2 tackles for loss. He had 4 deflected passes from the quarterback because the quarterback was so short, couldn't get it over him. He deflected like 4 passes. He blocked a punt. He had a pretty damn good game.
Oh, pretty good. That's amazing.
Yeah.
For those of you who are new to Tasty, Jamal's kids, he's a pretty big kid. Like I always said, he should play up 2 levels in every sport.
Yeah. So with basketball, he definitely does. He plays up like 2 levels in basketball, and he's going to try out for the basketball team this year. Hopefully that should go well. There's probably a slight chance he could play up there, but I don't think I would want him to. I think when you play on your team, I think it's better to play with like your friends,
I think it's good to play with your friends, but I will tell you, we've talked about this before. We had a real big kid. Growing up with JD, and he always played up 2 levels. He would in basketball, and I mean, he was then as a freshman, he was on varsity, and he was great. But he had to because kids his age just weren't even competition for him, so it almost brought his level down.
Yeah, absolutely. I think for sure with basketball you should, and I think by the time you get to school, you're going to play on the team, like maybe with friends, maybe sometimes a level up, right? When the team play, but in the summers and any other time, you should always play up. Football is a little different. I think it's good to play for him. I think it works to play with his friends because the level of physicality is going to jump up really quick in the next 2 years anyway. It doesn't matter if you're playing with your friends or not. Kids just get stronger. I mean, that's just kind of how it goes. But basketball, skill-wise, you can be better for multiple years with friends, I think, and that's why you should play up for sure.
Yeah, absolutely. Very cool.
What about you guys?
Probably fun. We missed those days of watching the kids play.
Yeah, I know. This is the last hurrah for me. It's gonna be done soon. You never know.
We might show up on the sidelines one day.
Lily was in a golf meet yesterday, so that was fun because I go in a spectator cart and you drive the course and follow them along and watch. So that is quite enjoyable. We never had anyone play golf before, but it's kind of fun.
Yeah, that is kind of fun.
That is pretty cool. Yeah, it is kind of fun. You want to talk about the week?
Sure.
All right, let's pull up some slides. Let's talk about the week. I mean, it really did feel like the week is hanging in balance, and still could be. I know we just had a big number, but well, let's move to the first slide. So that was the thing of the week. We were basically waiting on this non-farm payroll, and it just came out, and it was a weaker number, showing further softness in the labor market. And look, I know it's counterintuitive. It is. I mean, trust me. But basically, we could see that the market was expecting a weak jobs market so that we could have more rate cuts from the Fed. We've already priced in the 25 basis point rate cut for the SEP meeting. Now it's going to be, you're going to start hearing people talk about it's time for a 50 basis point rate cut, or at least, 3 rate cuts before the end of the year. I'm sure that's going to be the talk going forward, but the market so far is liking this. We'll see how the day ends up.
You did a great job yesterday on macro. Was it not macro money or the what's after last call?
Overtime.
Overtime. That was good with the macro boys. That was pretty interesting. So, I mean, I like that you guys all 3 had different takes on this. So, are you on Team Ilya or Team Vecchio? So you think the market's going to turn bearish with this news eventually?
I could see how the market turns bearish with this news. I think it should be positive. You guys know how this macro stuff goes. This is actually this is actually one of the things that the market has been driving higher on. The labor market is weak. We already knew that that's the case. We've seen 3 different things this week that showed that's the case. And so the market's already been moving higher on that. But the truth be told, it's a bad thing if people are not having as many jobs in the labor market, right? Like, that's a bad thing. And it's always a situation where, the Fed wants to either cut. The Fed's job is to make sure that the unemployment rate isn't too terrible and we don't have too much inflation. And right now we're in the middle, right? And so they have to cut rates when one of those isn't or move rates around when one of those isn't working. And so in this case, they're going to have to cut rates if the job market is struggling. So sooner or later, the general consensus is going to be like, well, this is not a good reason to cut rates. It just happens. You guys know how it is. This is one of the reasons why Tom hates when we talk about macro stuff.
I do like that segment, though. I do like it, and I think a lot of our viewers like it.
Yeah, I think it provides context, everybody likes context to what's happening, right?
Well, what I like about our segment versus the macro stuff that you hear on other networks, and I'm not shaming other networks, but is the fact that I watched yesterday and there were 3 different opinions, and it wasn't like everybody's like, well, macro, like you didn't all follow the same. To the beat of the same drum. To Tom's point, these are still just opinions, right? You're looking at macro stuff, but it's still just opinions, and I kind of like that.
I think what really differentiates us is not only do we provide those opinions, we tell you how we are going to trade those opinions, and I think that's the big thing, right? Gold is at all-time highs. I have the all-time high from yesterday's close, but I think we're even higher as of right now in pre-market.
36.39 right now.
Yeah, so this should be a good thing for gold. Should be a good thing for silver.
Yeah, silver. Somebody was saying silver's higher than gold. I don't have that up right now. Silver is like picking more wings under it than gold. Yeah, 1%. That's pretty big. Silver and gold. Silver and gold. Burl Ives was right.
Burl Ives. Salesforce had earnings this week, and it's been struggling. It's one of the dogs of the Dow. It's the second worst performer, only in front of UNH. And there's talk of fears of AI eating away at software. Who knows if that's actually the case? Google popped big time this week. They avoid the breakup of the antitrust and the fact that they might have to divest Chrome was a worry, but that's gone. Apple ran on that too because Apple still gets to receive money from them being in the having them the preferred browser on the iPhone. And then VIX has kind of fallen off this week. We're reading below 15. If this bullishness continues, we'll see how low VIX goes today.
Yeah.
Are we just going to be in this, like, if the market just keeps grinding up and the VIX stays here, there's going to be a slow, I feel like Thanksgiving, Christmas, the whole rest of the year is going to be slow. I don't know.
I mean, so to kind of Vanetta's point and Vecchio's point that this month is typically one of the most volatile months of the year.
Do you guys pay attention to that, like seasonal stuff?
I just like listening to it. I mean, I do enjoy a good Santa Claus rally. I mean, do I listen to it? Yes. But do I put any credence into it? No. Like, do I pare down my bullish positions or take positions off because of volatility, or do I pull them down waiting for the volatility? Not really. It's just something I feel like that's more retro than forward looking for me. I'm not like, okay, well, I'm going to do something. I might look back and be like, oh, they were right. It was a volatile month, but I don't change my positions because of it ever.
I kind of just rely on my memory of the past. And I think for so long we traded waiting for a down move, waiting for a down move, waiting for a down move. And we would get them infrequently. And I still remember the dates, like August 24th, we had that big down move, but the market rallied back by September expiration. And then I remember being at the zoo one day on September 12th, and we had a down move. And I remember calling Liz, like, I'm at the zoo, but look at the market. It's down. But then the market rallied back. So in our history of trading, we've had some down moves, but then we get these quick bounce backs. So I don't play for that anymore, Jamal, like I used to.
For those listening, Jenny's talking about August 24th, 2015. I remember that date very well. I lost a lot of money that day. I lost a lot of money that day. Let's move ahead to the next slide. I was trading on my own too. That day sucked.
Hurt. Yeah. You always remember the dates when it hurts.
Oh yeah, for sure. I got another memory later in this slide, later in the presentation I talked about. Gold, obviously, big performer on the year. I just thought it was interesting looking at gold, looking at SPX, SPOOs, whatever, TLT, long-term bonds, and the dollar. I mean, you can see what kind of year it's been for all 4 of these. Kind of fascinating.
Bonds are having a huge move right now. The bonds just hit across the 116 level.
No kidding. Oh, they're up big. Wow, I didn't check them.
I mean, we all wait for a little, dip down so we could get back in. But I don't know. Do you know anyone who's still in now up at this level?
I mean, no tasty trader I know, because I think everybody that we know is like 13, 15, 13, 15, 13, 15, and bouncing in between. At the 16 handle, I'm out.
I know.
Yeah.
It's tough.
That's pretty amazing. I mean, yeah, I know. It was 113 early in the week, wasn't it? To start the week?
Yes.
Right?
We did toe in the water at 113, and then we get out at 115. So we were just kind of eating. I was hoping for a little bit of a pullback to get back in, but.
And like for those of you who trade TLT for like a smaller scale position, that's almost back to 90. You know, it's over 88 now. So we haven't seen that level in a while. Mm-hmm.
I think. Oh no, I'll talk about this. Let's move to the next slide. Here. Okay, so more steepening. I think it even moved higher today. I think I saw it was like 65 basis points. This is gonna run a little bit, right? Because 2 years are falling for the most part, especially if we're talking rate cuts, and then people are already trying to talk about 50 basis point rate cuts. This is gonna steepen more, and it should be good for banks. It should be good for home builders. That's actually the area I want to put some trades on and going forward, because I mean, theoretically, this should be good for those areas of the market.
So what would you be doing with this? Like, what would Jamal put on as a trade for this?
You know what's crazy? I've been on this zebra kick recently. I really have. And you guys, I know. Now I'm not sure if I'm doing them right, and by right I mean like in the right term. I'm actually going further out, because look, when you do macro, the idea of macro, right? Like, this is actually true. Banks borrow at the short end and they lend at the long end. When you're lending you a house, it's 30-year yield versus you giving them money in a CD at 2-year yield, right? So yeah, naturally, this is going to be good for banks. Banks automatically make money in that way. And so I want to be long banks, and so I want to get long a zebra. But I want to go out to like November, honestly, December, because
That's not too far. I've got some zebras out in January.
okay, exactly. I've just been on such a kick. You know how they go sometimes? You just get on a kick for a strategy. Oh my God, I've just been.
They're amazing. And then do you ratchet them up too? So if you get the move you're looking for, you can just keep closing and reestablishing, and then you still have the unlimited profit potential and you have zero risk.
Yeah, exactly. I did that yesterday in a couple of long-term, and some in my long-term account. I did that yesterday. UNH was one of them. So I did UNH. I think I told you guys this. I did UNH a month ago, right? And that was, I had it at the 220, 230 strikes. It's upwards of 300 now. I just re-rolled it and moved it further out yesterday in a long-term account.
Yeah, that's awesome.
Let's move to the next slide. So yeah, to answer your question, I mean, I'm getting long deltas, and it's mostly through zebras. Is basically what I'm doing.
Sometimes if there's like news coming out, or you don't want the that much risk on, I'll take my longer term, take them off, and then move it to a shorter term, because they're much cheaper. You could, take in a big credit to move them longer term to shorter term, and that way, if there's an event coming up and you're worried about event risk, you've got less at risk by moving them a little shorter term, and then after the event, you could put them back out.
True. Yeah, very good point. You guys are down at the SIBO all the time. I was about to say every day. I know it's not every. It feels like every day at this point.
Tuesday and Wednesday, every Tuesday and Wednesday, live from the SIBO.
There it is. There it is. SPX zero DTE volume. I mean, it's just through the roof. It's up quite a bit year over year. About 70% or so year over year. I mean, this is a lot. Everybody's trading them clearly.
And you can see it. You can see the volume and the big volume that's going up. So when we're down there, we try to take a look at like the big trades, the unusual activity that's going through. And a lot of times most of it's in the zero DTs.
Right.
Yeah. I trade maybe one a week. I mean, I think that's the thing. Like, I don't feel the need to put a ton of capital towards there, right? I think we talk about 45-day window. We talk about where we sell a lot of volatility, but we also have some trades further out every now and again. I think you need to have your capital. You don't want to have too much capital in front, right? And I know everybody probably sees this as like, oh, cool, this is where I should be at and all of that. But I think you just got to be, you got to have. I don't want to know the number, but it could be probably 5% of your capital in the near term in zero DT. You don't have too much there.
So I don't look at it as a percentage of it. I kind of agree with you. I don't have too much in there, because no matter what, because it's cheaper to define your risk, the capital is never that much in the front month, because no matter what I'm doing, I'm defining my risk, because you can. It's cheaper too. So that's just it, is I don't look at it as a percentage. But I will tell you, these things are pretty enticing to newer traders that are getting in, because they see the instant gratification within like a day or two.
Mm-hmm. Yeah. Let's move to the last slide.
Did we just drop Jenny?
I know. I think she's gone. It's just you and me.
She just left.
She'll be back. Kraft Heinz calls it quits a decade after merging. So they're splitting into two publicly traded companies, one for snacks, one for sauces. Kraft Heinz, I said earlier I was going to have a story. Kraft Heinz, man, when this I had some craft calls. This is when I was trading. This is actually 2015 too. This is 10 years ago. Interesting. I used to like this strategy of things that were really low on the RSI. And really big names, right? Like really like names in the Dow, et cetera, like things that weren't going to drop 30% in a day, but over time might fall. They're low on the RSI. I would look for like 3 months out and buy some calls. And craft, I had some calls, but it was craft, kind of slow moving, right?
Oh,
And
it's like a tanker. It's a slow moving vehicle.
For sure. And so I had these long-term, I had these like 3 month out calls. It was boring. It wasn't really moving. This is the one that wasn't working out of my 10. Like there were 2 that weren't working. This is one of them. I said the hell with it. I closed it. I usually close things most of the time towards the end of the day. I closed the calls out one day. The very like 10, 15 minutes later after the close, news comes out. They're being bought by Warren G. I mean, Warren G. I always say Warren G.
The worst. How bad is that? When you throw in the towel, I think that hurts worse than staying in a trade and closing it and then the move comes that you're looking for that you've been holding on for dear life. That's the worst.
I had like a 50 lot of calls, Liz. The stock ended up jumping like a whole bunch. I mean, I missed out on like a 50 grand trade. I was so, I was so mad. I was so mad. I always remember that about this merger. AVGO had earnings reported 63% jump in AI revenue as they beat estimates. Sportsbook CEOs are expecting a record year for NFL. They're expecting it to grow by 8.5% to 30 billion. So look at your DraftKings Flutter. We had a big game last night. Apple's supposed to hold an event this week for their new iPhone products on September 9th. And then we got PPI and CPI this coming week as well. We'll see what those yield. Again,
I don't have PPI and CPI this week. So they're going to be on Wednesday, right? Tuesday and Wednesday? Usually
Wednesday and Thursday this time around, I think.
Okay.
Yeah. So again, we already know inflation is high, but we'll see how the market takes that. And then research, September 2nd, the OJ, 5 Ways to Short a Trade is really interesting. Check it out.
Did you do anything in Broadcom or have you been trading a lot of earnings trades? Do you trade earnings trades?
I do. I usually do. I usually kind of try. I usually just try to stick to just one way, unless it's a name that I really think there's something going on in. I honestly should have gotten. I usually do these calendar spreads, and I usually do calendar call spreads. I had one on. I had some on in Lulu. Obviously, Lulu went to the downside. I don't know what I was thinking. I mean, it was almost like easy to determine they were going to fall because it's just not a good situation for them.
In Lulu, when you looked at that, when I looked at it yesterday, the calls, there was such call skew in Lulu, it wasn't even funny. So
true.
Yeah, both. Now that being said, Jamal, I just got a breaking news. Jenny lost power at her house. I don't know what I don't know what your plans are for opening bell, but
I'm here if you need me.
We might take a quick break and I might be able to keep Jamal. So I figured if I ask you live on air, you can't say no. So we'll take a quick 90-second break. And when we get back, we've got opening bell. We'll see you. Stay tuned. And welcome back. This is Market Measures, and Jenny is going to be a surprise to both of us because we know it's something about ETF correlation.
Yes, I'm actually looking forward to it.
I am too.
Looking forward to seeing what the ETF correlation is these days.
Absolutely. So let's bring it up. Let's pull up the market measures because we are running a little bit late on time, but that's okay. Because then as soon as we're done with market measures, just a little FYI, Jenny and I are going to jump into the platform, do a little bit more of like a Liz and Jenny show because it's tasty extras. So put the hashtag LIZJNY if you'd like us to look at your tweet. I did see 2 cute, adorable dogs and I can't wait to go to those. So,
oh, nice. All right, John, fire them up. Here we go. ETF correlation and option performance analysis.
Wow. Okay. Does this literally say 1 of 10 slides?
Let's see, 1 of 10. Yeah, 1 of 10.
Right. Get your helmet on, Jenny. Okay. When individual stocks IVRs decline and market uncertainty rises, sector ETFs become valuable trading alternatives. Okay. So this study analyzes the performance of correlation between heavily traded sector ETF and their top components and option strategies. I love this. So let's just kind of break down that sentence. When individual stocks, meaning your Apples, your Googles, your things that are individuals, IVRs decline, the ETF sector becomes valuable trading. And I kind of agree with that.
Well, and I know we've been doing a lot of like deep diving into old research as we prepared our presentation for that we're doing at the RMC. And one of the research pieces I found from the past said, and I don't know if you remember this, and it's not in our RMC topic, but we did talk about it. When IVR is super high, trade individual products. When IVR is very low, trade ETFs.
And I bet this is springboarding off something that they've done, which is fantastic. Okay, so good. Number 2.
All right, we first examined the correlations between the 5 most popular sector ETFs. So we've got energy, technology, financial, healthcare, and utilities. So XLE is energy, XLK is technology, XLF is financial, XLV is healthcare, and XLU is utilities. So I was thinking like we'd be looking at other ETFs, just like SPY.
You were thinking triple Q, SPY, things like that.
Yeah,
not any sectors. So if you're taking a look at this, if you're taking a look at technology, and let's just say, your Google or the technology sector goes down, the ETFs or the IVR goes down, then you can take a look at if you want that sector, go into something like that.
Right.
Okay. Next up. So here's the correlation. As of September 4th, which is yesterday, XLF demonstrates a stronger intersector correlation at moderate levels. The remaining 4 sectors maintain minimal positive correlation. So let's take a look. So this is the 3-month correlation between all of them.
Correlation. So you're comparing them. And it says XLF demonstrates a stronger intersector correlation. So
the financials are kind of the financials kind of stay correlated with everything else, and you can see that because it's kind of the green lines are thicker at the middle.
And if you see like a number closer to 0, right? So closer, the higher you get towards 1 or -1, that's a stronger correlation. If you're very close to 0, so like XLK to XLE is 0.03, really no correlation there. Or XLF to XLE, 0.06, really no correlation there. So you can see many of these aren't correlated. So if you're looking for a diversified portfolio, it's okay to be into various of these X's that aren't correlated.
X's. This used to be the super pit. All the X's were in the super pit.
Yeah.
All right. Let's go to the next one.
Over the long term, their correlations strengthen moderately, falling within low to medium ranges, meaning they tend to move in the same direction about less than half of the time. Utilities display weaker relationships with other sectors due to their heightened interest rate sensitivity and frequent use in defensive allocation strategies. So that last one was just looking at a shorter time frame. This is looking at a 120-month correlation.
Okay, so that's good. You can see the correlations pick up a little bit then.
Yeah, like longer term, but recently they haven't been as correlated. But if I'm trying to sell puts and sell strangles, maybe I don't, and I'm not afraid selling strangles in these X's. So let's say I'm selling strangles and I don't want to have two correlated products. I would, maybe sell a strangle in XLU and sell a strangle in XLE, or what? That's probably the least correlated here, XLE, XLU.
Yes. I was just kind of looking at the prices of them, XLE and XLU. So they have like a 20 IV rank. So I know this says when the rank is down on everything else, kind of look at some of these. But if you're looking at them, these utilities, like I'm trying to think of give me a utility. I can't think of one. I was going to look at the IVR over that. But so nonetheless, that's what they're saying. So you're right. You can kind of take a look. If you don't want to be in an individual product, you can sell strangles in both of these because they're not that heavily correlated, right?
Even XLE, XLV, XLV, XLE, XLU, there's a handful of these you can find that aren't that correlated, and you can sell some premium and have some positions on if you can't find things to do in the general market because the VIX is too low everywhere else to be trading individual stocks.
You see the SPOOs are down 30? We'll jump back in there. SPOOs down, NASDAQ, everything is red right now. Everything across the board is red, which is crazy. Okay, back on. Next.
And I'll get to this, but just a side note. So it's interesting. So we're doing the morning show, and our show is usually 10 to 11, which is great. We're trading in our own accounts before our show starts. I don't know how Tom and Tony the traders at heart, and I know Tom trades during the morning show. And so I guess, it's driving me crazy that I haven't been in my own personal account to get in there today.
Well, he trades in his own personal account. So
Yeah,
that's
he's trading the show.
so we're trading a show account. So it's completely different. Like he's already been trading at 8:30. I'm just wondering what they're doing right now at Work by 11 in San Francisco because the market, I wonder.
Well, they're doing their live trades, but you know what? It's only 7:30 there, so it didn't start yet.
Yeah, it didn't start yet. So, they're hunkered down in the corner, not talking to anybody in their own computers. I'm just kidding. They're probably shaking hands. Okay. The 5 primary holdings within each ETF demonstrate an average cross correlation of 0.27, weak to moderate level, consistent with their parent ETF relationships. The correlation level supports effective diversification when constructing multi-sector portfolios.
Yeah, great. Okay, so then you can you talked about XLU. Here you can see the 5 primary holdings: NEE, CEG, SO, DUK, VST. When you asked me to come up with
I couldn't have come up with those if you paid me. That's what I'm saying. Give me a utility. I couldn't come up with one of those.
What are the top holdings of XLU? No idea.
Any of the other ones I could have, right? When you're looking at this, XLE, I could have named some energy technologies. I could have named those. XLF, I could have named those. So any of those, and I ask you for the utilities. It's NE, of course. Like I never would have said that.
CEG, don't you remember?
That is interesting that they do have a kind of consistent relationship with these.
Yeah. Well, it says though, consistent with their parent ETF relationships, this correlation level. Okay. Yeah, I think that's good. Again, VIX is low. Trade the ETFs instead of the individual companies.
Well, it doesn't say VIX. It says when individual products IVR is low.
AVGO. I wonder how much AVGO is boosting XLK today.
Oh, well, let's see if it's still up. Hold on. We can go to the next one while I'm looking at
that. But are the other ones falling enough to offset it?
AVGO is only up 10%. It was up almost 20.
Yeah.
Okay, so let's go to the next slide. Oh.
Now let's examine the 45 DTE 16 Delta Strangles performance.
It's so funny because I was like, this is the easiest one to read. Let me jump in on that one. Okay. Both ETFs and their constituent holdings exceeded the 68% theoretical success threshold. The success rates were similar across all sectors, ranging from 72 to 84. So this is the 16. So let's go back. That last slide, we don't have to go back, but that last slide was 16 Delta Strangles in all of these. And these are the results, okay? So between the ETF and the stock holdings. So they're pretty consistent.
Yeah, it's similar.
With their number one holding, it's very similar.
It is similar. It's
similar, but everything but healthcare. Oh no, never mind. And utilities. I was going to say the ETF slightly beats its number one constituent. I like using the word constituent.
All right, and the slide 8, please, John. Technology sector results align with historical patterns, showing modestly lower success rates compared to other sectors. This happens because tech stocks have high volatility and have moved mostly upward over the past decade. We next analyze how success rates correlate with option premium relative to underlying asset prices.
Oh, now we're getting into it. All right, next slide. So premiums levels show weak relationship with strategy success. Rates. ETF performance remains stable across sectors and mostly matches or outperforms SPY. Okay. Success rate of the energy versus the stock.
Well, and here we're talking about the premium level. How much premium is in those strangles.
So look at the financials. The financials has a 5.9% premium, and it's got the highest success rate.
So you're getting the most bang for your buck in those options?
In the options, yes. It looks like you are. In the ETF, right?
Right. ETF performance remains stable across sectors, mostly matches or outperforms SPY. But here, in all these scenarios, you've got a high success rate. This is 16 Delta Strangles. So here, what does this tell you? The 16 Delta Strangles have a high success rate. And we saw in the previous slide, it still had a high success rate if you're doing the stocks or doing these ETFs. But I've seen previous market measures saying you're better off trading individuals. Like when the market falls and the vol rises, I think if they're testing the opposite, when the market falls and the vol rises, you see much better results on individual products than ETFs. Right.
And I think that the one that we're kind of mixing up it was about VIX levels. This is about IVR of individual products of its major constituents. When the IVR of the constituents are down, go into the basket, right?
Yeah. Okay, good. This was good. Last slide.
This is going to be the takeaways, right? Okay. Correlations between sector ETFs remain low to moderate over long-term periods. We saw that. Providing diversification benefits for multi-sector portfolios. And sometimes it's easier if you don't want to jump into like a main person, like a main name, just go to a basket because it will smooth out the deltas.
Premium levels demonstrate minimal correlation with success rates, suggesting that sector selection based on volatility pricing may be less critical than sector fundamentals for strangle performance.
Okay, that's good. So so you can just, if you want to be an AVGO, just jump into, and I'm using that one just because it's topical today, you can go into the technology sector.
Yeah, end it. Bring us home, Liz.
ETF strangle strategies across all sectors and their major holdings exceed theoretical performance expectations comparable to SPY.
Excellent. So thank you to our research team for another great market measure. Now I'm anxious to pop into the platform and see what's going on. Now, was there another? We're also going to pop in.
Well, we're going to take a quick break.
Quick break.
Because I have to go back to sharing. So we're going to take a quick 90-second break and we'll pop back in the platform. So stay tuned.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh,
yeah, it was beautiful. It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay. I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
oh, here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to
I
you.
knew.
That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazla bingo! I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yeah!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
up.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean that.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
yeah.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddy, Mikey Butler. And a big shout out to our co-host, the lovely Katie McGargle, who is getting married today. Cannot wait. It's going to be a fantastic time.
Yes, it's going to be lovely. Give her some words of warmth on Twitter.
Yes.
At Trader Katie, right? Trader Katie? Yeah. It's going to be great. Can't wait.
Yes.
Mm-hmm. How are you doing on this fine Friday morning?
I'm great. I was shocked that I hit my bets yesterday of Cowboys plus 8.5 and the under 47.5, which looked dead to rights probably within the first 5 minutes of the game. It looked horrific. And that somehow hit. I also got a CeeDee Lamb 7+ catches. So that bet hit. So I think I'm going to roll with the Rob H betting system of unders and the dogs for the first week of NFL. I don't know if there's any data on that, if that's a positive thing, but I feel like it's probably something that would work.
Yeah, I mean, every team's first week is not going to be pretty. So we saw that last night.
Yeah, that's
some really terrible football. Some guy got right when that guy got ejected for spitting on Prescott. I was like, that spread's got to move to like even.
That was Jalen Carter. That was our guy. Yeah. Could have been on the Bears. Probably.
I'm glad he's not. He seems like a head case.
I mean, he is a head case, but he's probably the best.
The best head case?
He's the best defensive tackle in the league. He's an absolute monster.
Yeah. Well, yeah, it was a fun game to watch. That hour-long delay was crazy.
Yeah, that was brutal.
Just a weird situation.
Yeah,
but
that was tough.
Yeah, we get to run it back tonight with some Kansas City Chargers.
Yeah, that should be a fun game. Lad McConkey, your boy.
Yeah, I'm going all in on Lad McConkey.
I know.
I don't even care.
I know you are.
Yeah.
You've pot committed.
I don't see any other way.
Pot odds. It was just pot committed at this point.
Yeah, I'm aggressively exposed to McConkey and Quentin Johnson, so we'll see.
Yes. Well, this market's been crazy today. We had the employment numbers this morning. They came in, I don't know if you call them hot or cold, but it came in basically that people aren't getting that much employment here. The jobs numbers are not very high. They came in very low, which has led to rate cuts being pushed into a higher probability further out on the curve, which has led bonds to rally significantly. The first move in the E-minis was to new highs. We were up like 20, 25 in the pre-market. We are now down about 36. So let's jump over to the platform quick. We'll go through the market. We'll talk about some of the trades that we did as well this morning because we had a lot of trades coming through the system. I know you had some earnings trades. I had some earnings trades. So we'll go through those and then look for some new trade ideas. So if you got some trade ideas, throw them in the chat. E-minis currently down 34. We've had about a 90-point intraday range, one of the wider ranges we've seen in quite some time here. Got as high as 65.41, which was about 30 points, 35-ish from the open of 65.35. 25 points higher from the open here. The low 64.52. So it's been a pretty wide range here. The NASDAQ down 40. You got the Dow down 263 and the Russell down 3. Some big moves. You got NVIDIA down $5 and change. I mean, that stock is down 10 or 15% from the highs. On the flip side, you had AVGO, which had earnings. It opened up at like 340 or 350-ish. It's now sitting at 334. So big move in AVGO there. You had Lulu was the other one. We'll go through the trades that we did there. That's down 38 and change, but some big moves in some of the major tech stocks. Microsoft, another one. It's now below 500, back below where it was pre-earnings. It got up to 550-ish and change. Huge move there. Apple's been pretty strong. Amazon as well. Amazon giving up a little bit of the move it had, and Google has been one of the stronger of the group. But it's definitely been a pretty wide rotation happening underneath the surface here. You got oil selling off, /CL 61.57 down $1.92. Pretty big move in oil there, down to the lower end of where it's been trading. I might look at something there. Volatility futures got into the 17 handle, so we got as high as 1736 at the low of the session today, which was about 50 or 60 handles. There, it's now at 1691, which is still a nice little bid in volatility here going into the weekend. Bonds 116.16 right now. They're up over a point and a half here. A huge move in bonds. Again, that's kind of projecting rate cuts out into the future. A lot more cuts, or a lot higher probability of more cuts definitely getting put on the table here. Gold continuing to scream higher. It was actually red at one point this section. It's had about a 60-point intraday range, which is a huge range for gold, up $44 and change here. Silver up 21 cents. Bitcoin as well was kind of moving in the pre-market. 113.8 was the high on the futures. It's now at 111 here, 110 being the low. Spots at 110.7. It got as high as 114 in the overnight session. It's been a wide range there, as well as in the ETH, which is down $46. It was up at 46 at one point today. So it's just a huge whippy market today. A lot of big moves happening. Maybe even bigger moves underneath the surface than you're seeing in vol futures themselves.
Yeah, lots of single name big moves.
Yeah.
Which are in both directions, which is why it's kind of disguised with this 30-point sell-off. There's a lot of things that are moving way more than you would think. Like Lulu after earnings, that stock's going to zero. Coinbase down 4%.
Yeah.
Roblox down 3%. Like Nvidia down 3%. So yeah, you have some big name stocks selling off, and then you have some big name stocks rallying hard too, like Salesforce almost reversing the entire earnings sell off here in 2 days. So yeah, we'll see where the market takes us, but definitely some tradable opportunities here.
Yeah, I'm looking to close just now this MasterCard position. We put this on yesterday, I believe. I think this was a trade idea from our peeps in the chat. We did this on the 3rd. We sold the 610, 620 call spread for $292. It's now, I closed it at $208, so it took $84 in 48 hours. So a nice little trade there. Got that one on the board. But yeah, it's been a whippy market here. I know you had some good and some bad earnings trades. I had 2 bad earnings trades. I managed to get a little bit of my shekels back there. I also wanted to, before we get into those, point out FX. If you've been trading any of the FX products and you've been short the dollar is having a huge move today. I'm actually going to look to get long the dollar right now. But if you're in any FX positions that have been short the dollar, they are coming in bigly today. I was talking to Gus. I was like, I get all the reports on the follow traders, and I was like, bro, you got some good stuff on your short dollar trades. Take that money and run. So I'm going to be looking to add some here, but closing out of this New Zealand Canadian dollar trade that we had $28 on that. But the currencies are moving too. Everything is moving today. You're getting a lot of movement. I'm going to get short some euro and some British pound as we have our nice little Bollinger Band here. Look at that. We're out above the range.
Yeah, the euro dollar blasting through that upper bound.
Yeah.
And yeah, if you're short the euro dollar, you're getting paid to hold that position. So I'm going to also join you right now.
Yeah, I don't really mind that. I'm just thinking I get long the dollar for this move.
Yeah. Yeah, getting long the dollar by way of short euro dollar.
Yeah.
Yeah, I'm in on that. What else can we get into? What else is moving here? The British pound. Yeah, Japanese yen. The dollar yen.
The dollar yen has been, that's what Gus was in. It's a huge move there. I mean, that's down massively.
Yeah, I'm going to get long that. Yeah, so I'm just going to get long the dollar in a couple of different ways here.
Get long the dollar yen too.
I'm long the dollar yen, short the euro dollar, and
short the British pound.
I'm just looking at the biggest percentage moves, so I'm gonna go long the dollar franc also.
Ooh.
That's the third highest percentage move in the popular USD pairs.
Yeah, that is a big one.
So we're going to smash that.
Oh yeah, that one's outside our range too. All right. We're gonna go. We're fully loaded here.
Yeah.
On long dollar trades.
We've got the triple axle long dollar trade with different denominators here.
Yeah.
So yeah,
But it's long dollar for all of them.
Yeah, yeah.
Oh, you need the dollar to go up.
Don't be fooled. There's no differentiation here. It's all long the dollar.
It's all long the dollar. I mean, we've been lower, but as you can see, if you pull up the DXY, which is just a dollar index, it's heavily weighted towards the euro, but it includes a basket of currencies. It's certainly not strong.
Yeah,
I would say would be my my way to describe it here.
So yeah, I got all of these are 4 micro lots, 0.04, but
0.05, a little bigger. I'm putting my profits on the table.
I've got short the euro dollar, which is long the US dollar. I'm long the dollar yen, and I'm long the dollar franc. All 3 of those you get paid to hold with the carry. And they're all basically outside of the Bollinger Band range, which you just love to see.
I mean, we're now Bollinger Band traders.
I mean, why not? Especially for currency products where we're really just buying and selling. Like, it feels good to have something to look at.
Yeah. It gives you context to a price extreme.
Yeah.
I don't know if I put so much weight to it, or I can, put a time frame on. If it goes outside, it reverses in 3 days. I don't know if I buy into that because, the future is uncertain, but it gives you a spot to at least look for a price extreme. And that's what we're always looking for. We try to put strategy around it with options. You can do more strategy here. I think the strategy portion is just sizing correctly, right? Yeah. So playing for a price extreme, and if it keeps going, I have, many, many more lots I can sell here without having any issue. I mean, you can see even with the 4 positions I have, using about $200 in margin on each of them, I got about 3,600 here. So, if you're staying small enough, you're taking the small wins, you keep in size in check, you can just hold these and not have an issue there. So I think that's the strategy here. But I wanted to talk through a couple of the positions that I took care of today. I know you probably had a big time winner in your stupid, aka the Super Bowl.
I did.
In AVGO. Probably a good close too. Yeah, you got a good close there at 344. But for me, I had these butterflies on the upside in AVGO and on the downside in Lulu, and got spanked on both of them. So what I did in AVGO, and I put this in the comments too on the follow page, I closed out of the long spread. So I closed out of the long spread in AVGO and then rolled to the October, and those don't look like they posted right. That's annoying. Put this, I'll get this in right now. Hold on. Shit. Wrong side.
He said the S word. $5 in the jar.
Oopsie. Fast market here. I gotta repost these. I'm gonna repost them all so they get fixed. Sometimes we have a little goofiness here that happens with the posting on these follow trades.
But yeah, while you're doing that, I basically closed my AVGO position for almost max profit. I sold a 10-point wide put spread to finance a 5-point wide call debit spread. Got a 70-cent credit for that net package, and AVGO exploded, and that call spread was basically worth $5. So the max profit on it was $570, and I closed it for $510 with 14 days left on the contract. So the best case scenario for sure. And I'm glad I went with the stupid. Sometimes stupid prevails.
I'm with you there. So you got the outside move, which was exactly what you needed. My positions were playing for inside moves. I got the directions right, but they were both outside the expected move. So that was kind of the problem here. So in AVGO, I closed out of the long call spread part of the butterfly. I then took the butterfly and rolled it out to October. So I did that for a debit on that trade. So overall, it's about a $3 roll on closing the long call spread, rolling the short call spread out to October. I then went and sold a put spread against it. So I basically turned the position into an iron condor. It's obviously still a losing position, and I can show it here on the order chains. So I'm still out about $700 ish on this trade, even into this down move, because I did this when the stock was significantly higher. So you can see the chains here. I've got net $5.30 credit. It's marked at $13, so I'm out about $700 on this trade. On a 20-point wide iron condor, I have the 310 290 put spread, and on the upside, I have the 330 350 call spread. The stock is trading at 335, so I got a lot of duration left on this trade, but ideally we chop around here, go a little bit lower. That would be the spot that I need to get out of this position. On this sort of trade, one that just went way past and was basically a full loser, or almost $1,000, $1,500 loser at one point. If I can manage this back to a couple $100 loser, I'll probably look to exit that trade. And I did the same sort of thing in Lulu. So Lulu is actually down now, but it was up. If you looked earlier today, it got up to like 175-ish on the chart. Let's see what we got. What was our high of the day? It got up to 176, which is kind of when I closed this trade. So I had good timing on this one. But Lulu is another one where I had this butterfly. It was a wide butterfly on the downside at the expected move. Stock goes significantly lower. I closed out of the long put spread and then rolled the short put spread further out in time into the October cycle. I actually had to roll it down because there's no 177.5 strike. So I rolled it down, which cost me a little bit of a debit, a dollar debit. But it ended up closing it into that rally, which was like 20 minutes after that roll, for a 50-cent loser. So this one ended up being kind of okay. It didn't work out as I planned, but it was a well-timed close on that trade. So took off both those, or that position, and then managed the AVGO position as best I can. So that one's still got a little bit of duration left on it. The other things I did today were clean up a couple positions. So I scratched out of this PayPal position for like a 20-cent loser, just taking something off the table. I rolled my SoFi position. The stock was down, a dollar and change earlier this morning. So I rolled my calls out to October, sold another put against it. I sold a call spread against my Costco short put spread that's at the money. Again, just kind of taking advantage of the move. Costco has had, a 30, 40, 50 point up move in the last couple sessions here. We went from, 940 up to 960, 70-ish earlier today. So I kind of took advantage of that. Sold the call spread against it. And then I just took off that MasterCard short call spread to free up some capital, book a little bit of a winner today. So certainly a painful morning, but it's turned into a much better afternoon with a little bit of a bounce back in some of these stocks.
Yeah, I just had the short put spread in Lulu. That's very deep in the money now, the 210-200, trading for max loss. So that I'm just holding on to that, see what happens there, but planning on nothing. That one is just, that stock is going to zero. If
Apparently.
I don't see any way this reverses here. So
I wouldn't say that's a good thing because, yoga pants, we like them.
Well, that's why we love Viore.
That's right. That's right. Just got to have a replacement. Make sure there's
Yeah.
a replacement. Can't get rid of them and all.
Yeah. But yeah, other than that, I've been keeping an eye on some of these positions. I've got a long call diagonal in IWM and a short, a bearish put diagonal in QQQ. Both of them are working. IWM's up $100, QQQ's flat. That was kind of a rotation. The idea was a rotation out of the Qs into the Russell. So I'm going to leave that on for just a little bit longer. Still plenty of premium in the October cycle for both of those short contracts. So I think that'll be the key. If we just chop around here and I get some of that premium out of the short options, that's when I'll look to close.
Yeah. I think I don't think we're going to get much more downside today. I think we're going to kind of chop around here, maybe rally into the close, but I think maybe next week. Maybe next week is our little dip. You got a little bit of a pop and vol. All the good stuff is off the table. You know, you got rate cuts. They're coming. Everybody knows. Money printer go burr. Maybe there's a little bit of a take profit here, given the move that we've had today.
Yeah. Employment report was this morning.
Yes.
4-year high as weak job creation in August tees up Fed rate cut.
Yes.
I think the narrative here is you get the rate cut and the market sells off 200 points. I think that's what's going to happen.
That's it. Everybody says, okay, we've had enough.
Yeah.
It's been good.
I think you get the opposite of what everyone's expecting, where the rate cut hits and the market rallies. I think you get the exact opposite.
Okay.
But we'll see. We got, 12 days until that happens. Looking at SPX implied volatility. And what's interesting is, like, we were looking at implied volatility for the 1-day cycle. We said it was like 38 points in SPX, which wasn't that much, but it wasn't zero. And we had a pretty decently choppy day today.
Yeah.
Getting some movement there.
I mean,
But
this
yeah,
has been our widest range in quite some time. It's been about a 90-point intraday range. So we certainly got some movement today. Today was a trader's day.
yeah. But yeah, the September 17th cycle, 100-point expected move. So yeah, I think we would probably see a lot of just chop and nothingness until that report hits the wire. Because 100 points for 12 days, especially after a 40-point move for just today, 100 points for the next 12 days tells you the chop is in session. Maybe we throw on some 0-day iron condors to play for that up until that moment. Feels right. But yeah, that is the overview of both of our portfolios here. If you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat.
We're already up on our long dollar, Mikey.
Good.
$5.
I mean, how can you not be long the dollar at this juncture?
America, baby.
America. Let's see. Let's kick it off with Boulder. I've got an open 6-strike long call for $1 and a 7-strike short call. So long October, short September. So a small micro diagonal spread, long the 6, short the 7 for 23 cent. For 70 cent debit. What action to take if open climbs above 7?
Take the money and run.
Yeah.
I mean, so in these sort of stocks, and especially with a relatively tight spread and 200% implied volatility, you're really going to have to hold this through the next 14 days to see all that much more profit come on the table, because you really need this 75 cents or 70-ish cents to decay, and hopefully the stock is still right at 6, and at that point you'll probably make another 50, 60 cents on the trade here and kind of be a double on that sort of position, a double in terms of your debit. So I think you'll hold it. It's a good trade. I think next time, if you're trading this sort of stuff where you got, 100, 200% implied volatility, just buy the calls and scalp it that's kind of the way that I would look at this.
Yeah. But yeah, small little diagonal spread here, but the general rule of thumb is if the spread goes completely in the money, we just close it.
Yeah.
Because if it keeps climbing, yes, you'll get short premium you'll get extrinsic value out of your short option, but you're also going to lose extrinsic value out of your long. So when the spread moves in the money, that's kind of your sweet spot where you have all the intrinsic value in the spread, plus a lot of extrinsic value still in the long option. And ideally, it moves in the money as you get closer to expiration of the short. But if it's not, it's still going to be a winning trade, like you see here.
Yeah.
Thoughts on SPY, QQQ, IWM, and or an ES Jade Lizard? My thought process is to look for red days and a vol pop to open them. Yeah.
Yeah. I mean,
Can do
that's the ideal situation.
Especially in these markets where we've seen time and time again, the dip gets bought.
Yeah. Especially if you're aggressive with your, management, profit management. If you did something at, with the middle part of the day today and closed out of it now, I mean, that's pretty awesome.
Rancher's got a Lulu Jade Lizard.
Okay.
170, 230, 220 in the 42 day, October.
170. So you're really just short the put here. I don't know if I'm super bullish at this point, but you're right at the money. You're at basically I think this might be all-time lows. Or very close to very recent all-time lows. We'll call that. This goes back to 2018, 2019 area here. So this is just a monthly chart on a 10-year time horizon. I might just close out of the call spread, take that risk off the table. If you wanted to reduce some of your delta, let's see what this, this is a 50-ish delta. I might sell like maybe the 190 and now won't use any additional buying power. It still leans you 30 delta long. But
yeah, and if you've already moved the 180 down to the 170, it depends on how much credit you have left also. But yeah, the call spread's worthless. You can move it down and you can narrow it if you're just trying to pick up some more premium, but
was it the 120, 140? Is that what you said?
The 220, 230. Yeah.
Okay.
So 10 points wide, trading for 17 cents right now.
Yeah.
And it depends how much credit you have. If you have close to $9, $10, then yeah, you can move it all the way down to like the 180, 190 or the 185, 195. As long as you have a credit over $10, you can be aggressive with a further hedge on the call spread because it's not going to hurt you if it rallies.
Yeah.
But
you're really only out like $200-$300 on the street. Like it's not like a debacle.
Yeah. But the question is, how much did you pay to move the 180 down to the 170?
Oh, okay.
If that brought you to like a $2 credit, then you can't have a call spread on anymore. You have to lean long with the put if you're going to do it.
Yeah.
Trade idea in JP Morgan, October, debit call spread 300, 305, and a put spread 295, 285 looks very similar to my stupid.
Yeah.
5-point wide debit financed by a 10-point wide credit spread.
Yep.
October. Yeah, so yeah, this is totally fine if you want to do it. Picking up $1.50 credit, have a little booster of $5.
Oh, do I have the wrong strikes? What was it? 285?
295, 285. So yeah, it's just
right at the money.
It's the classic Stuper Bowl. But yeah, it can work out as you saw in Adobe, AVGO, but you just got to be comfortable with that downside risk.
Yeah, just keep in mind it's a double long position. So both when you're selling an iron condor, you're reducing some of that delta. You have much lesser delta in both directions. Here, one-way show. Your buffer is at 94 and change. So it's slightly better than 50-50 shot.
What are your thoughts with double calendars for earnings trades? I've done them a couple of times. They've worked out a couple times. They have not worked out a couple times. It's not my favorite trade because you really need a move towards your strike, ideally the upside. Best case scenario is you get a move towards your call calendar. Your put calendar is a loser, and your long call appreciates more than the cost of everything. The problem is it only sets up well if you're collecting 50% of the cost in your long options with the sale of your shorts, and the shorts have to be 1-day options, pretty much.
If you did them in either Lulu or AVGO, you got spanked today.
Yeah.
Which is, kind of an annoying thing to be spanked on a trade where you kind of are looking for a big move.
Mm-hmm.
You're looking for the move to be at or maybe just past the expected move on that sort of trade. But if you get too much movement, then you get hurt by it.
Mm-hmm. Stonk Messiah looking for open moon time.
Ooh.
Buying the 12 calls for September.
Oh, God.
For 20 cents.
There you go. You're only out 5 cents, Stonk.
Yeah.
That's when you double down.
Yeah, the 12 strike for 15 cents. The fun thing about these tail options where the strikes aren't available is if you do actually get the move, these explode because they're the furthest out of the money strikes, and a lot of the premium kind of goes there.
Yeah.
But yeah, 10-cent shot, why not?
Yeah. What a move. Goes from sub dollar to $6. Gotta love it. Gotta love a little squeeze.
Looking at a very exciting XLE short put.
Okay.
Yeah.
Yeah, oil's been just getting killed recently.
Yeah, I mean these low IV stocks, there's just not a lot of premium here. That's the only downside. But I would do like an in the money. Yeah. Sell the 90 put instead of the 85. Basically a covered call risk profile, and you can make way more on an up move than $1 with an out of the money strike. And you don't really use more buying power at all. It's a little bit more, but I think it's a better setup.
What about like this 80-90 poor man's cover call?
Sure.
November, October, you basically offset all the extrinsic value.
80-90?
Yeah, it's a cheap like stock replacement kind of thing.
Yeah.
If I can ever get filled here. Markets are not great. I'm going to go up to 725. All right, I'm going to let that one work and see if we get filled there.
Lovely.
Yep.
With the move up in CRM, would you think about selling the 270 call against the 260 long I have in October for September, or the 265s? So I have this
265.
Yeah, I have this crab trade on. So I've got the 260, 275, 290. The 275 and 290s are expiring today. I looked at this morning. It's regained a lot of value. It's only down $100 now. My plan is just to let these expire and see if we get a rally into next week, and then I would redeploy a short option at 270 in September, because I don't want to calendarize this. Like if I go to a 265 for $1, now I have a 5-point wide diagonal on for $6. So it's not going to hurt me if it continues to rally, but I'd much rather see if we get another 5-point rally or so next week, and that 270 will be worth $1.50 or over $1, and I can go into a 10-point wide diagonal with a $6 debit, which is much more has much more profit potential to the upside.
Yeah. Could the other side of the coin, the devil's advocate, could say just close the position? It was good, got your money back, but as long as you're small enough, you can hold and play.
Yeah, nothing wrong with closing, or doing what you want to do. If you want to sell the 265 right now and close the 0 days, you could do that as well. If it continues higher, it's just going to kill your profit potential. You'll get your money back for sure, but you won't have a big profit potential to the upside because you'll have a $6 debit on a $5 wide diagonal. First loss in 0 day in a month? Oh no.
Damn.
You just got to wait till the 2 p.m. buy button.
It is a testament to how calm an inside move and how many inside moves we've had in the market as a whole over the last month or two. It's been pretty good trade. But you got to expect that. You're going to have those big ones. That's why you can't go nutty with the sizing.
Yeah, I think I'm going to do one right now because I want to remember. I do want to have this on. I want to start doing these 0 days up until the Fed announcement because I do believe we will get just a lot of choppy days until it actually happens.
Okay.
So for the 3 day, I'm going to toss on just the expected move, 5-point wide iron condor.
That goes into Monday.
All right, I was just filled at $1.90. So I've got the bless you. I've got the 6,500 short call, 6,430 short put, defined risk 5 points wide and SPX into Monday.
Okay. I like that.
So if we open kind of flat on Monday, this will be a 50% winner, I would assume, because the weekend risk will be a lot of this premium for Monday right now is weekend risk. So filled at $1.90, and I'll look to continue the iron condors for the 0 days for the next couple weeks.
Beautiful.
Let's see. GLD is a meme stock now. Yep.
Yeah, kind of. My gold call spread is not looking good there.
Yeah, my broke wing butterfly is aggressively tested. But we're not too far from the sweet spot. About 70 points to the downside over 20 days.
Do I play this for more?
You could. I mean, now would be a great time to add in another one if you have the ability, I think.
I was just looking at like GLD. Do like and I was going to go 14-day. Maybe for a small debit. Like the 335, 340, which is right at the expected move here. And then buy the wing.
Love it.
I could do that. 19 cents. It's going to hold some value anyway.
Yeah.
Even though we want to do these for a credit, because if you have this for a credit, you have no risk to the downside. My risk right now to the downside is 19 cents, which is negligible. But this position, because you have this closer at the money call, it's always going to have some sort of value, whether it be 5, 10, 15, 20 cents on this part of the trade where I'm not worried about the 23 cents. That's why the pop here, if I did this for a 2 cent credit, the pop would be 75 to 80%.
Yeah, if not higher.
Yeah.
But yeah, a 19 cent debit is nothing.
Yeah,
You basically have no risk to the downside. It's not going to move.
19 cents of risk. I take that. We're up $25 on our FX positions.
Ooh.
$5 a piece.
I've literally never taken a losing position.
Don't say that. Don't even speak it. Stop it.
I've literally never closed a position for loss. I tell Glenn this every day. But
hey, why is this so easy, Glenn?
I know. That's the beauty of trading small, though. You just I've also forgotten I've had positions on for a week at a time.
Yes.
So that's the nice thing about trading super small is even into these big swings, my P&L is only $4. $4 real dollars.
Yeah.
From when we placed it. So just taking little chunks out of the market where we can. And if not, the position sizes are so small that it's not going to hurt us. Any adjustment to the broke wing butterfly on GLD? So not really. With a broke wing butterfly, the one thing I would look at is closing the call debit spread. So
in GC, your position?
yeah, in GC. So
What do you
that
got?
would mean, so right now it's trading for $1,500. There's $500 left to get. So if you wanted to add $500 more risk to the position, you could close out of the call debit spread and just lean short with the short call spread. But $500 is a lot of risk to add to this position. So I'm just going to leave it.
Mm-hmm. Volatility is getting bid in there too, so I think you hold, see what happens.
Yep. Let's see. There's a debate between cash is trash and cash is king. Perhaps both are true depending on the regime. What do you think is more true now heading into a possible rate cutting cycle? I think I have laser beam eyes. I think I think there's one thing that's true. If you have humans in charge of a currency, that currency is going to be devalued over time. So how do you offset that? You invest in markets, you invest in crypto, you invest in real estate, you invest in things that if the US dollar were to go to zero, they would be re-evaluated in a different currency.
Not even that. If the denominator gets bigger, the asset
so does your asset
more value. So it's a yeah. I agree. On a longer time horizon, I think it makes sense to just be long assets, financial assets.
Exactly. So whatever that is, it doesn't matter. Like there's a lot of people that don't believe in crypto, but they buy up real estate. Cool. Same thing. It like literally the target inflation rate is what, 2-3%? So the target is still a 3% decay on dollar today versus dollar tomorrow. So sitting on cash is the worst situation you can be in, unless you're sitting on cash waiting for something to happen that you can eventually get into.
Or it yields more. That's why rates are higher than what the inflation is. I think the real question is whether the inflation rate that they spew out actually has any merit.
Right. If you're in downtown Chicago,
it certainly doesn't. Our inflation rate is like 55%.
Yeah.
The new taxes, the new this.
If you leave the house, you're spending $300.
It's unbelievable. There's a tax a day in this place. So yeah.
So anyways,
what's the new one that they have, the Illinois, the DraftKings, the betting tax?
Oh yeah. Oh, actually I saw it. So Stonk, you're going to love this. I got a push notification on DraftKings and they said, if you are a gold, diamond, or onyx member, it does not apply to you.
Yes.
So they're really taxing the
Johnnies.
The Johnnies.
Like me. Yeah. So it's just, I think it's under $50, I think it is, or $100, something like that. They add on like a 25 or 50 cent tax, which is just ridiculous. Insane. It's just ridiculous. Like, and where does that go? Like J. Cole says, let me know where all my taxes go. Let me see them on an app on my screen.
So Ranch, if you rolled the 180 to 170, it was a 565 debit. So what are you left with? Yeah, so if you're left with a 250 credit, you can hold the put, but you're not going to be able to throw on a call spread against that because the credit's too small now. Any trade ideas for CMG? Falling like a knife forever.
I have a call diagonal that has not moved. Well, maybe it's moving today now with the stock down a little bit, but I'm long the 42.5 in October. I'm short this basically worthless 45. Let me see what I'm out. So I'm out about $75 on this trade. I think I'm just going to close this and YOLO this call.
Yeah, this is crazy.
Yeah, see, I mean, it's dead. CMG is dead. And it should be dead because the food is dog food. Go support a local Mexican restaurant and eat something with flavor.
Hey, amen to that. We are very lucky. We have a handful of them.
Yeah. We got the little mom and pop
downstairs.
spot right around the corner.
Yeah. Yeah, I mean, these charts, I don't like to look at these charts and sell and put. I think like it's way cheaper to just buy a diagonal spread or just buy a call. Like buy a 40 strike call in the November cycle, see if you get a pop. There's not even that much premium to sell against this thing. Like the 45 strike in October is only 50 cents. I'd rather just give up that 50 cents and have the upside. But yeah, maybe we'll come back to this for earnings at the end of October. All right. Let's see. Any moves in the space sector? Rocket Labs or ASTS?
This thing has gone nuts. ASTS, I saw that was down like bigly the other day. These things, I don't know. I don't know what you do with these stocks. I mean, there's such high implied volatility. They don't really exist in this current. It's all like kind of speculation. What's the capital? Let's see, $1,300. Let's see. I would trade them if they weren't. Okay, here we go. Rocket Labs. What do you want to do in Rocket Labs? What are we thinking? Short put call ratio. We keep this train going. What do you think, Mikey?
Short put call ratio?
Yeah.
Kind of love it. Kind of love it.
I mean, you got 80% implied volatility. These things move like, you know.
Ooh, I've got one for you.
What are you thinking? 40?
I'm doing this. I'm doing the undefined risk stupid.
Oh no. You're selling a call, selling a put to buy a call?
No, I'm going to sell the put in October, the 40 strike put in October.
Okay.
And I'm going to buy the 45.50 call spread in September. For $1.
A little, yeah. Financing a cheapy shot. I like that.
Yeah. So still, I'm basically giving up a good chunk of, so I wouldn't say giving up, because if you just sell the put, you're selling it for $2.50. This trade, you're selling the package for $1, but if there is a rally, you can make way more on the call spread in conjunction with the short put that's losing value. So you're not really giving up the premium, because directionally, you're still going to benefit if Rocket Labs rallies. So you're kind of just shifting your credit for a debit package to the upside. So let's see if we can get filled here. I'm going to leave it at 95 cents, which will probably be an autofill. Yep, there you go. 95 cents. I bought the 45.50 call spread in September, 14 days out. Sold the put in October, the 40 strike. So yeah.
I'm going to do the 40 put in October, and then I'm going to do the 45.50 call ratio spread at $3 and change. It gives you a break even down at 35-ish, 37-ish, 36-ish, something like that. Upside all the way up to almost 60. So new highs.
Beautiful. Let's see here. Rapid fire. Google, Iron Condor. Calls are in the money, 220-230. Can you explain the dividend assignment risk?
Oh.
I don't think you'll have any, but we can check.
With this on the 8th. 21-cent dividend.
Yeah, so you're fine.
Yeah, so the risk is based on the extrinsic value. So the short call, which I have this position on too, This short call, it has 90 some odd cents of extrinsic value. The way you can look at that is by looking at the opposite option. So the short put is synthetically the extrinsic value that the short call has. And so 90 cents is really what your extrinsic value is. The dividend looks to be 21 cents. So you got a big spread there, unlikely to be assigned. And if you do, it's actually kind of a benefit. You'd net 70 cents of value out of that.
Yeah. And they were in October, so they have hundreds of dollars of extrinsic.
Yes.
But either way, that's how it works. The short call extrinsic value remaining, if it's greater than the dividend amount, you have no assignment risk. And if you are randomly assigned, you're actually going to net out, like Nick is saying, because it basically gives you the extrinsic value that you had, and you pay the dividend, but the dividend you pay was 20 cents, extrinsic value is 70 cents. You make out on that.
Yeah.
I've only had one time where I got assigned on an error where I made like $200 on a short in the money option.
Yeah.
And I just resold the option. So I basically doubled my extrinsic value credit. One time in 10 years.
Mm-hmm.
Let's see. 62 put strike and micro crude breached. Saw gas for selling for $2.65 a day. So here's what you do. You get a gallon drum. No, what is it? A 100-gallon drum?
55
gallon drum.
Barrel.
You buy it from Uline. You buy it from Uline and you fill that thing up with gas.
Yeah.
Then you can siphon it from your own garage. Yeah, 62 put micro crude. I actually might get into this. What are we doing here? Why am I not long this contract?
Yeah, get in it. I have some long delta here. I have a wide put spread here in the crude oil futures. I have the call spread that's pretty far out of the money, but still holds some value. This trade is basically, I think it's a couple. Let's see what it's trading at right now. I did this. It's a 40-cent loser at this moment. It's been between a 50 to 70-cent winner and a 40-cent loser, but it had about a 100-point spread.
Mm-hmm. I just got filled on micro crude, 61.78.
There you go.
Long the contract.
Beautiful.
Can you show me a good strategy to become profitable? Well,
stay small.
Stay small. That's the key. You have to be able to withstand any variance that you do not foresee. So if you're selling premium, do it in a way where you can just accept the shares or roll the contract into perpetuity. Because having time to manage positions really helps your ability to get out in a profitable way, especially if that's in an index like SPX or SP 500 or the NASDAQ, because those products are not like equity products that can just explode to the moon and never come back, or crash and never come back, like Lulu to the downside, or AVGO to the upside. Like indexes and sector products like SPY and Qs, they're much more manageable, especially over time.
Ultimately, it's all size, because
that's correct.
You can trade based on what your thoughts are of the future, but ultimately you got to be able to hold the positions if you're wrong. And so staying small, that would be the suggestion.
Mm-hmm. Yeah, maybe we should move to Dubai.
Yeah, sure. I mean,
yeah, that they're getting all of our
the Sky Toll. Yeah. Skyway.
Well, the Skyway and
the
parking apps.
I think that was daily.
That was the worst trade in the history of Chicago.
Horrific.
I think they got like $1 billion, and we're paying hundreds of millions every year.
Yeah, it's pretty amazing.
It's insane.
Yeah.
Worst trade ever.
We don't have very good politicians.
They're just not traders. We got to bring them on the show.
Yeah, they're not anything. They're puppets.
On that note, we're at the bottom of the chat, but
awesome. That's it.
That's it. We're at the bottom of the chat. No questions. But if you have any further questions, you can find us on the Twitter sphere. I'm at Trader Mikey B. Nixie Trader Nikki Bat. Katie is at Trader Katie. Go wish her a happy wedding day. It's going to be a glorious day.
Yes. We'll
Love
have
is
to
in
get
the
a
air.
picture of all of us.
We will. We'll get a picture. We'll post it to the Twitters.
Nice.
But we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central on Monday. We'll post all these trades we just placed to the follow page shortly. And we'll reconvene then. Have a great weekend. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's a macro risk right now that people aren't talking about enough?
Complacency is one. There's a lot of bullishness around. The street is very complacent. There's very little cash on the sidelines. And I think there's just, in general, the regulatory environment is too good, so people become overconfident.
I still think the geopolitical thing is very, very interesting. Frankly, I've had a tough time kind of parsing out the headlines in the news lately. I guess I would say like this ongoing discussion of just different conflicts that are going on and how it's pushing and pulling different asset classes. That's a super diplomatic answer. I'm not unaware of that. I think it's really important to kind of be mindful of your positions when there is so much talk and uncertainty going on and making sure that you're always controlling your size.
I mean, the dollar's depreciated over 10% against the euro and some other major currencies. I don't see how that doesn't start to play into some companies' earnings and their fiscal reports.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We're back. It's still Friday, September 5th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, happy or not so happy Jobs Day?
I mean, I guess that depends on what you're trading and what's in your portfolio. So it could be happy, it could be not so happy. I took on that long ZB position with you the other day, so I'm feeling fine.
I put this up on the follow page earlier, but I put on just thinking that the BLS was delaying its release this morning, possibly because of technical difficulties. And the context being that, of course, Trump had previously fired the BLS commissioner. I said, maybe it's going to be a soft number. So I added a little bit more into bonds, which is helping offset the position that was put on yesterday during overtime, the reverse iron fly, which was doing well earlier. It just needs to touch either 65.60 or 64.60 to really work out to its best benefit. But it's not quite there yet. We'll see if we can get there during today's show. But you know what? The market seems to be coming around to the idea here, Thomas, that these cuts are coming for increasingly bad reasons. As we would do on a Friday of Jobs Day, we would take a look at the report itself in a little bit more detail. 22K coming in versus 75 expected. Unemployment rate at 4.3%, in line with expectations, but it is a bump up from 4.2%. Wages come in line with expectations. That should say 3.7% for what it's worth. The labor force participation, right around the same levels, but the revision, this is what I want to discuss. June officially is now a negative number at minus 13K. That was a month that was up at plus 147K, Thomas. And just thinking about that, we see now that the streak of 56 straight months of jobs growth in the US has ended. Since the start of this year, ostensibly a year in which we're doing tariffs to bring back manufacturing jobs, I think we've lost now 41,000 manufacturing jobs here in the US. So looking at the scope and scale of the revisions, those calls for summer rate cuts actually do make a lot of sense. Inflation has been trudging along a 0.2, 0.3% month over month run rate. September cut looks like a lock, but I would point to what happened earlier. September wasn't the month that moved the most. That was October. October cut odds earlier this week ahead of the JOLTS data were at 47%. Now they're up to 71. Thomas, is the market getting a little spooked here that we may be getting cuts for the wrong reasons?
Yeah, I mean, at first the whole tariffs thing was, is it going to push up inflation, the threat to that? I mean, I'm not sure if the labor market, all of this can be attributed to the trade war, probably some of it, but yeah, it's looking like it's, the equity market definitely flashing a little bit of fear today. So I think that's the case that you have to expect this is cuts for a not so great reason. I think if we had an inline, 75,000, those cuts would still be coming. Maybe not the October being priced in so much more, but when you're cutting, you want, more latitude to do it at the pace that you want to. Whereas now it looks like the Fed is going to be kind of forced into following through immediately on this September cut. And I don't know, is there a chance for a 50 basis point cut in September?
Yes, if we get a really big miss on inflation.
And that's
let's say, yeah, right. That's September 11th, next Thursday. So let's just say that inflation comes in flat or negative. And now we've had several months in a row where the pace of jobs growth. So June is minus 13K. The reading for July, I just want to confirm that I have the right number here. Sorry about this, folks. The reading for July has now been revised to 79K. So the last 3 months are minus 30. So let's just go back for a second. January is 111, February is 102, March is 120, April's 158. Liberation Day happens in April. May, 19,000 jobs added. June, 13,000 jobs added. July, for now, 79. August, 22. Something happened in the spring. You said maybe it's tariff, maybe it's not. I would posit that it was probably something to do with Liberation Day at this point in time. And I know that's probably what you think as well here. But thinking about the pace now, if we're looking at a negative jobs print for June, and originally that was reported at 147K, so it ends up rounding out at minus 13. There's an argument that the Fed is starting to be late. So inflation, they're going to look through it. They've got to look through it. The labor market's the one that's falling apart. And if the labor market falls apart, then inflation is going to come right down with it. So yeah, September cuts here are priced in, but it's that October one that moves the most. And the October one is now in a very comfortable territory where you have to do it. not because you want to. And I think that was a really astute observation, Thomas. When we take a look at what's going on with the Fed, the market is most comfortable when the Fed wants to cut. It doesn't feel like it's being forced to cut. When the Fed is being forced to cut, typically it means that the market's upset about something. And maybe that's why we gave it all back today, because stocks initially rallied after the jobs report, Thomas. We hit up a high in ES near 65.42 or so, but we have since slumped back 64.81. We've been meandering around these levels for the better part of the last hour and a half. So nothing really has changed here as we've made our way through the middle of a day. A middle of a day that, by the way, has higher than usual trading volumes. Usually we look for 1 million contracts traded. Here in ES by the noon Central Time hour, we're at 1.19 million. So healthy activity in today's market. Thomas, is this the top? First question here. Is this the attempted breakout that failed in today's session?
I'm not playing it as a top yet. I think, if there's any time where it could be a top, you get these bad job numbers, you get the Fed being forced to cut or seeing as behind the curve. I think it's probably a better chance to call the top here than, the previous swing highs through August were. I'm not going to trade it that way because I just don't have enough confidence in myself to pick a top and being right at this very moment. So the way I'm going to play this, I've played a couple times on equities this week, but it's been 0 or 1 DTEs. And, that's just expressing a view that we're not going to break the swing lows or the swing highs of the day. So I don't know. I think we got to wait for the inflation numbers next week to get a better picture of what's going on. And I think Monday is going to come. And before you get that inflation, I think there's still going to be some enthusiasm in the market by the view that we're somehow going to get through all of this without going into a recession or a deeply protracted labor market.
Well, if that's the case here, right, there is still a needle with which the Fed can thread this if data stabilizes. 22K is not, I don't know if we want to call that a recession level, but it's a standstill. Like the jobs market is more or less iced right now for whatever reason. Maybe rates are too high. Maybe it's because of the tariffs. Maybe it's a combination of both. I think it's a bit of everything here. But at 64.80, the S&P 500 fell to a low of today's session, down at 64.52 before pulling back up. So we're about 30 points off the low now. And volatility has started to come back in, which after the IVR for ES hit a daily high of 15.74, we're now back down to 13.1. So, Thomas, if volatility is the North Star around here, you're not exactly seeing a huge surge in concern, right? The VIX is up a bit today. We're talking about 50 cents, but well off the highs when we were encroaching 16.92 high. We're back at 15.83. I don't want to dismiss the fact that while the market's had a rough go of it so far, we did have those Broadcom earnings, which traded choppy for a little while, but they did surge to the upside overnight. You were mentioning that to me earlier this morning, still up 10.9%. There's enough here that the second half of this day, maybe we've dealt with the correction again. It wasn't too long ago, Thomas, August 1st, really bad NFP report. That was the end of the sell-off. Stock market didn't go down much further. So we should be prepared that maybe that was it. If volatility is not encroaching to the upside anymore, a close back above 6,500 seems well plausible.
Yeah, there's still a couple earnings next week, but the focus is definitely going to be on inflation. So we're still above that 21-day EMA. We're still above that channel support there. So I don't think you're calling a breakdown just yet. This is kind of an inflection point though that we're at.
You below 64.45, 64.47, where that 1 month moving average is, it begins get stickier, right? And then you can see another one of those flushes back down to that 63.60 area. Our 50-day moving average is starting to creep up into their 63.52. Maybe that's what it takes. And then you have a bigger bounce. Otherwise, failure below 63.52, you really start to look a little bit more toppy at that point in time, where you've really failed out of the uptrend channel. You've lost momentum. A NASDAQ's already contending with that more or less here. An attempted breakout today, trying to clear the prior high on August 28th at 23,803.75. And no, we don't get through it. We're back to 23,647. But it's a 15.4 IVR. I think that still is the bigger point here, that even though some of these rallies today failed, the sell-offs are also kind of failing as we're going through the lunch hours. NASDAQ's almost back to unched on the session. And while the doji candle wouldn't look terrific, particularly after a rebound the last few days, you have a different sense of the market going into next week, where there is that recovery and people were not afraid, or at least they were willing to stay long stocks going into another weekend where no one can touch anything.
Yeah, and I mean, you got to consider we're going into the last few hours of Friday here. It's before the weekend. So, I mean, what do you want to do if you were long through the week? Probably sell that. That's probably what we saw in the post NFP reaction. A lot of people deleveraging, getting out, things like that. But I think it's also, it's encouraging that we're coming back off the lows, right?
Yes,
So
very.
if this was a lot of fear in the market, you wouldn't expect the VIX to contract back down. You wouldn't expect equities to move off their low. I would expect, if I called it this morning, I would say we'd have a trend day lower, where throughout the day we just gradually drift lower. So, coming off the lows here at right after lunchtime, I think it's pretty encouraging. I mean, I'm almost tempted to sell a put spread into next week, like something short term, just a few days out. But I'm not sure if I'll take that, just because I hate doing that before the weekend. If it was a Wednesday or Tuesday, though, I would do that for sure.
This is kind of not the place I want this market to be right now. Talking about that reverse iron fly yesterday, there was a point earlier today where it was working more or less on both ends, where it had pushed through 65.40 and it was dropping below 64.60. Decided to stick with it. Probably should have taken it off. At this point in time, it's not the worst place could be. If we get back to 65.10, it's going to be a really unfortunate day where this market was actually just pinned around a jobs report that I personally felt would produce a little bit more movement, net movement, than simply staying within the very meager 36 point plus or minus expected range. So hopefully we can go back to the highs, or we close out closer to the lows, Thomas, but we're 20 points from where I really need us to be right now in the short term. Otherwise, some of the longer term stuff, I'm still willing to hold on to, long MES, long the ES 6700, 6750 calls expiring at the end of September, because the uptrend still is in place here. Right. And one bad jobs report, which it's still positive. Maybe we can skirt through. It's just a frozen jobs market. Should we look to the Atlanta Fed GDP Now growth tracker following today's report? There hasn't been an update, but we go into this report with a 3% reading. Next Wednesday, we get the next update. So if the economy is still growing 2 to 3%, and jobs growth is in the low tens of thousands, it's not ideal. But maybe it's an engineered enough slowdown that inflation still comes in, offsetting whatever tariff nuisance we have to deal with, and stocks stay up. It's not exactly an impossible scenario.
Yeah, I mean, it's one not so great jobs report. Is that enough? If you think about it in the context of this rally we've been in, is it enough to really derail this rally? And if it was, I'd say you'd be seeing a bigger move right now. I mean, down 0.5%, 30 points on ES. It's pretty much nothing. I mean, right?
No, it's pretty much nothing, but there is a standout today, and it's the Russell. Past few days on the show, we've been talking about this tendency for the Russell historically, small caps in general, to outperform their mega cap counterparts, large cap stocks. Once you get through past the Rubicon of the first 150 basis points of Fed cuts from the start of the cycle. Now, last year we had 100. We have 25 price for September. We are looking at, according to the CME FedWatch tool, Show me the Ags. A 93% chance now of a 25 basis point rate cut in October as well. There is an 85.75% chance of that rate cut in December. That's interesting, Thomas. We're moving into a world where a 50 basis point cut yesterday was priced at 0%. We're now at 11.8% for September. So we're going to get to this threshold. The point that I'm getting at is we're probably going to get to this threshold where we have been 150 basis points lower from the start of the Fed cut cycle by late October. And while there may be some economic uncertainty, it does put us in the ballpark where upside in the Russell being a leader in this market move to the upside becomes more plausible. And if there is downside movement, the Russell may be a little bit more insulated than it would have been otherwise, like we saw in 2022, where 2022, it was getting thrashed by the high inflation and concurrent Fed rate hikes. This time around, it may have more of a cushion below it. So again, 14.8 IVR, lower than the NASDAQ right now, and the Russell's the only of the major four that are in positive territory. I don't think that should be dismissed or overlooked.
Yeah, definitely not. And I mean, it makes sense when you look at the S&P 500 sectors. XLRE is up, materials, healthcare, things like that. So we've wanted the rate cuts for a while. The market, we've wanted rate cuts. You wanted rate cuts. When you start seeing those 50 basis point rate cuts come in, that's when, like you said, the market is saying you're behind, because the Fed, when they cut rates, you want to do it incrementally. You want to do it gradually. If you're kicking it off with 50 basis points or more, you're pretty much saying, we were a little behind. And I'm wondering, and not that it matters that much to the market, how the administration reacts to this. Last month, it was firing the BLS chief. This month, there's no one to fire. So do you say you're vindicated in wanting rate cuts if the Fed starts, doing it at 50? Or even, talks of an emergency cut? I think that's mostly speculative for now, but maybe if it was a negative number, you'd get something like that. But do you keep the pressure on to influence the Fed to get more rate cuts now that the market's actually pricing in more? That's a whole can of worms there.
Well, remember that the Fed does not like to disappoint the market. That is a very important fact to remember. Since the late 1990s, as we've often quoted here on the show and elsewhere, anytime the market has been pricing in a 55% chance of a move in either direction, cut or hike, the day of that Fed meeting, the Fed has delivered in that direction 100% of the time, which is to say that if the day of this next Fed meeting, the market's priced at a 56% chance for a cut, historically speaking, the Fed has delivered on cuts with that probability every time since like 1996. I think that's enough of a window to look back to and say there's a way, there's a method to their madness. You may not like it in what the Fed does, but they very clearly signal to the market what will happen. And they really don't want the market to be shocked by what they're doing. So here we have 100% for 25 in September, plus 11.9% chance of 50. For October, 91% chance of a cut. For December, 85.86% chance of a cut. So the market's there. We're priced for 3 cuts this year now, right? Maybe you could fully price in a little bit more of another. But we're really at the brim. The issue for the market, I think, will be if the Fed comes out with the summary of economic projections and they don't vindicate this view. It would be bad for, general sentiment if the market says we're getting 3 and the Fed says no, only 2. It's like, okay, well, this situation is worse than what the Fed thinks it is. They're behind the 8 ball. So, the next Fed meeting is going to be very, very interesting, Thomas, as far as I'm concerned. But right now, the help is coming as far as the market's concerned. Let's see if the Fed actually delivers on it.
the help is coming, but is the biggest risk the inflation numbers overshooting next week? How would the market? I would assume that'd be bearish for the market.
Yeah, if inflation overshoots next week, stocks are probably going to hit the fan.
And I think that could be the trigger for a topping, and
that would, because then the Fed is starting to deal with a stagflationary perspective, which has been the impulse. I mean, we're not stagflation. Stagflation is contraction and growth, high unemployment, high inflation. We don't have high inflation. We have uncomfortable inflation. We don't have high unemployment. It's a 4.3% unemployment rate. And GDP trackers are sitting at 3%. But from where we were at the end of last year, inflation has gone up, growth has come in, and that's stagflationary directionally. So will we get more of that? Hopefully not. That's the worst outcome for the market. We don't want hot inflation here henceforth. The market wants the Fed to have cover to deliver support, or Powell himself credibly can deliver that support. Because if it's Powell doing it, then political interference is probably out of the question. If it's the next Fed chair, it's a whole can of worms. Cuts for good reasons, bad reasons. Bond market doesn't seem to care because the bond market sees, probably a worsening economy. Thomas, 2 days ago, you decided to get long ZB. We had that bullish outside engulfing bar on Wednesday where we had set the new low relative to Tuesday and then closed above the Tuesday high, highlighted here on the screen. That followed the JOLTS report, which showed about 220,000 fewer job openings in the economy than anticipated. It came in at 7.18 million, if I recall correctly. To that end, we had more gains yesterday after ADP missed, and ADP missed and NFP missed. Maybe ADP is finally getting its act together. But huge move to the upside today in bonds. 116.5 basically right now. Yeah, 116.5 right now. Earlier this week, you and I were discussing getting out of directionally neutral things, shifting into potentially some long delta exposure in this market. I'm assuming that you still hold on to that because you just put them on 2 days ago.
I got out of my ZB call spread because it was at 80% of max profit, and just a big move right away. I decided to take it off, get the profit. I was going to roll it. I'm going to wait till Monday to put it back on, and I think I will put it back on. Because my view is if inflation comes in at expectations or a little under, stay long equities, stay long bonds. But I think maybe Monday we could have a little pullback there and give me an entry point to get long again for the week. But I am going to get long again on the bonds.
If only to make a point, we've noted here that since 1980, anytime you have a recession, during the recession, and this obviously is only known in hindsight, but during the recession, the best two performing asset classes are the long end of the curve and then gold. Today, we look to the top of the heap, ultras, ZB, gold. 3 of the top 4. Lean hogs, you're doing whatever you want to do. In fact, it's only at 1.24% right now, so we can reshuffle this. So yes, it's the long end of the curve in gold, even the micro 1 ounce here. But I think the point I'm getting at is that the market is behaving today in the bond market and the metals market that recession's coming. So looking at the long delta side, to me, still makes some sense. For my druthers, because I put on the long ZN yesterday and had taken off the directionally neutral ZB, I was looking at the market this morning, and again, the BLS technical difficulties in the context of the former commissioner being fired because she didn't produce a good number told me that was going to come in weak. So I put on the 116, 117 long call spread just literally moments before the non-farm payrolls report on a hunch, not like literally filled a minute and 10 seconds before the report came out. So it was just a hunch. Hunch trades rarely ever work out for me. So maybe this one has so far, but I'm going to take this off by 2:30 Eastern, 3 p.m., depending upon where we go. It's at 116.5. I don't need to look to get horse in the mouth. It's a one-day trade. It offsets the losses. And if ES gets pinned here though, which is nice enough, so one cancels out the other, at least I could say that it's a wash for the NFP trading decisions.
Yeah, I think that makes sense. Taking off before the weekend, just one day, you get the profit out of it, and that's why I took mine off. If I'm getting that much profit out of a trade after 1 or 2 days, even if my view directionally remains the same, I'm going to at least book that profit.
Can we talk about some of these longer term charts, like the monthly here in ZN? This really looks like it wants to bottom down here, Thomas. That really looks like a bottoming attempt here in notes, which is, this is a downtrend going back to the highs that we had in COVID.
Right.
Right. This is not nothing. And we've seen variations of this in ZN and ZB in recent years. We've started talking about ZB potentially bottoming back, and I think in October 23. Again, we're trying to squeak outside of whatever downtrend we want to draw. If we want to draw it back to these highs, okay, we break out, we really don't fall back into the downtrend, and now we're rounding out into a bottom. No matter how you slice it, there's something here where bonds look like they're going to be a better long-term play to the upside. And we can trade around lows and treat them a little bit more significantly. So yeah, I think structurally, whatever happens today with ZB, this is a market where we should absolutely be thinking about long delta exposure. We're getting to the top side of where the contract traded back on April 30th. So maybe a little bit of wonkiness if we try to rally up a little bit more. But beyond there, the short-term charts, Thomas, they look like a market that's yearning to go to the upside. And this clears out the swing highs from July 1st, from August 5th. What more do you want out of a long-term bottoming attempt? This is the thrust that is ultimately required to show the conviction of market participants to shake off the doldrums.
Yeah, and it's good to zoom out and look at these long-term charts for context sometimes. And if you're expecting a long-term move, it doesn't mean you have to play the duration on that trade as long-term. You could just assume that the trend is now your friend and that you're going to be picking strategic, dips to go long, and you're going to sell the rips. That's how I see it.
That's exactly how I see it as well. So ZN here, ZB here, bonds are working today. Equities, metals, really feel like I missed gold. Some people were chatting me. Multiple people tweeted at me today. Looks like you couldn't buy the dip in gold. Time to chase. Some variation of that because I was hoping for a little bit more weakness and I never got it. But you see here, notes, bonds, just read the market for what it's telling you, right? Post NFP, the dust is settling. Yeah, we might be getting a little bit of a rebound back here in stocks, or not so much, 64.76. 16 points to make this reverse iron fly work. Not too much to ask. Bonds up, gold up. Rate cut odds for September through 100%, right? We're talking about spilling over into 50 basis points possibility, well clear of key thresholds for October and December. Just read what the market's giving you, Thomas, which I think yeah, go ahead.
The market's behaving as expected, right? It's behaving like it should in light of this data. So when that happens, it gives me more confidence to put on these types of trades and expect that they'll follow through, because these expectations are not going to change. They can change on the data points, but they aren't going to change day to day, or they shouldn't. So, your risks now are the inflation numbers next week, and then the Fed meeting the week after that.
Gold may be offering a signal of what's to come. Again, gold, bonds, best performing assets when the market gets ginned up about recession fears. Earlier this week, we got in that territory where we were a little far removed from our moving averages. We hadn't really seen a touch of the 1 week in some time. And you know what? Yesterday, we got pretty close. Today, for good measure, we got there. Low for today, 3595.4, 1 week, 3597.3. So after having touched it in some capacity, basically every session since August 22nd, we got here to September 3rd and we didn't pull back in, continue running now with a very strong up move in today's session. Volatility likewise stabilizing. Volatility is not going up so much, and the low IVR for today is lower than yesterday's. The high IVR for today is lower than yesterday's. A little bit more vol expansion will be welcomed. But what a beautiful technical chart. They're going to put this in textbooks. You know, if you're going to be a chartered market technician, a CMT, I'm sure this will show up in some exam someday in the future. Because show me a symmetrical triangle that looks like that, Thomas. So I didn't get back in, and now I'm going to be in chase mode.
Where's the measured move of this pattern take us? 38, somewhere around there?
Good question. Let's go to our Fibonacci extension tool. We could treat this as the base. So this would be one interpretation. 3750, we'll call it, just rounding out around there. If we wanted to take it to the final swing, which there's different ways to measure this, 3896 longer term. God, this doing that makes me just tingle with excitement, Thomas. I just need to get back into some options trades. The longer term stuff continues to hold, but missed opportunity. Now, silver is why we're reading the tea leaves here so importantly today. This was a real growthy kind of session where it's like, oh yeah, the Fed's easing. Let's all just grab all the risk assets. Bitcoin and Ethereum, likewise. Bitcoin was up nearly 3% in the session, now only up by 0.5%. It's an ugly looking candlestick. Ran into the 1 week, the 1 month and the 50-day, and got rejected lower. Ethereum, again, try to go back through the weekly highs, immediately back down towards the weekly lows, holding back on that 1 month. So these alts, if it's cryptocurrencies or metal currencies, either way, you're looking at a market that's doing something that's less risk and enthusiasm over cuts and lower interest rates, more concern about what the implications of those rate cuts are. So regret, filled with regret today, Thomas. I'd only wish I had more gold exposure still. And certainly the trade that I had on earlier this week, if I didn't cut it out, I'd be doing a little bit better now. I was out maybe $55 ago, but every one of those $55 in gold is hurt. I hate being on the sidelines.
Yeah, I mean, being long bonds, I should have been long gold or silver too. It's definitely, the gold bugs have been vindicated here. I mean, it's definitely interesting. Sometimes when these triangles break out really quick, I'll wait until they come down and retest the prior resistance. I don't think that's going to happen here. I don't think we're going to get a pullback that far away. We've already run pretty high. I think the 1 week moving average that you got on there is a pretty good entry point, especially looking back over the past, week.
Yeah, I mean, I think the important thing to note there is that if you're trading on a momentum basis, we've seen these breakouts occur before where we run up, we get a little far away, we spend a few days just stabilizing. Corrections can occur both in price and time, as we so frequently say around here, Thomas, and then it keeps going up. That becomes the level to watch, if only because it's the defining characteristic of the breakout, right? No matter what technical indicator you're using, you're basically using them to see how they behave during certain types of market environments and their relation with price. So for example, during strong periods in the stock market, you'll look at slow stochastics and they'll stay overbought for a long time. They'll actually never dip out of overbought territory. And once they do, you can go spot check this on your charts with your own default settings on stochastics. You would find that once they fall out of overbought, then the rally slows down and there's a bit of a correction. If not like could just be chopped for a few weeks or months, but the rally has downshifted. So if we were to see a close below the 5 EMA, the 1 week moving average, that would be a sign that this uptrend has been finished. And people who are trading this on a momentum basis in the short term should probably jettison that mindset and then think about, okay, if we can see a move down to like 35, just kind of drawing a line in the sand of recent highs that were respected in the GCZ5 contract, that becomes the intriguing point for you, where you get to the former breakout levels and you have a better risk to reward to size up some of those deeper out of the money call options that comport with our swing targets, depending upon how your triangle is drawn. But, give me a move back to 35.35, I'll be buying the 37.50, 3800 call spread. I just hope I don't have to do that today because it's too late.
Yeah, and I mean, is this a move where vol is actually contracting while gold goes higher? Is that what we're seeing?
That kind of is, and that makes me think that it's not going to be sustained. Whereas over the course of the past 2 weeks, every tick higher in gold was accompanied by that tick higher in vol. And that's not really occurring. And when it slows down, as we saw in April, right, vol stops going up, the gold rally eventually subsides. Takes a few days to digest, but vol coming out of the market correlated with a slowdown in demand for gold in the short term. Something to contend with.
Yeah, I mean, so the pullback, maybe 35.30 would be a great place to get long, I think.
In an ideal world, but every time, I've heard it from other people too. Like every time we've said, "Oh, we'll just wait for gold to pull back." This was the last 4 months was legitimately probably the best opportunity we've had in some time, when there was a multi-month consolidation to accumulate. Everything being in hindsight. I don't know and then when it breaks, it tends to run.
Yeah, resumes the prior uptrend. I mean, like you said, it's pretty much textbook technical breakout pattern trading that you see.
Let's move over to oil, which is getting slugged today, down 2.9%, and towards the lows that we had in August. Thomas, I saw that OPEC Plus had some comments on production this morning.
Yeah, I mean, I'm not sure if I saw the same comments you did. I know that they're meeting this weekend, the OPEC Plus members, and considering releasing more of their voluntary production cuts. What's the actual comments that came across?
Well, that's exactly it, that they're looking potentially of Saudi Arabia wants OPEC Plus to speed up oil production in its next boost. So if they are reviving production ahead of what was previously anticipated, this certainly presents a new wrinkle in the supply-demand dynamic. And then you sprinkle in the backdrop of a weakening U.S. economy, at least aggregate demand for energy probably softer. I mean, big picture, Thomas, like the North Star for the energy market, demand for oil over the past 30 years on a quarterly basis has a rolling correlation with global GDP of 0.92. As the economies grow, demand for oil goes up. That's it. That makes so much sense intuitively. More growth, you need more energy to fuel that growth. So when oil deals with a GDP report, an NFP report like we had today, wrong acronym, we find ourselves, okay, fewer workers, less demand. That's it. So OPEC wants to increase production against a bad demand backdrop. Demand is coming down, supply going up. It's a nice little 1-2 punch. But where's vol? Again, the question. Vol didn't explode higher or collapse today. It's been in the mid-20s like it has been for how long? Directionally neutral near 64, not working out so much. There could be a bigger flush here below 61.25. And I think that is perhaps a potential tap out point for any directionally neutral range trading, even for someone like me who just rolled the position out to 41 days. It becomes more of a trend market, Thomas. And I don't want to be involved in a directionally neutral trade if it's going to be trending down towards support. So having had the short call spread side on, I would remove the short put spread side and hopefully take advantage of a deeper setback that maybe brings us down towards 58 or so.
Yeah, I've got an iron condor on 41 days out between 60 and 67.5. It's been working really good up until today, getting a little close to this put side here. I'm going to keep it on for now. If we break below 61, I think that clears out some of the support that we've seen going all the way back until June. I'd probably close out the put spread side, leave the short call spread on, and just see what happens from there. I think a lot of it's going to be what OPEC does this weekend. So Sunday night, we're going to see what happens with oil.
61.64 here in oil, 24.6 IVR, natural gas, a little bit of a turn potentially. Big up day on Wednesday, doji yesterday. We're getting a little bit of a down move here today and an apparent ceiling up near $3.13. Natural gas has been a little bit of a bear for me personally over the past several months, but I'm looking to re-engage here. Although at 28.5 IVR, it's not all that appealing, Thomas. Okay. What do you do with this chart given what we've seen in terms of supply and demand, some of the inventories this past week?
I mean, inventories are going to continue to build for at least the next 2 weeks. This is a time of the year when they should usually be declining. So you get this build, and you're going to keep getting these builds because the weather is just not offering any support for demand. So you're not pulling out of that inventory. We had this long sustained downtrend since June. The shorts were they were in firm control of it. Then you get the break below 3 in August, and it drives kind of this fear-based move. So I think at 2.7, the market kind of got overly bearish. And this rebound makes sense a little bit coming after this multi-month downtrend. So rising back above, the 1 month EMA, staying above the 1 week. It's encouraging if we can stay above that. I mean, that's kind of my view. I have a short put spread on in NGV5. It's 20 days out. The short's at 3 and 2.95. So I'm going to just keep this on right now. It's not the best spot I'd like to be in. But if we slip back below those EMAs, we get, a big storage build next week. Then I'm back into probably the bearish camp for a while.
Yesterday, Jamal and I were looking at what would happen if we wanted to square up a trade, maybe against a 270 level, just because that's the most recent local pivot low in the market. You could do that, straddling it basically with a 2628 short put spread here, and it's a 65% probability of profit. Thomas, the problem that we run into is that there's just awful risk to reward right now. Worse than 4-1 here, nearly 5-1 at that point in time. That's not a trade that I want to make. And it's a bigger contract. So I think that we pass for now.
Yeah. And I mean, if I'm saying something right now, if I'm making a call, I think stay above 3. But I don't think there's enough to really continue this rally here. And like you said, the volatility, it's not that elevated. So, don't force a trade. If you're trying to trade natural gas, maybe just wait until next week, see if something develops.
Okay, let's make our way over to the dollar. So the dollar's having a really terrible session right now. Not everywhere. The Canadian dollar is miraculously bad. It's incredible how bad this currency is. Among the better calls this week, right? Why is the Canadian dollar struggling every time the dollar falls? It's always at the bottom of the pack. A few days ago, we had IVRs 114. What was that about? Good opportunity to get in there and sell a call spread. There's still a 57 IVR. I'm at 28 DTE, so I'm going to be looking to roll this next week. And at 63 DTE is something like the short 73.5, 74 call spread is still appropriate. Maybe we have to tick it down a touch to take into account the fact that 73 really seems to be a rock solid level in this market. We have tried support initially in June, July, and since August and here in September, it's just been resistance. So respecting that, pulling this down, 73.5, 73, we start to look at a potential trade here that while it's not above 60% pop, it's in that territory between 2 to 3 risk to 1 reward. And that's appealing. So if the dollar is going to find footing anywhere, apparently it's going to be versus the loonie. And that makes sense. 80% of Canada's exports come to us. And if our economy is seeing lower demand, well, then their biggest customers basically turning off the lights for a little while. And that poses a real big problem for them. So I would look here, right? You have this Canadian dollar that's still struggling. The euro obviously leading the way higher, 0.73%, not quite through those late August highs, can't get through. But I say dollars last bad days because how much more can we price in? How much more can we price in right now for the Fed to cut? We're at 85.86% chance for December. So 15% more. Otherwise, you're calling for a 50 basis point rate cut somewhere along the way.
Yeah, and I mean, we also have an ECB meeting, I think on Thursday, right?
Coming up, it's yes, ECB and US inflation on the same morning. So Eurodollar is going to have 60 is going to have a really active second half of next week.
So the euro, the ECB, I think they're going to hold. And if you look at the yield premium in the 10-year for the US versus the euro, it's dropped to its lowest it's been at since early April, right at that Liberation Day level. Now when we were trading back there, the euro was trading at 110. So we've rallied another 7 points, and we're back at that place where the yield premium in the US is at that same level. So this is definitely driving some of the move, but it that price relationship between the yield premium and the euro is kind of telling me maybe we don't have that much further to go. I think short term, yeah, the euro is going to maybe go up to 120, somewhere around there. But I'm not too convinced it's going to be a trend that holds through the end of the year.
I'm also in the short British pound territory in the 6BZ5 contract with a short call spread here. That's not working out. It's at 28 DTE, but I'm going to keep an eye on the high from September 2nd, the monthly high, 135.57. If we breach there, then we have just busted what was a bearish outside engulfing bar high. That should signal some sort of top. Okay. And that would not be respected in that event, which tells me then, hold on a tick. We go over here to the July high. We think about these recent swing highs. If we're breaking through the monthly high here in September, this series of lower highs and lower lows that has defined the pound over the past several weeks, going back to July 1st, it's done. And then you necessarily have to think, okay, well, the dollar may have one final swing of weakness, which again, very crowded trade still, part of the appeal, in my view, for looking long the dollar. But you could just, Thomas, you could see it here on the Euro chart as well, right? We could be potentially breaking a downtrend here. And if we do, you get another push up to 118, 119 or so in the Euro and the pound. You get a move towards like 137, 138, one final hurrah. If the US is giving us 3 cuts, Europe is going to catch the cold, just like Canada does, just like everywhere else does. And the ECB is going to have to catch up and play those cuts. So will the UK economy. So right now the market is focused on the Fed, but we basically priced in all of the cuts for this year. We're at 3 now. How much more can we go? You have to make the case that we need to have 150 basis point cut in 225 to really substantiate that much more dollar weakness. So as far as I'm concerned, this is a gift. Long dollar didn't work today. Long bonds did, offsetting each other in some degree. I think we have to take this as an opportunity to reposition exposure if you're looking for long dollar exposure. If you weren't in it, this is a gift, as far as I'm concerned.
Do you think if we run more towards a stagflation, inflation is high, do you think the safe haven demand for the dollar comes back?
Yes, I do.
Because we haven't seen much of safe haven dollar buying this year. And it makes sense when you consider everything that's been going on. But, I think that has to return at some point soon. And I think it will.
Does it have to? Couldn't it be impaired for like the next several years under Trump?
It doesn't have to. If it had to, I'd be buying a lot more dollars.
That's true. And we'd both be on an island somewhere.
That's the goal.
That's the goal. So the currency space volatilities have come in a little bit. I think that's a bigger point, though. Earlier this week, 30s, 40s, 50s in your IVRs, now back into the 20s, except for the loonie, which is at 57 still. And 28 days, you can ride it in a little bit, but 63 to me is where the best positioning looks. Yesterday on the show, we were highlighting the Swiss franc, which, while not having listed options, instructive about how the market is holding up. It looked like a break was coming yesterday, not so much here today, and punching up to new highs that we've seen since late July. Another one of those, okay, the dollar could have this setback. The market gets to its 3 full cuts. One more wave of a little bit dollar weakness, and then we move on, and the dollar finally bottoms. But we haven't broken in DXY. We have not broken in DXY to significant levels. We've been holding these lows for the better part of 3 weeks now. If we hold them still, like we have today, the bottoming process continues. That's all there's to it. What's next on the calendar? We'll look at the macro calendar ahead at the start of next week. But for Monday, at least, we do have German trade data. Very exciting, Thomas, for someone out there, not for me or you. But German trade data is coming out on Monday morning. The U.S. does not have much significant event risk. You mentioned there are a smattering of earnings reports, but we're through the big ones right now. When we look at the auction calendar, though, that picks up next week. Tuesday, 3-year notes. Wednesday, 10-year notes. Thursday, 30-year bonds. So we will have in this Fed communications blackout window week, we will have some things on the Treasury side. We get to look at foreign demand. Do foreign investors continue to want to fund our debt? Thomas, we're done here. We've had a decent enough week here in Futures Power Hour. Of course, I'll be back with Illy on Monday for both this and overtime. Dylan's back on Monday too. I will see you, my friend, later on. And the next Friday, by the way, at work before 11 is in New York City. So if you're in the New York metro area, I will be there. Hope to catch you then. Good luck trading, though. We're going to take a quick break here on Tasty Live. Grab a coffee, grab a snack, come back. Dr. J's here with From Theory to Practice. See you there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
And this is From Theory to Practice, and today we are going to finish our series on a deep dive into extrinsic value. So Josh, let's go ahead and get that guy going. So these are the 3 drivers to extrinsic value. We've been doing this for the last few days. This is going to be the final installment of this series because, again, remember, as premium sellers, like, this is the thing. This is the thing that we're selling in the marketplace. This is, in my opinion, the most important element, or one of the most important elements to what it is that we do. So we did part 1. We talked about time. We did part 2. We talked about volatility. And here we go with part 3. So Josh, go ahead and kick us, get us into the slide, I should say. So this is going to be driver number 3. So driver number 3 is going to be the proximity effect. So when you start thinking about what are the things that impact and influence extrinsic value, right? At the end of the day, we talked about time. We talked about volatility. In my opinion, those 2 are pretty simple. Those 2 are pretty straightforward indeed. This last one, driver number 3, this is where the rubber really hits the road. This is where it begins to get a bit more challenging to kind of understand like why this impact is driving extrinsic value and what is the root cause of what's happening here. So ceteris paribus, the closer an option is to at the money, the higher its extrinsic value. Now, most people, when they start trading options, most people, when they begin kind of selling premium or even buying premium for that matter, this is kind of a textbook definition. This is kind of something that you pick up in like an options 101 class, or not even like in an options 101 class. This is in like the, like the prereq to options 101. It's like, yeah, at the money options have the greatest extrinsic value, right? Well, when we dig a little bit deeper, and we go an extra layer or 2 down beneath the surface, we begin to learn some really interesting things that can help us on order entry and also over the life of a position. Simply put, the proximity effect, which is my own term, by the way, if you Google proximity effect, it's not really going to help you. It's just going to bring you right back to a live feed of what is happening right here. But it makes the most sense, in my opinion, to describe what's happening. The relationship between the stock price and the strike price, that relationship, so that distance, I should say, that has an incredibly powerful effect on what the extrinsic value is going to be for a given option. Case in point, if you have an option that is slightly out of the money, because remember, we're premium sellers, we're high probability premium sellers. So we're going to focus primarily on out of the money options. So it makes the most sense for us to begin our analysis focusing on out of the money options. If you are slightly, but maybe 1 or 2 strikes away, you're going to have a very strong proximity effect. Like the proximity effect is going to be very, very strong, putting a lot of pressure on the extrinsic value to be higher. And the reason why that is the case, let's actually skip down to the key right now because I think it'll be really, really helpful. All the risk, because remember, all the risk in an options transaction, all the risk in that little contract between the long side and the short side, it rests with the short side. Well, we talked about this in installment number 1. We talked about this in installment number 2. And here it is again in installment number 3. All the risk is with the short side. Okay. If we go one step further, though, if we go one layer beneath the surface, all that risk doesn't really kick in until the option goes in the money. Now, that doesn't mean you're guaranteed to make money if the option stays out of the money. That doesn't mean that you're not going to have to suffer some, negative P&L swings even when the options are out of the money. All those things are true. But when we start talking about the catastrophic risk, when we start talking about the big outlier risk, none of that is going to happen until the option goes in the money. Okay. Well, think about an option that is slightly out of the money. Again, just think 1 or 2 strikes. Where does that guy sit from a risk standpoint to the short side? It's on the higher end. It's on the higher end because there's not that much room. There's not that much buffer between where the stock price is now and where the strike price is on the option because it is only slightly out of the money. And so when the option is slightly out of the money, as opposed to further out of the money, which we're going to talk about here in a second, the extrinsic value is higher because the short has to charge more for that option because he or she is taking more risk. And to be compensated for that additional risk, you're going to see a higher extrinsic value from that stronger proximity effect. Okay, what if you have a further out of the money option, which is what we alluded to a second ago? Okay, here you're going to have a weaker proximity effect. Here you're going to have a weaker proximity effect, which is going to put downward pressure on the extrinsic value. And why is that the case? Well, again, just think about the risk standpoint. Think about the potential for the option going in the money. It's much, much lower. It's much, much less because you have so much room between where the stock price is now and where the strike price is on the option because it is now further out of the money. And so the proximity effect, in my opinion, and the way that we described it here today helps to really kind of wrap your mind around that relationship between the stock price and the strike price in the Black-Scholes option pricing model. Because again, remember, and we kicked this off in the very beginning of installment number 1 just a couple of days ago, or if you're on YouTube, just a couple of minutes ago. The Black-Scholes option pricing model is controlling all of the pricing metrics and all of the mechanics for determining extrinsic value, intrinsic value, and all those things. We talked about time, we talked about volatility. The proximity effect is capturing that relationship between the stock price and the strike price, which you see right there smack dab in the center of the Black-Scholes option pricing model, or really any option pricing model for that matter. Because the Black-Scholes, while it's the most popular and it's the most widely used, it's not the only one. And so again, if you go back to time, volatility, proximity effect, if you just think about the base relationship between the long side and the short side, it's going to serve you very, very well for understanding proximity effect. One final point, because we kind of talked about this a little bit with trade with time and with volatility. What about trade entry? What about over the life of the trade? Well, both of these relationships that you see on the slide, the strong proximity effect, the weak proximity effect, I mean, they can both really be applied to trade entry or over the life of a trade. But again, if you think about the simple fact that, man, it's been said before, and I don't know who said this, but it's pretty good. For every gimme, there's a gotcha. That's exactly what's happening here, right? If I'm going to sell options, if I'm going to sell premium, right? If I sell an option that's only slightly out of the money, I'm going to collect more for that option. But again, I am now on the razor's edge of potentially having that option move in the money, which is where all the risk kicks in. If I sell a further out of the money option, I'm going to have a lot more buffer. I'm going to have a higher probability, but I'm going to collect less because there's lower risk. So on trade entry, you could apply either one of those. Over the life of a position, you can again use both of these relationships, and they help to, describe and kind of pinpoint why your P&L might be changing when it's changing, right? Like if you sell an option that's out of the money, let's say you sell a 30 delta put or a 20 delta put or whatever. If the stock moves such that the put is now closer to at the money, right, it's going to be picking up a stronger proximity effect. The proximity effect on the option is going to be increasing. So the extrinsic value is going to be increasing. So what is that going to do to your P&L? It's going to go down. Because again, remember, if I'm selling an option up here, I want to buy it back down here. I don't want it to go even higher. I don't want to sell it here and buy it back up there. That's not my objective at all. Similarly, if I sell an option, 30 delta, 25 delta, whatever, and the stock moves such that the option is now further out of the money, this is where you're going to see the option price fall. You're going to see the option price fall, at least for one reason, is a weaker proximity effect. Now, again, remember, there's all kinds of things happening in the market. It's always a myriad of different factors that are impacting the options price. But this is how to understand the proximity effect, whether it be trade entry, whether it be over the duration of a trade, or whatever it might be. Time, volatility, and the proximity effect, those are the three main factors driving extrinsic value. So, Josh, go ahead and bring us into the market, man. Man, let's do it. All right, guys, look at this, man. This is not good. Okay, EMA S&P is down 41. And I see you guys, by the way. Hold on. Let me pull you guys up because you guys are not on my screen right now because I got other things on my screen because I got to focus on the, the educational stuff. But now we can kind of, we kind of put the sweatpants on, put the hoodie on, and it's just me and you guys, man. I appreciate you guys, man. Look at you guys. Boulette's in the house. Man, the Drunken Chefs even made the show today. Man, that's amazing stuff. Theta Traders in the house. Daniel Perkins in the house. Brian Dowdy in the house. Brian Dowdy. Hold on. Where are my receipts at? There it is. Brian Dowdy, Lululemon. Bro. It's not even my fault, man. And I don't care if you gave me the direction. I don't even care if you gave me the strategy. You put the idea in my head. You were the brainchild, the inspiration of this trade. And so, of course, I'm going to send you an invoice for 80% of the cost. And so, but I appreciate you still watching today. I appreciate you, coming out in public. That's some good stuff. So if you look at EMEA S&P is down 41. It's not good, guys. It's not good at all. I got the risk-free instrument not really doing risk-free things. Down 50 on the day. You've got the boomers down 341. Then you've got the Russell 2000 futures index down 2 on the day. And so pretty much unched for the Russell 2000. But then if you go down the list here, well, actually, we don't even need to go down we don't even need to go down the list, I should say. Man, look at the medals. Shifties are celebrating, man. I mean, they're excited, right? It's the start of a brand new football season. I mean, Josh just, reminded me that the Chiefs play tonight, like in Brazil or something crazy. And so, I mean, the Shifties, the Swifties travel pretty well. So I would imagine the Shifties also travel pretty well, especially with gold up another 44 points today. And you've got silver up 11 cents, almost 12 cents, or a little over 12 cents now. And so the metals bros are celebrating for sure, because why would they not be celebrating? Of course. And so, yeah, you've obviously got volatility is going to be, let's see, volatility is going to be on the rise today. You've got volatility futures up 45 cents, and then you've got spot volatility up 70 cents, up to 16. And so, all right, so we got a lot to do today, man. So, all right, so obviously we need to talk about some butterflies, right? Obviously we need to have a very, direct kind of, meeting, a little meetup here about these butterflies. We've got Lulu, we've got SPX, and we've got GC. Now, as you see, if you look in the portfolio, GC is gone. And if you follow me on the follow page, which of course you should be doing, for easy fades, again, if you faded all three, sight unseen, you hit 2 out of 3, right? If you faded all three, sight unseen, that's 2 out of 3. Now, Lululemon was so bad, you may have actually overshot it to the downside if you did do a butterfly. And so that would not have worked. But I think gold would have been a nice cash. And well, obviously SPX, you would be getting hurt on that. But 2 out of 3, I mean, again, if it's good enough for Meatloaf, it's good enough for me. But if you look at gold, it's gone, right? It's nowhere to be found. Well, I actually closed this about 30 minutes before the show. I wanted to wait, but I'm like, gold just keeps ripping. It just keeps going higher. It is showing no signs of letting up. And so I was like, man, let's go ahead. I couldn't believe I could get anything back, to be honest with you guys. I couldn't believe. I figured it was going to be worthless. I figured it would be sitting there like 10 or 20 cents. It's like, all right, let's just let it go and just hope for a 100-point down move on Monday, which of course could happen. I mean, it's happened before. Maybe Monday's the day. But when I saw 70 cents, I'm like, I'll take it, man. I'm like, I will absolutely take it. I mean, we bought it for 610. So we saved about, 12 and a half, 13% of the cost of the butterfly, which is not that significant, of course, but it's not completely trivial either. Like I wouldn't, toss this guy completely in the trash as being completely insignificant. I think it's, it's a little something. So we took it off right before the show. You can see that right here. Again, it's very important to me that you guys see all the things that I do. And so I wanted to hold it for the show, but I was afraid that it was just going to completely evaporate into thin air. So we did take it off a few minutes before the show. But then, look at SPX, man. It's saving the season. It is saving the season. We'll talk about SPX here in a second, but I also want to talk about, of course I want to talk about Lululemon. So let's actually start with Lululemon. I mean, it's going to be pretty quick, We just need a moment of silence. We just got to pour one out for Lululemon, right? Whether it's a Natty Light Ice, whether it's a banana daiquiri, whether it's even a little ghost if you want to take it in the other direction. I would just pour a little out for this Lululemon position. And also Brian, because he's the one that brought it to our doorstep. Lululemon down 37. No, I don't hold you responsible at all, Brian, of course. I mean, maybe like a little bit responsible. But Lululemon down 18% today. That's crazy, man. Didn't the stock do the same thing the last time? Wow, let's go to the chart here. Is this a daily chart? I think it is. Look at this thing, man. Wow, it was actually worse last time. Wow, so okay, so you've obviously got this, right? And then you've got this. So this is what's happening to us. This is present day. This is yesteryear, right? But look at that drop before. That's nuts. So how big was the drop before? I guess it was worse. I mean, that gap just looks visually a lot bigger than this one. But let's see if I go in here. So the close the day before earnings last time was 330, and then the open the day after earnings was 271. That's a 60-point drop on a $330 base. I mean, percentage-wise is actually quite similar. And so percentage-wise, obviously dollar-wise and like market value-wise, a lot more was evaporated before because it's a bigger base. But relatively speaking, it's about the same. It just doesn't look quite as impressive, because you're starting with a smaller base. And so, man, Lululemon, yeah, I don't know. I don't know what they said. I mean, I have no idea. I'll tell you what's funny. It was right in front of me, guys. It was right in front of me. So my wife, right, just like, most women these days loves her yoga pants. Like she has several pairs and all, like she just loves them. She absolutely loves them. But here's what's funny. She doesn't get Lululemon because they're too expensive. She's like, I'm not going to pay that much for a pair of yoga pants. It's crazy. So she gets this knockoff brand. It's called like Woo Woo Women or something. And they're amazing. Like she loves them. And so they're like 80% cheaper than Lululemon. And so when I saw the Woo Woo Women's, I was like, man, I should have seen it. I should have known. I think that's what all the women are doing these days. They're not going Lulu. They're going Woo Woo. And that would explain a 37-point drop. So anyway, there's our Lululemon commentary. But let's go to SPX. By the way, we've got to talk about Rocket Lab. Well, I'll come back to Rocket Lab, but let me give you a little teaser. I have no idea what's happening in Rocket Lab. I have no idea what strategy this is. No idea whatsoever. This must have been a monovision casualty because this is like a reverse ratio spread, which is a different type of ratio spread, of course. And a lot of traders like to do ratio spreads like this. I never do, though. So when I looked at this earlier, I'm like, this is so confusing. How am I making money? And what strategy is this? And then I looked back at the tape, and we actually put this trade on back on the first day of monovision when I couldn't see anything, which I can't really see anything today, even though I'm back to my regular vision. But man, actually, let's talk about Rocket Lab for just a minute, since I'm on it. So here you go. 829, we did this trade. We paid $337 for it, right? But again, I couldn't make out colors. I couldn't make out numbers, which I still really can't do today. But I don't remember you guys calling me out on this in the chat, which this is what you guys are here for. Like, you guys are here for additional B- humor and commentary, but also you got to call me out. Like, when you see me doing something crazy, when you see me like actually like, paying for ratio spreads and, maybe like selling diagonal spreads or something just crazy, man, you guys got to be there, Johnny on the spot, because on 829, which I think was Friday, right, which was the first monovision day, we did a ratio spread for a 337 debit. Now look at this ratio spread. Just look a bit more closely. I mean, we're crushing it. We're absolutely crushing it on this ratio spread. So I'm like, man, we should do more of these. Like, I think we should just do this, actually. But if you look at the ratio spread, normally we're doing a 1x2 where, we're actually, we're long one and we're short two. So if you look more closely at this, again, I don't know what I was thinking. I mean, I looked at the timestamp. We did the trade during the show, and I'm like, man, I'd be curious. Go back and watch the archives on Friday. Right? I mean, go back and watch the archives because your boy needs that watch time. But also, it might be a fun little, what was I even thinking? Like, I kind of want to go back and watch the archives this weekend, which, Autumn has given me very strict instructions. No from theory to practice on the weekends. Like, there's really no from theory to practice in the house on the weekdays, but I definitely can't get over that. I definitely can't let that guy fly on a Saturday. But anyway, you guys should check that out and just see the craziness that ensued around 2:32 Eastern time. But yeah, so this is a 1x2, but it's short one and long two. And so the reason why we're making so much money on this strategy is simply because, Rocket Lab is up again today. And we have an uncovered long call that is just banking. This thing is just banking because if I go to, let me delete all this. If I right click and I view market state snapshots, you can see that at the time that we put the trade on, the price was 1774. And you have, this is what you want. You buy a call, you want the stock to go higher. You buy a put, you want the stock to go lower. Well, we bought a call. Essentially, we have an uncovered long call. That's the reason why we're making so much money. And now the stock is over 20. And so we bought it when the stock was under 18, but now it's over 20. So clearly, we're going to be making money on the strategy. And so, honestly, I never do a strategy like this. So I would have to really think about how I would want to manage this. And so I'm not even going to do that. Because, oh man, look at SPX, man. Our profits have evaporated. Oh man, we just lost like $300 in the last couple of minutes. Oh, that's brutal, man. We should just let it roll. Man, we should just let it ride. Famous last words for sure. But let's close out of this Rocket Lab trade because I don't even know what's going on. It's too funny, man. It's so funny that we did this trade. I'm like, I did this trade. Did somebody hack into my account? Like, is this a Josh Fabian trade? Because I know he likes to do crazy stuff like this. And so let me see here. Let me go into Josh Catches Strays here on the show. Let's try to get out of this for like 585. All right, so we got filled on the Rocket Lab trade. I don't even know what I said on the follow page. Like, I'm actually curious. Hold on, let's do this. Let me look at this. Because I think what I thought I was doing was I was doing an 18-16 put spread. That's what I think. Where I'm selling, let me think. Where I'm buying an 18 put and selling 216 puts. I mean, that would be a more traditional way that I would trade something like this. But let me see. I gotta see what I said. What did I say? I mean, I could look it up. I could look it up after the show, but I'm curious. Did they boot me? Did they take me off? No, I'm over here. Okay, hold on. Let's click on Jim Schultz. Here we go. Where are we at? Rocket Lab. Here we go. Look at this. There it is, right there. It's this trade right here. Look at this. It's crazy, man. That's so crazy. I mean, there were so many red flags. I couldn't see any of them, right? Debit, red flag. Pop under 50%, red flag, right? Craziness on the order entry, red flag. Couldn't see any of it. Monovision, strikes again. But what did I say? That's what I want to know. What was my comment? Because I write all these comments. This is not a robot. This is not a... Oh, it's a zebra. Oh, it's not even a ratio spread. Wow, that's what it is. All right. Okay. Man, this monovision's got me all out of sorts. Wow. Okay, so that makes total sense now. I'm so glad that we took it off. But yeah, okay. This was from one of you all. I remember now. Oh, it's all coming back to me, man. Celine Dion nailed it like 30 years ago. It was a zebra. When I look, I don't do that many zebras. Oh my gosh, wow. That's unbelievable. Only live on the Tasty Network will you ever see, tomfoolery like this and just crazy mistakes like this. And so aren't you glad that you're here? When I saw it in my order book today, and I was looking through it, and obviously I've been somewhat distracted because we're weaving in this educational stuff. And so I've got to get that more into the, just kind of like the normal operation of things. We're not going to do that every week and not every day, at least not right now. And so there won't be any of that next week. But yeah, zebra makes so much more sense. But when I saw the 1x2 in my book, I'm like, that's a ratio spread because that's how a zebra goes in. But I'm like, wait a minute, that's a weird looking ratio spread. Okay, man. So the YouTube, or not the YouTube, but the follow page comments bailed me out. All right, so Rocket Lab Zebra. Okay, so thank you for whoever brought that to my attention, because I don't. You guys are trolling me on the Celine Dion and the Meatloaf stuff. That's funny. But anyway, Rocket Lab. Okay, so we got Rocket Lab. All right, so SPX. We're gonna be unched here in a second if I don't take this thing off. And so we got crushed, man. It didn't work. We ended up, I mean, basically the SPX is going to cancel out the gold. And then we end up with, the Woo Woo Women loss here. Although I think Woo Woo Women is actually doing great. I think you can trade it on like the Chinese exchange or something like that. Maybe like an ADR or whatever. But yeah, let's get out of this guy before they take away all of our profits because it looks like it's coming. It's coming for us. Let's do 860. Okay, so we, again, we got 1 out of 3. We ended up burning, essentially we lit 2 stacks of cash on fire, but we actually, we essentially doubled another stack of cash. So we ended up net 1 stack of cash completely in flames, like pile of ashes. And so, yeah, that's the way it goes, man. That's what you sign up for with expecting move butterflies. And so it's going to be funny though when they really, I mean, earlier today when ES was down around, because it was in the 50s, right? Let me bring up, hold on. Let me get let's do like a 2-minute chart. Let's do like a 2-day, 2-minute. Yeah, here you go, right here. So this guy was like, yeah, it was down to 52 at one point. I mean, I wasn't looking at the SPX butterfly at the time. I mean, I was preparing the proximity fact and kind of getting ready for the other elements of what I've got going on. I wasn't able to look at it at that time. And so I have a feeling that the SPX butterfly was probably doing quite well. Now, it was a lot earlier in the day, and so it was only, but it was 11, it wasn't 9:30. We may have been able to close that for, I don't know, 15, 18 bucks maybe, some 20 bucks maybe. That would have been amazing, of course, but I missed it. And so that's just, that's the way that it goes. And so the rest of the things in the portfolio, though, I mean, everything looks okay. I mean, Best Buy, the Best Buy bros and the P&L Open bros are going to get us. Chipotle is going to be in the 3 handle here in a minute, which is pretty crazy. And then, you've got Google, HIMS, IWM. IWM, excuse me, is getting tested on the upside. But I'm going to sit tight right now just because we've already rolled this guy in October. And let's kind of sit tight. There's Woo Woo Women, which is going to go away. And there's my wife's going to get a kick out of the fact because I say that around the house all the time. But now that we've been able to bring it to the show, like that's great. And so Meta, yeah, that guy's probably going to be done. And then Palo Alto, that's a Sam L trade. I know that. I got that receipt too. And so this guy's working out pretty well. And then Starbucks, it's Starbucks, man. I mean, what are you going to do? That's our long-term playing. That's our long-term holding. All right, so where are you guys at though? I got to get to you guys, man. Let me surprise and delight somebody in the middle. Oh, I see somebody. Hold on, this is funny stuff. Small Trades Office says Dr. J needs some Lulu sweatpants. Is that a thing? Is that a thing? I mean, if it's $120 a pair, I'm not interested. But you give me some Woo Woo Women sweatpants, like now we're talking, like $8, 2 for 15. It's like, man, that's some good stuff. And so let's see. But I see, Bullets is in the house. Says, Dr. Jimothy, how many LMNT cans do I have to donate to become a part of the core position? Well, the fact that you're here again, man, you're in the chat, you're active. I mean, I know a lot of you guys are watching and you're not active in the chat, which I got it. I understand that. And a lot of you guys are just listening, like you're not even able to like chat in. Like we're not at a point yet to where the YouTube chat can read your mind and take your thoughts and put them in the YouTube chat. I mean, from everything I hear, it should be no later than January, but it's not happening yet. Right. And so I understand that you might be accessing the program from an audio only version. And so I get it if you really can't, be a part of it. But obviously, if you're in the chat regularly, then I kind of know. And Bullets, you've been around. You've been around a little bit. So I don't know. I mean, I'm thinking a very reasonable 4 or 5 cases should do the trick, I would say. And I don't want those 8-pack cases. We're talking 12-pack cases. All right. So send 4 to 5 cases to St. Petersburg and then we can talk. And so let's see. And then finally, Emmett Morrison's in the house. What's up, Emmett Morrison? Hey there, Dr. Jim. We survived non-farm payrolls. Next up, Jay Powell. Is that really next up, though? I don't think so. And I'm also not convinced we have survived. Like, again, is this lost season 3 or is this lost season 5? Like, I don't know. And I didn't even know when I was watching it. I mean, we're flashing back. We're flashing sideways. It's like, you have no idea what's going on. But with Jay Powell, I mean, I'm pretty sure next week is inflation prints, right? We've got CPI, we've got PPI. You guys don't even need me to tell you that this is not good. But I'm pretty sure that that's all happening before Powell. I think Powell's down the road a little bit, if I'm not mistaken. And so anyway, I'll tell you what's interesting though. I mean, EMA/S&P is so weak at down 39, and then the Nasdaq's actually fairly strong at also down 39. Like EMA/S&P is down 39. I would expect to see the Nasdaq down about 150, maybe 160. And so yeah, that's some surprising strength. But let's see here. Let me go to where are you guys at? Hold on. Oh, this is a good idea. I got one more. This is good. Dr. Daniel Perkins says, Dr. Jim, you should name the YouTube chatter who gives you the trade in your follow feed commentary so we all know who to be mad at. I'm not going to do that. I will not do that. Like, these are verbal things only, so they just float off into the ether and they're just gone. Like, we just forget about them, right? Because it's not about the money that you lost. It's about the friends that you've gained, right? That is the most important thing that I could ever tell you on any given show. On any given Sunday for my Willie Beeman fans, I mean, that's the most important thing, right? So that's what we all need to be focused on. All right, let's go to the beginning, man. Where are you guys at? I see Snow Joe's in the house, man. Ash Finn's in the house, man. Look at you guys. I appreciate you guys so much. Brian Dowdy. Oh yes, he came in first with the first comment. Man, that's a power move. That is a power move. Dr. J, to be fair, I didn't tell you to go long on Lulu. You maybe didn't, but again, the fact that you are the nucleus, right? The source code of the idea. I mean, you've got 50% ownership, right? I'm not giving you the Jocko Willink extreme ownership. Like, we can be partners in this. Like, we can go halvesies on this guy, but I'm certainly not taking the brunt of this myself. So Sam L, happy Friday, Doc. Or Brian says, hopefully your SPX trade made up for it. Yeah, it did, I guess. I mean, it made up for one of the gold or the Lulu. And so for our mental records, let's say it made up for the Lulu, right? So you were off the hook, my friend. And I'll take the gold trade, but that's Amelia's trade anyway. So I won't feed her for a couple days. It's not a big deal. And so Sam L says, happy Friday, Doc. Best way to wrap up the week. 45 minutes of P&L swings, Jim Bro wisdom, and that underappreciated Schultz humor. I'm pretty sure it's overappreciated. I'm pretty sure that you guys are actually overshooting the expected move on that guy. But I appreciate you, man. I appreciate you so much. Thank you for being here, as always. But Sam L says, check out your beloved BBBY. Oh, wait, different company. Are they even still in business, man? Yeah. Is that Bed Bath & Beyond? It is, right? BBBY. No, they're gone, aren't they? No, they're back. Weren't they gone though? Like seriously, like all kidding aside, they were gone for a short while. And I think it was fairly recent, was it not? Like it was within the last couple of years, I think. And so the fact that they're back, that's really interesting. Let's go to hang on. I don't want to see a 2-minute chart. Let's do a daily chart, like 6 months. All right. Okay. So yeah, they were not looking so good just a few months ago. I mean, that was Liberation Day and all those kinds of things. And I thought for a minute there we were all liberated from those 20% off coupons that really just kind of cluttered our garbage cans. But no, apparently not, because they are back and they're doing quite well for themselves. Under $20 or under $10 a share up to $9.80, which is not great, but it's better than being at $4, which is where they were back in April. And so let's see, where are we? James Bond number 4. What's going on there, James Bond? James Bond says, "Happy Friday, Dr. Jim. Doing anything in Oscar, OSCR, hard to find high IVR, and this has a 21. Do you have any thoughts?" I don't even Oscar, OSCR. Yeah, Oscar Health, $19 stock. Okay. I mean, if I go to, let me check the liquidity meter. That looks like 4 stars, but I don't know, man. Who knows? That's so funny that I threw the monovision under the bus, which it's still pretty bad. But it's not going to be my solution. I'm going to the multifocals. I might even start trying them next week because the monovision is not the solution. We may just end up settling on glasses, which is like, okay, whatever. It's fine. But yeah, it's just that Rocket Lab thing was hilarious with the zebra and stuff. I thought it was the monovision the whole time. I'm like, wow, is it really that bad? But apparently not. But Oscar 4-star liquidity, you go in October, you got decent little markets, man. So look at this. This is James Bond. Hold on. I got to write this down. James Bond. Number 4, not number 3, not number 5. This is James Bond IV. Number 4. He says Oscar, and he didn't say, but obviously, I think he wants us to play Oscar neutral, right? So we're going to play it safe there, James Bond number 4. I'm kind of thinking, some kind of, sell some premium on both sides. I mean, if I sell a 17 put and I sell a 22 call, yeah, I get about $2 for it. Pop is 61 and, the buying power is only $600. That's not too bad. I mean, that's, it's just a pretty small position. It's a low price stock, right? So it's really not too bad, especially when you think about the premium efficiency. Right, I'm collecting $2 for a trade that's only going to require about 600 in buying power. So I'm collecting 200 and putting up 600. That's a pretty good premium efficiency. And so generally speaking, I mean, that's like 33%. That's way above what I would usually, what I would usually deem to be pretty good. I don't have a number in my head per se, but usually anything that's probably at or above 10% is definitely pretty interesting. And I mean, at times I'll take things that are even less than 10% from a premium efficiency standpoint. But it's a good little check. It's a good little thing to kind of look at. I'm glad I took off SPX because I think it's rallied even more. Yeah, it's rallied another 10 points. Wow, that's really, really nuts. But let's do this this strangle there, James Bond. I like it. And yeah, let's go for 203 maybe. All right, so we got filled at 203. And all right, so there's Oscar. Thank you there, James Bond. That's some good stuff. Oh, Sergio says, Brian Dowdy, is too late, man. Once you enter the little black book, it's like Hotel California. You can never leave. That's correct. That's 100% correct. And so we had Brian Dowdy, we had Sam L, who's had the Palo Alto trade, which is still on, of course. So that's a little bit of a TBD, but we're off to a good start, right, Sam? We've got James Bond number 4 with the Oscar situation. And so that's right. Daniel Perkins says, happy Friday, Dr. Jim. I hope next week is better than this one. I'm going to say it's going to be about the same. I'm going to say that we're going to be able to pretty much perform fairly consistently with what you've come to expect, which again, I'm completely absolved of any responsibility, because if you listen to what I say, like if you actually take my strongest suggestion, it's what? To do the opposite of everything that I do. Anything that I do directionally, you need to be on the opposite side of that trade. That is a surefire way to reach your financial objectives 6 to 9 months earlier. And so you 100% need to be doing that. And then just get ready, though, because when there's a little Dr. Jim mean reversion, it's going to be a nasty one for you. And so Daniel Perkins, Joe says, what's up, man? What's going on there, Joe? Brian says, I didn't even play Lulu after he went along. That's pretty funny. Were you also thinking along? where you also like kind of bias to the upside, that's very funny. And so obviously that's the next best alternative. The best alternative is to do the opposite. But if that leaves you feeling a bit uneasy, then don't do anything, right? If I happen to line up with you and I make that public knowledge, you are in trouble, sir or madam. That is 100% true. And so let's see. Sam else, let's pull the receipt. It was Brian. Brian does say I was going to go long, but I wasn't sure. So I did nothing. And then, of course, my going long just sealed it for you. That's very, very funny. Big Deal Donuts. What's up, Dr. Jim? How's your day going, man? It's going pretty well. You know, it's going pretty well. And we're heading into the weekend. You know, we're doing the things that we do. And I appreciate you for being here, man. Thank you. Scramble Everything says, hello, everyone. How are we already deep into the most important proximity effect? Yes, that's correct. Nicely done. I see what you did there. And so, yes, I don't know that you will ever experience a more important proximity effect than the one that you were up against just a few minutes ago, right? It was like yesterday. It was 20 minutes ago, right? It's like it just happened. And so, thank you, my friend, for being here. And so Theta Trader says, the proximity effect is well known in lawn darts and hand grenades. That's also correct. Let's see. Sam L says, the P&L Open Bros says it's those $100 stretchy pants draining the account. At this point, they better come with built-in alpha gains and a free protein shake. I need something, man. I mean, I've got the LMNTs coming from Bullets, which is nice. And so I'll be on the lookout for that Bullets. And again, I don't want no watermelon salt stuff. It's got to be citrus. It's got to be black cherry lime, or it's got to be grapefruit, right? No watermelon lime, because you'll go further down in the rankings if you send me some watermelon lime. Or like the chili mango stuff. I don't want anything to do with that. Nothing to do with that. And yeah, that's so funny. Scramble Everything says the proximity mine effect in GoldenEye 007 on N64 was extremely fun. Man, I remember my boy back in like middle school. Oh man, my boy Tom Griswack, like one of my like best friends growing up. He used to be a master at that game. And he always wanted to play all of us. Like, you know, we had the crew that we all ran together with, 10 or 12 of us, whatever. And it was so fun, like just to be kids and whatever. But none of us wanted to play him at that game because it was no fun for us. He had like everything mapped out. Like he had like all of his spots and whatever. He was literally unbeatable. And so, yeah, Tom Griswack on GoldenEye 007. That's some good stuff. Daniel Perkins, Dr. Jim, you should name. Oh, I remember. Yeah, I surprised and delighted that one. That's pretty good. Let's see. Theta Trader says slappers round, not as fun. Yeah, I don't, man, Theta, you're so good at the inside things that I am on the outside of. I got to get better. I gotta be better. That's all I can say. Rancher's in the house. What's up, Rancher? Let's see. Scrubber Everything says, I'm imagining the guy sits in the architect's chair when he is explaining to Neo. Oh, this is a Matrix thing. There you go. Okay, that might be a slappers thing. Let's see. See if I can find something that I'm not on the outside of. But I appreciate you guys. I always appreciate you guys. Let's see. Oh, there's Emmett Morrison. Let's see. Sam, Doc, did we survive NFP? Not even the president's new head of NFP could fake that fake number. Yeah, that's what's so funny. He couldn't even fake the fake. He couldn't even fake the fake out of it, man. Like it was still really, really bad. I mean, Trump got his guy in there. He got his guy in there, right? Gave him the recipe, gave him the secret sauce, and was like, hey, I want you to cook it up this way. You just got to follow the steps, man. You just got to go flour, sugar, churn it, add the brown sugar, add the cinnamon, and boom, some chocolate chips. You're done. You're done. And my man still messed the whole thing up. And guys, isn't Trump going to talk at the end of the day today? Isn't he going to make an announcement at 4:00? And so, man, it's too funny, man. He couldn't even fake the fake out of it. That's really, really funny. That's so good. Let's see. The drunken chefs got here late. How does this apply to the long side with options? It's the same thing. If you're talking about the proximity effect, it's the same thing, right? It's the same effect because remember, it all traces back to the contract. It all traces back to the extrinsic value. Well, the extrinsic value is the same for both sides of the contract, right? They're just on opposite sides of the game, if you will, right? And so when the proximity effect is, strong or weak, I mean, it's affecting the shorts and the longs equally, but in opposing ways. Like equal but opposing forces. And so you just have to flip it over and think about it from the long side as opposed to the short side. But it's going to be the same effect essentially in terms of like the magnitude and things like that. Let's see. YJ's in the house. Thank you, YJ. Thank you for being here, my friend. Theta Trader K-View isn't exactly thriving on the news today, but I think that will probably reverse. K-View. I've never heard of K-View. Let me see here. K-View. Kenview. Okay, $17 stock. Ooh, yeah, they're getting hit pretty hard today. And so I don't know anything about Kenview. I have traded a little Barbie View before, but never Kenview. So I'm going to go ahead. I'm going to pass on this. But if you have an idea for Barbie View, just let me know. And maybe we'll do a little something. Let's see. Ahmad says it's so dumb. I know. Trust me, I am aware. Ahmad says, Jim, you big chunk of muscle, man. Look at you. I appreciate muscle. Man, you're my man. I appreciate you. True's in the house. What's going on? iPod Touch. There we go. Here it is. The Lululemon Event Horizon. Apparently so, my friend. Apparently so. And again, I feel like I let you guys down. Like, obviously, Brian Dowdy let me down, but then I feel like I let you guys down. Because again, right? I had the Woo Women information. I had it. Like, I had it to share with you all, and I didn't do it. I don't know why I didn't do it. I didn't even think to do it. Had I thought to do it, I probably would have shared it. But the fact that I wasn't able to kind of pull that, even though, again, they're Autumn's favorite pants. She has 3 pairs. She wears them every single day. She wears them like today. The kids are at their little school thing. I guarantee she's got a pair of them on. I guarantee it. 100%. 1,000 Delta. She may have dressed it up a little bit, being at the co-op deal, but she's got the Woo Woo Women's in the car to change into. That is for sure. And so I can't believe I let you guys down, man. I really missed that one. But Amas says, "What you doing, man? Man, we're just trying to keep the account above zero. We're not doing such a great job, but maybe next week we'll be better. I don't know. We'll have to wait and see." Let's see. Oh, Sergio says, man, Google, someone needs to start another lawsuit. I need it down. Yeah, you're not alone, man. I've got the short call spread here, I think, right? Yeah, short call spread 205, 210. And so you are not alone, my friend. Not alone at all. And so let's see. Jared's in the house. What's going on there, Jared? Happy Friday, Jim. Happy Friday to you too, my friend. Thank you for being here. Appreciate you very much. Small Trades often saying I need the Lululemon sweatpants. Joe's digging it. And True says this is my lifestyle now. Well, it's a fun lifestyle, right? This is a fun little thing to do. And so let's see. Brian says, yeah, I'll take accountability. My man. But again, right? The SPX trade made up for us, so you are off the hook, my friend. You are off the hook. I mean, you may find yourself, having to absorb a playful jab here or there, but I appreciate you, my friend. You know that I do. You are certainly a part of the core position. I mean, Bullets is on board because Bullets. I'm going to assume the LMNT is already in transit. We brought this up 15 minutes ago. I'm going to assume that you're at UPS right now. Like, I'm just going to go ahead and rest on that assumption and welcome aboard. Welcome to the core position. And so let's see. For your butterflies, send me the invoice. Yeah, I'll forward it to Tom. That's what I'm saying. Now we're talking. Although I don't know, man. My man still owes me $20 from the Eagles Super Bowl last year. Like last year, I got cash on hand, and I don't think I'm going to see that. I mean, Sosnoff debt, it's selling for 60 cents on the dollar in the black market, right? And so there's not a whole lot of confidence in Sosnoff and the old business community out there. But Rancher says, Dear Dr. Jim, the dust has settled, and I am now very cleanly holding 5 in-the-money puts of ACHR, Chipotle, and Kava, and Lulu. Oh, brutal. I need encouragement. Yeah, well, again, just to kind of give you, so a couple of things. So obviously Chipotle is brutal. Kava, you didn't share your strikes. Well, you didn't share your strikes. It was Kava down too. Oh, Kava's doing okay today. But Lulu is obviously brutal too. Oh, did you say they're all at the money? Oh, you said they're all in the money, so you didn't share how deep in the money. So here's the basic idea, right? If you're okay holding any of those stocks long term, use that to your advantage. That doesn't mean that you have to just do nothing and take the shares if that's what it comes to, but having that as an option is incredibly advantageous in my opinion, because it allows you to ride this thing out. It allows you to play, if there's an eventual bounce that comes, which if history is any guide, it probably will come, then you're going to be able to, play that pretty effectively. But if you really want to be out of any of those trades, then you have to proceed a lot differently, right? So now you're looking at potentially adding short calls, kind of creating an inverted strangle, or creating maybe kind of like a de facto covered call where the short put is kind of like long stock now. It's not going to be the same because the deltas are not static. So if the stock does rally back, you are going to have risk on the short call side, so you have to be aware of that. So I would probably think about it more like an inverted triangle, but that's probably the path that you would take through the forest at this point. You're just looking to sell some more premium and get out of the trade when, some type of off ramp presents itself to you. And so that's how I would view pretty much all of those situations. LZ says, what do you think about a call credit spread on Eli Lilly Oh, LZ, man, you caught me right at the end of the show. I'm gonna pass on that just because I don't have any time. But come back next week. Come back Monday, and we'll have kind of the full length of the show because I won't be doing the educational pieces in the beginning. We're gonna mix those in, kind of, maybe half the time or a third of the time right now. And so I won't be doing that on Monday. So we'll have more time. But bring this back on Monday. And then Bill Buchanan says it's amazing how the market can be excited about rate cuts and upset about rate cuts all in the same day. Yes, welcome to this wonderful thing called the market, where nobody knows. Nobody knows. I mean, it looked like we were NASDAQ 24,000 to start the day. Like we were on the doorstep. It was EME S&P 65, 60 or whatever. And we were right there knocking on the door. And now all of a sudden we're just trying to keep, our head above water. So nobody knows, man. Nobody has a single clue. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I went out this morning, out my front door to look to see my pumpkin.
Yeah?
It's gone.
Your pumpkin is gone?
Gone.
Seriously?
Gone.
After we just talked about it?
After I brought it back all the way from Wisconsin, carried that monster of a pumpkin, it's gone.
It was huge, you said, right?
Huge.
I mean, it was like a really, really big pumpkin. I was on Google Earth last night, and they found your pumpkin. Like, they must have taken a picture exactly when your pumpkin...
Yeah.
You must have put it out there.
Did you steal my pumpkin?
What pumpkin?
Did he take my pumpkin?
I don't know anything.
Because my neighbors have pumpkins outside and they don't, and all their stuff is there. My pumpkin's missing.
It's a nice looking pumpkin, Tom.
You drove down to the city and you stole my pumpkin. Oh my God.
What are you talking about? Seriously. Seriously, I don't know what you're talking about. This pumpkin came willingly. It was being...
Oh my God.
It's very happy.
This is a conspiracy. I hope people watch this and realize who you really are. You stole my pumpkin.
I live for this crap. Are you kidding me?
He came to the city and took my pumpkin.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade, and I'm your host, Jamal Chandler. I got a special guest in the building today. E-Money, Errol Coleman, what's up, man?
What's going on, brother? It's been for a Friday, we're hopping on here after a pretty aggressive sell-off. It kind of felt like this morning. So I guess we're gonna be wrapping it up on a little bit of a bloodbath. I don't want to call it that, but it was a way to start a Friday right out of the gates. How we doing today, though, Jamal?
I'm doing well, man. I'm doing well. Were you surprised at the move? First of all, jobs report. A jobs report came out this morning. Apparently, came in a little bit lighter than estimates. Were you surprised?
Actually, I thought it would have been a little worse. I'm not gonna lie. So, yeah. I mean, surprised in the way of no, not really surprised. Surprised by the sell-off? No, not really. I think, ironically enough, over the last few days, the rip to the upside that we've been getting, it's not like we're used to seeing these kind of things, but it always surprises me every time. Like every time I'm just like, wow, that's crazy. I mean, we just keep rallying. So it's nothing new, but I think on that end, it's always, it's impressive. I'll keep it that way.
I mean, the market seemed like it wanted, this sounds crazy, right? But I mean, this is, look, we watch markets every single day. We kind of have an idea of sentiment. And it seemed as though the market wanted a jobs number that was weak, that was showing sort of signs of exhaustion. Because again, there's the lead up to this is the backdrop is rate cuts, right? Like that's been the backdrop for a while, and the market has been moving higher on the idea that we're going to get some rate cuts soon because the Fed basically tipped their hand at the end of the Jackson Hole meeting a couple of weeks back, where basically they have this dual mandate, right? They got to keep inflation down, and they want to make sure that unemployment isn't bad, and so they got to be somewhere in the middle on this. And basically at the end of Jackson Hole, they said, well, it would seem after all the jargon, you got to weed through all the jargon that Powell says at the end of these type of things. But essentially, he said the job market is looking kind of weak, and more than likely they're going to have to cut rates. And that's why we've had this. If you look at the CME FedWatch tool for Fed funds rates, I mean, it's basically been over 90% since that speech. And I think today was just another data point to show that they have room to cut rates.
Yeah, no. End of the week, we'll see how the market wants to actually digest all of this craziness headed into the next week. That's what I look forward to the most, seeing how it digests all this news we just got. So
I know, right? Let's pull up the platform real quick. What did you watch the game last night?
No, I didn't. Are we talking about the Cowboys and the Birds?
Yeah, Cowboys.
I seen a lot of spitting. What was going on? If you could fill me in on that. Like for real, I seen a lot of short form. I'm like, why are we beefing like this? What's going on?
So I missed that in real time. I had something going on. I didn't start watching the game until I don't know, towards the end of the first quarter. But apparently it was I don't know. It was like in between plays, it seemed. And so basically when I came in, it was like this defensive tackle from the Eagles got ejected from the game for spitting. Right. Wait, really? Wow, that's crazy. And all you saw was the video of him spitting on Dak, which he spit right on.
Right. I mean, right through the face mask.
Then, as they really unfold the whole events, Dak was kind of in his huddle. He was in his direction, looking in his direction. He was kind of in his huddle, but looking in the direction of the Eagles D, looking at dude, and he spits in that direction. And he just kind of like, laughs and winks a little bit, right? And then seconds, I guess, after that, dude came up to me, are you spitting on me?
Yeah.
And before he knew it, dude spit on him. And you just can't do that in this day and age where you got so many cameras. I'm not sure if the ref saw it live when it happened, but the cameras damn sure caught it. There's a million cameras on the field and mics.
I mean, we got angles. I didn't realize we have angles of. I mean, I don't know why we ever get any calls wrong. We can see people spinning on each other through a face mask. Why are we getting calls wrong? Anyways, I digress.
I know, right? I don't know. It was wild, man.
That's crazy. True. Wait, who won the game?
Eagles won the game.
Okay, did they? Okay.
The guy who spit on him, I forget his first name. I remember his last name is Carter. Anyway, he's the defensive tackle that the Bears could have had during the draft, but they passed on him. He was like top 5 pick or something, top 5, 6 pick. But they passed on him because, and this is the unfortunate thing that I hate. But it's not, not to get too deep into stuff, but like they call it character issues, right? Because he had an issue happen when he was in college. He was drag racing, and another assistant coach, I think, was drag racing. I don't know, maybe you heard the story before.
I heard something along the lines of
assistant coach crashed and died. He wasn't even in that car, but that's really the character. And then of course you have this incident on top of it. It's just going to be something that follows, dude. And it's like, man, you want to see him, get things together and just focus on playing football, man, and getting that money, man.
Right. I mean, what a tragic incident. First of all, oh my goodness, I did vaguely remember something like that, but I mean, I can't fathom you're going through your career afterwards, experiencing something like that. But no, that's crazy. Hopefully he's on the come up. Yeah.
I know. Hopefully he's on the come up,
Yeah.
man. He got it together. Let's see. Oh, okay. So let's see. We've had. I remember last night heading into this whole event. We had a 39-point expected move in SPX. We eclipsed that on the day for sure. Even if you just think about from the standpoint of the range today, the range was 88 points. So you've had some abilities to scalp a little bit. I'll tell you what I started off. You can see this little weird position here, but this is how it ended. But where it started was I had I was long that, I was short that, I was long this.
A little bit of this, a little bit of that.
A little bit of this, a little bit of that. Oh, well, it's not going to show you, but I was long the 65.30.
Right.
And I was short the 65.50. So I basically had a long iron condor expecting a move outside of 38, 39 points, which is essentially where it was. Well, we got that. But what I did before all of that, more than anything, I closed out my short call, closed out my short put for very cheap. I did roll down my long call to the 6,500 in case we bounce back up and through. And I sold this 65.50 put for $12. Little something in there to eventually get to where we are now.
Right. And that was.
So I was able to sort of recover the position in a way.
Yeah. You choosing SPX over SPY for any particular reason? Just curious.
So that in case this all happens. This is all happening around. This is all happening around the strike, and I didn't really want to take this particular position off, and I didn't want to have to. I wanted to, in case I wanted to leave stuff on, and I guess again, people have asked this a lot. Part of the time when I put on a lot of SPY 0 DTE stuff, I'm usually just putting it on to expiration, honestly, and then because it's an index option, I don't have to worry about any assignment, right?
Right.
So that's a large part of the reason why. Now people have often talked about, well, the thing against that is if you do get assigned, you got to pay assignment risks. It's true. It's not crazy amount of money, but still it is some money. I mean, I can't remember exactly what it is, $10, $20. I don't remember.
Right.
That is fair. I mean, you always want to keep costs down on your account. This thing right here, like I got this put spread on for basically a $400 credit. So I could just let this go and see if we fall down towards the end of the day. Maybe we drop another 20 handles or so. I don't know, right? And so
I don't think that's very far-fetched. I mean, definitely we got a little bit of time left, an hour. Yeah,
exactly. And that way I don't have to worry about it. I'm sure look, we have a great risk department who goes through and looks at stuff. We've all had situations where they close stuff out because, they don't want it to expire in the money, right? You might be busy doing stuff. So that's the reason why I choose SPX, because if this move happens at the end of the day and we drop 20 handles, I don't have to worry about them closing out my account. And I'm not that too worried about assignment. So, there's assignment. My biggest risk to this is paying the exercise fee on assignment.
Okay.
That's it.
I got you.
I can live with that.
Yeah.
I'm willing to hold this really cheap put spread that I put on that I legged into. I'm willing to hold this and see if it falls down towards expiration. And if it does, awesome. I mean, I have the send the money thing, and I'm not that worried about the exercise risk.
Yeah.
Exercise fee, I should say.
No, I hear you. After that sell-off this morning, it felt like the market just chopped around in a range pretty much for the next few hours. Hopefully we get a move out of there. It's been a little boring, honestly, since the initial move out of the gate this morning. But I also was curious, were you looking at anything in Google, or did you do anything in Google this week?
I did not. Did you have something going on there?
So I know Google. If anybody in chat can remind me, but I know Google. It wasn't the earnings. It was what was the news?
It was the antitrust.
It was the antitrust, right?
Yeah, they were supposed the ruling went in their favor, so they don't have to divest Google Chrome.
Okay. No, curious if you just did anything in here. That's what I was waiting to pop up on you. But no, I had sold an out of the money call spread on Google. I'm a little surprised it's been sustaining at these price levels for the last couple of days after that pop we had in Google. But I do have an out of the money call spread, being a little patient in there. It's like 42 days right now.
I know. You know what's crazy is that news came out early in the year, right? Like somewhere around here, I feel.
Yeah, they've been under a microscope for a minute now.
And yet the stock was still steadily rising all this time. Honestly, I was thinking this judgment could end up going the other way and bringing the stock back down, but Yeah, I mean, this thing popped, and as with it, it took Apple. So I do have something on an Apple, which moved in adjacent, which is really nice. I got a zebra going on in here. Zebras have just been my like trade du jour more recently.
Apple?
I'm just loving them. In a lot of things, actually.
Yeah.
In a lot of things. You ever had
Even
that
some
happen
crypto.
where you like where you just kind of get into a strategy and you start finding a bunch of different places to put it on in?
On a specific underlying or
Just in general, like
Yeah.
you find a strategy that you kind of like for one underlying, but you put it on for a certain reason, and then you start finding other names where you're like, oh, I'm gonna put it on in here too because I like this setup. Or
100%.
boom, boom, boom. Yeah,
I feel you.
Well, right now for me, that's a zebra.
Okay. Oh, you like the zebras?
I do. Yeah,
The
right
zebras
now
are
I do.
fire. That buying power reduction's insane.
Yeah, I do.
Yeah, I mean, you got to manage them, but they're a great trade. I think they don't get enough love, no doubt. They don't get enough love.
It's been my trade du jour. Gold popped for me earlier this week. So early in the week, I had I felt it was a week ago today, and I tweeted it out too. You can check the receipts, people.
I need to put your notifications on actually. If you tweet something about gold, because I'm trading gold a little bit more often now. So you think I'm joking? I might have to put 'em on.
Appreciate that, bro. So like last week, during the morning, I said, "Man, gold's starting to look." Because I'd noticed these few days, right? Like where early last week it started. It started the 22nd, really, and because gold had been in this channel, this 3,400 channel, you could draw a line through it. It had been sitting here for months, and then I was trading it back here because I like the momentum part in gold. Like I'm not here to really sell vol in gold. I like to buy call spreads, whatever, and gold when it's making a big move. And once it started doing this again, I said, yo, it looks like it might be breaking out again. So I got long it last Friday. Boom. This happens over the holiday weekend.
Breakout
here. And so I had a call spread in GC. I paid $1,500 in premium for the call spread, made $1,000 on it. It got to the point where the whole position is worth like $2,500. Well, that's like 10% of my account, and I didn't want that. So I was like, let me close out the GC for credit. For a profit. Let me move to GLD, which is cheaper, and guess what we got? We got a zebra up in here too. So that's
yes, sir.
That's how that's been rolling.
Yes, sir.
That's how it's been going.
No, I mean I like it. I think on gold, where was my position at? I put something on gold earlier this week. I'm sitting at around break even, so I'm being patient on it. But it was a defined risk strategy. I do wish I had a zebra on gold though. I mean, what a move. And post notifications are on, Jamal. So if you start trading silver, let me know that too.
I do have silver on, actually. I have that one on too. I have a call spread in here. Again, not total tasty methodology, but hear me out. The thing about silver and gold is when they really break out, and you got to wait for the big moves. And so, the thing about silver too, the real story in silver is you got to go back a while. Hold on, let me do the continuous contract. Thing about silver is this, right? It's trying to get back to these levels. So this is the area that's really interesting right now. Let's on the way up. This is on the monthly, but in the month of April in 2011, you see it touched the high of 49.80. Basically, it moved $12 in the month. The low was 37, the high was 49.
Right.
Of course, the very next month it reversed real hard. It happens, right? But if you had timed it right, if you had been in around here, or even during this week, you kind of got a nice little move. Now, how do I know that that's going to do the same thing? I have no idea. I have no idea. But right now, I'm willing to see if it's going to get a new high of 43.50 over the next week or so. If it does, I'm happy to hold it in. I'm playing for probably about 45 right now. I have the 44, 46 call spread. If it were to get to 45, I think that would do me more than justice right about now.
Right.
And I think my position is $1,700, right? It's out in October. The thesis essentially is, as rates are dropping, which it almost seems to be a foregone conclusion at this point, that's a really good thing for a non-interest bearing asset like gold and silver, right? So it works well for them. So for now, I'm not playing for. I'm basically just playing to see if it's going to get to like the middle of this call spread, maybe 45 or so. That's kind of the way I'm doing it right now, and then I got some time on it. We're out to October.
In terms of how silver and gold behaves, do you have a preference? Or does it kind of depend on the liquidity for the two, or I know there's a different point multipliers depending on if you're trading silver or gold, so the sensitivity in your P&L might be a little different. Is there one you prefer?
I mean, yeah, I guess so. I guess you could say gold.
Okay.
It just the chart is usually less noisy in
Okay.
general, right? It's almost like, geez, I don't know. It's just like Big Brother and Little Brother in a way, right? I mean, just look at this chart for gold. Look at this chart for silver. They're kind of similar, but silver is typically a little more noisy, you know.
It's a
But you
lot. It's a
also
little more
probably get
choppy.
it's a little more choppy,
Yeah,
but
less
you
liquid,
also
even
will get
maybe.
a little bit more bang for your buck. It is a somewhat bigger contract at times too, but you know.
Yeah. No, it looks a little choppy in comparison to the gold. Just visually looking at it, it looks like gold is a lot more. I don't know if I want to say a lot more, but it looks more liquid. Gold looks more liquid than silver.
Yeah, no, I think in a way it is kind of.
Yeah.
I can't just talk about the winners. I got to talk about losers on the week.
Yeah, let's talk about it.
Lulu was a big loser. I had that for earnings. I lost like 800. I shouldn't say big loser. I lost like 800. I had calendar call spreads in there. I closed everything out.
We were a few were talking about Lulu this week. Not in Lulu, but quite a few traders this week were talking about Lulu. What was going on over there on that end?
Earnings. Had earnings.
Took a big hit. Lulu. It's
yeah,
Allo, man.
It's
Allo. Allo's taking over. You know what I'm talking about?
I know you're talking about. Yeah.
They taking over.
Is that what people call it? Allo, ALO?
So I was watching Liz and Jenny the other day, and I heard Liz say ALO, and it was the first time I've ever heard someone say Allo, ALO. So, but then from your reaction, I think you call it ALO too. So maybe it's just depending the location where you're from, people call it different things. But yeah, I've always heard I've always heard ALO. So when I heard ALO, I was like, what is ALO? But I think they are taking over Lulu a little bit. Like, I don't know if you've noticed, but there's a lot more like Aritzia. There's a lot more of these like athletic wear brands and all that are like really competing for like the luxury end of things. It's like these products aren't really worth 100, 152. Like, it's dumb expensive for the like craziest things.
They are.
But they have a huge focus on branding. Lulu, Alo, Aritzia. What are people posting in, putting in their day in the life, little vlog videos, all that. And like, you just see this mass adoption of Aritzia, Lululemon, Alo, those type of things. But they got a lot more competition, long story short.
I actually feel kind of dumb on this one because, again, my general thesis is to go calendar call spread. It doesn't matter what.
Yeah.
The reason why I do that is because when I used to trade for a firm, this one dude I knew, anytime that back in the day, there used to be a lot of like buyout mentions during the trading day. It'd be like, oh, there's a buyout for Lulu, and then Lulu stock would jump, right? And it was up to you to determine how much it had legs, or if it was just you should just scalp some calls and get out. And this dude, some people would do it every now and again. This dude bought every one of them. He would do it all the time. Anytime he comes, buy him, because it's almost like roulette, right? You just do it each time.
Right.
It's almost it's almost like a strategy in a way, right? So that's kind of what I've done. When I do play at earnings, I usually just play it to the upside. Rain, snow, sleet, or hail. But if I would have really thought about it, I don't think this thing had a chance in hell, honestly, for earnings to go up. Because I mean, they're a like you mentioned, not only is there competition, but for them in their space, tariffs are going to affect them. They get a lot of product from overseas. That's the only way you can really make it in the clothing world.
I didn't think about it on that end.
Most of your stuff is coming from overseas, and you're getting cheap labor and cheap stuff from there. And they were super affected by tariffs, and they said it in their earnings, and that's why they're down.
Hey, well, Lulu and Alo, I don't think Alo's is publicly traded, but Lulu, you know, they can take the heat on this hit because they're hedging with the price of their leggings and whatever products they have. That's what they're hedging this drop in the stock with.
They are, but I think I wouldn't be surprised if over the next couple of years, this stock ends up taking even more of a serious haircut.
You think so? You think a little bit of
I mean, think about how their stock really blew up. It was during the pandemic. And
it was.
If you look at a lot of names that are down for the last 5 years, a lot of them are the names that are really doing well in the pandemic that have really like.
You're right. That was 2020 time. I remember I came up here and Nick was wearing some Lulu pants. He's like, so comfortable. You know, and we went into a Lulu store. We were creating some content, but anyways, that was 2020. The time is flying. Lulu was 5 6 years
Nick's
ago.
going to be like, I didn't wear those.
He's wearing the Lulu pants, everybody. Don't let him fool you. He got the Lulus on.
Another loser for me was Figma. I had a zebra on in here. Earnings rocked me. and I had it on for a while actually. We actually have a couple of different articles on our website right now, so you can check those out about Fig. But it was fine. I mean, I was willing to take the risk, and you take the risk every now and again. And sometimes you lose, and it is what it is.
It is what it is. It's the name of the game. Just manage that risk and on to the next one. That's what we do.
Exactly. Manage that risk onto the next one. This was another one of my zebra names. This Fig, this Fiserv. So this name is actually a pretty well known name. I think it's it's not in the Dow, but it's in the S&P. So like about a month ago, Errol, I did this strategy, and I probably mentioned this to you before too, but I did this strategy where basically I flipped the S&P 500, looked at the worst performers on the year, and I found a couple of names to buy zebras in. It worked out really well in UNH. It worked out. I can't remember the other one that worked out, but there's a couple who didn't work out. Pfizer didn't work out. UPS did not work out. I closed both this and UPS earlier this week, and that's kind of, I think I'm kind of done with that strategy for the time being.
You talking about zebras for right now?
Zebras for names that are underperforming in the S&P 500.
Oh, I got you.
I'm not doing that anymore.
I got you.
At least not now.
Yeah. What is it? What is that date? Oh, that is the daily. Okay.
Yeah, that's the daily. Yeah. No, that's it. That's not a slide. That is.
I thought we were on like an hourly or something. That is
actually the stock over the last several months. I'm not really. I looked this company up. So I don't know about you, but like I'm at a point where I don't halfway care what the company does a lot of times. And I think you were kind of like trained that way, especially from Tom.
Yeah,
you don't really care.
I honestly could care less. Yeah.
But every now and again, when I'm betting on a bounce back, I want to know, because I want to know, like, for example, somebody like, if say I didn't know what Lulu was and I was putting on a zebra in there, I should know that company is probably going to struggle right now because of tariffs and because they get a lot of their stuff from overseas. Like, I should know that. And so I wanted to know that about this company. I've heard of this company. I've heard of it because of Fiserv Forum, right? That's where Giannis plays. And I was like, wait a minute, what does this company do? I had to look them up. I don't even remember what they do, actually. I kind of forgot. But I realized they weren't somebody that would probably struggle too much from tariffs right about now. But I don't know what it is. Stock can't get off the mat, and I got tired of waiting.
I mean, that thing's been on its butt for the last maybe once. That shot clock is ran out. So
yeah, I mean, sometimes you get punched really hard, you just can't get off the mat.
Yeah, no, I mean, I would have probably done a similar thing too.
What else is? I mean, so we talked about gold and silver.
We got gold, silver, Google.
Yo, bonds are making a big move. I don't know how much you pay attention to these. Do you really?
I know sometimes jokingly, we got some tasty people that will throw in the bonds jokingly, but I think they do it on purpose at the young folk, because the young folk don't really touch on bonds a little bit too much. But if you can give me a refresher in here and what's been going on.
Well, I'll tell you, I really didn't, as much as I traded, I had a career, I didn't really trade bonds, and I didn't know a whole lot about what they would tell me and how they would, like I just didn't really fully understand. And it's been over the last 3 years that I've really kind of gotten it. 4 years, 3 years, 3.5. Got to give props to Frank Caberna and Pete Molmat, because when I started here, I did a show with them. And we actually went through taking a long-term options trader and teaching him futures trading, and bonds was one of them. And I ended up learning a ton of that.
I remember that show. So, that was fun.
Yeah.
I forgot.
Yeah, it's called The Leap. It's called The Leap. Yeah. And so I learned a lot through that show. And so long story short, these are the prices for bonds, right? Bonds and the yields work inversely. So a big day in here for ZB, which is the 30-year bond, means 30-year treasuries are down. And earlier the week, they actually touched 30-year treasuries, meaning, so I usually try to make that distinction between, some people will say bonds and they're actually talking about the note, and some people will say bonds and they're talking about the yield. I try to make the distinction by saying these are treasuries, and the other ones I usually try to say notes. I'll try to like make the distinction, even though it gets even more funnier that like sometimes when people are saying notes, they're talking about specifically the 10-year yield. It is what it is.
Yeah. Okay. Makes sense.
30-year treasury yield earlier this week was touched 5%, and then it pulled back, and I'm sure it's pulled back even more. I don't know where it's at today, but it's got to be under 4.9 if this is one at the 116 now. And so this is essentially moving up on rate cut talk. Early in the week, it was down, though, and it wasn't even so much about rates. It was just there was some worries about, again, the cool thing about bonds is they tell you that kind of the health of any country, right? Like if the bonds are low, bonds are just your ability to repay debt. And so if you're loaning, the U.S. government money via a bond, this is your sort of faction to be able to look and see like how things are doing. Clearly, if their bonds are going up, they're a good company, they're doing well, they can repay debts, et cetera. And so this is kind of a vote of confidence in the United States of America, essentially, by this going up.
I gotcha. Well, let me know when VIX spikes. It's been quiet on that end too.
Oh, it's been real quiet on that end. I don't know, brother.
I got one more question for you, Jamal, before we hop off.
Yes, sir.
I am curious kind of how you look at the bonds relative to VIX, right? So if we see a pretty large spike in VIX, what are you thinking is going on in bonds without looking at it before you click on it? Let's say we get a pop in VIX to 30 tomorrow, right? That would mean we had a pretty big slide in the equities.
Yeah, it depends on the time frame. Like right now, I would say several years ago, if you had a big move like this in bonds, the market would be down big and VIX would be up.
Okay.
It was the opposite like 2 years ago. Right now, I think it's still trying to find its footing. So maybe I'll tell you by the end of the year.
No, good to know.
Good. Seriously.
Good to know you've even seen a difference in like the last 7 years. Like that's good to know.
Yeah, for sure. It's been very different.
Cool.
Well, E, man, good to see you, man. Good to have you on the show as always, bro. I can't wait to have you on again.
I always appreciate you having me on here, Jamal. Hope you have a good weekend, brother.
All right, man. You too, man.
Cool.
Folks, thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hey everybody, happy Friday. Tim Knight here, and we are past the jobs report, and it's definitely shaking the markets up some. It's really a mixed bag right now. At first, everything just went blasting green, and then about not that far into the market's open, things kind of fell to pieces. Everything was red for a while, and it seemed to stabilize about 2.5 hours into the trading day, and it's been kind of crawling back ever since. So the jobs report, as you probably know, came out super, super weak. And that made kind of a lock for lower interest rates. So bonds are higher, gold is higher, and equities, like I said, are kind of a mixed bag. My main position now is some puts on the YM, which is down more than the others, so that's good. And I was watching it very closely, and when it was blasting higher after the report, it got very, very close to the peak from a couple of Fridays back, the Jackson Hole peak. Didn't quite make that, and then it began to fall hard, so that was kind of cool to watch. Multi-100-point reversal on that. So I've got my charts ready to go here, so let's jump in and wrap the week up. We begin with the spider. On the one hand, record high intraday, but probably not a record high close. As you can see here, we went blasting higher. So this was the open, this was the high, both of them records, and then it slumped. And as it is now, we're sort of hanging out in the middle of where we were yesterday. So pretty interesting failure, certainly no follow through. Bonds, on the other hand, are having a good day. TLT is up about 1.5%. And because Powell's got to cut rates at this point. The employment situation is looking dire. And remember, next week is the PPI CPI. I vaguely remember, I may have this wrong, but I think Wednesdays, sometimes they flip them for some reason. Wednesday, I think, is the PPI, and the Thursday, I think, is the much more important CPI. So that inflation data will inform the market as well. And the week following that is the actual FOMC on Wednesday. But yeah, bonds are up nicely. The cubes are up a little bitty bit. They opened strong, sold off, and they're kind of net almost no change right now. The diamonds, as I said, I'm particularly interested in personally. Record high intraday. Been selling off today. At the moment, they're off a couple of 100 points on the YM. So it has been trying to brush itself off. It's encouraging, I suppose, that we have a failed bullish breakout here. What I really want to see is a push below the range we've seen over the past couple of weeks, like so. Just kind of threw a line down there as a guide. So we've been range bound for a couple of weeks, and this is the slip that I would very much like to see on the diamonds. And then overseas, the emerging markets, EEM, also green, but basically matching the levels we saw back here on the 25th. So really a lot of smoke, but really very little in the way of fire. Not a lot of clear direction. We've spent the past several weeks just kind of grinding it out. As I mentioned, though, because interest rates are falling, that's making the dollar less appealing, I suppose. And in turn, gold is looking very nice, record high. It's funny because I sold off my gold positions on Wednesday, hoping that they would ease back down to here. And that looked pretty smart yesterday. Doesn't look so smart now. Gold just keeps muscling forward. And that's cool. It'd be nice to still have the position. I own the physical stuff, but the GLD I got rid of. But yeah, record high for gold. And I'm absolutely confident 4,000 plus is on the way. Maybe even this year, I don't know. But gold has had a tremendous time. I still would really appreciate if we could get a sell-off here, because this gap down here, a fall to that level would be a tantalizingly good place to gobble this stuff up. Miners, GDX, having another good day, another record high on this one, up about 2.6%. The juniors, percentage-wise, just about the same amount. Not a record high, but still having an outstanding 2025. Silver is up. And we are, this has had a tremendous run. Well, we'll kind of see at this point. I mean, gold seems to be the champion here. It's getting a lot of global attention. I came this close to getting back into my palladium position, and I talked myself out of it, and that is a good thing, because even though gold is blasting higher, palladium actually turned red. And PALL is down about 0.8%. And I'm not going to touch this, because if and when gold does start to weaken at all, I would suspect this would weaken quite sharply. So yeah, I'm still okay with having gotten out on this day here, Wednesday. So not a total bungle. As far as XME goes, that was a bit of a bungle. I dumped my position on that. It was a short position. Puts actually, I ain't touching it. This is, we don't get along, XME and I. I thought it was kind of a horse of a different color, but it seems so strongly influenced by gold that it just comes along for the ride. So XME, I'm out, and it is just exploding as ever to a lifetime high. Even though all this precious metal stuff is doing great, crude oil, another commodity, is sinking. And it's very interesting because this right triangle pattern we've been watching for a long time. And in the past, I was very attentive to this pattern and this pattern because they had fallen so sharply, and I had been hoping, and it's still possible, that this long grind out would result in something like the same thing. It's been a little squirrely, to say the least, because the last time it looked just absolutely squeaky clean was right here. This push back into the pattern, it seems very reluctant to break down, but it's doing it again. We are sinking weaker away from the pattern, And I had already been short some energy issues like COP, like OXY. So those are doing well. But I would just say that crude oil is looking like a prospective sink from here. It's just been terribly stubborn about falling in spite of a very nice setup. Over in semiconductor land, NVIDIA is off almost 3%. And this has been quite interesting because we've had just, lifetime highs all over the place. NVIDIA seems to have kind of lost its mojo because its last peak was near the end of last month here. We got up to 184.47. We've shed about $18 from there. So about 10% or so. And I'm not sure what's driving this particular weekday, but AMD, which I am short, is having another good drop, which I appreciate. This is down almost 6%. And so I've tightened up the stop on this one. I have dragged this line down to yesterday's low. So that is the gap. And so that's my new stop loss on that. And actually the pattern looks better than ever now. So AMD short continued to do nicely. And very broadly, SMH, even with AMD down and NVIDIA down, SMH is green. We have, I guess because of Broadcom, but this is a 1.2% pop here. And this is not a particularly alluring position, but what I would say is that if it holds this gap, if it doesn't cross above that line, this could be a pretty interesting setup on the short side, because what's going on here is this whole range right here. This could be a topping pattern. This could be a reversal. And so this, I would say, would be a very conservative boundary to test that theory. And of course, it'll work out if we actually cross below this support level down here. So as I said yesterday, I had lightened up quite a bit. I'd gone from like 200% down to about 70%. I've amped things up a little more, 95% or so, in terms of how much cash I've deployed. But I'm going to keep it there. This is a lifetime high day, so I don't want to go crazy with it. But here are a few amongst those short positions to catch up on. This ConocoPhillips, as I mentioned, COP, a really beautiful top on that one, and pushing down about 3.2%. Carvana is down about 1.32%, and the stop I'm using is right like so. That was the peak from the week that we're going to be using. Palantir has also, a la NVIDIA, kind of lost some of its luster. And it's a small position, but I've got a stop right here at 163.20. Then we've got Boeing, BA, down about 0.75%. This one's been having a tough time of it for years, really. For about the past 5 or 6 years, it's been just, even in the midst of this tremendous bull market, been just grinding away. But this short position, I've got the stop set to this peak here from about a week ago or so. Occidental, another good energy one. This one's down over 2%. We've got Eli Lilly, LLY. This has been very sloppy, as you can see. I've placed this here as a stop, but there's been lots of piercing of this, so it's not rock solid support or resistance, but it's the best we can do right now. So that's what we'll be using as a stop on LLY. And one last one, which is really interesting because of yesterday's gap action, is Roblox, RBLX. And zooming in here, you can see the lifetime high here, the bottom of which, that is the low price of that day, defining the gap. It's kind of an island reversal gap. Well, it's not kind of, it is an island reversal gap. So this is the level, like so. And the cool part is yesterday we tagged it beautifully. I don't know if it was exact. Just for curiosity's sake, let's find out. 135.65 and 135.67. Okay, got a couple of pennies higher. So close the gap and just a hair more. So that is totally okay. And IPOs, these fairly recent offers continue to just kind of bleed out. Just a couple here, just to drive from the point. Circle Internet, CRCL, slipping away once more. And old Figma, don't let the green bar throw you. Remember, these are candlesticks. All the green means is that the present price is higher than the open price, but it's still a lifetime low for the day. And one last item here, a long idea we've been talking about. It continues to do nicely, and it has absolutely completed the pattern here. IEF. This is the 7 to 10 year Treasury bond fund, beautiful base, and went popping higher at long last, thanks to this unemployment news. So that's real good looking. I've got 1 minute left, so I'll just mention I was at San Francisco very briefly, just for a few minutes, because Tom was there. I just wanted to shake his hand and say hello. And I saw a couple of you up there, and a couple of questions were posited. And I'll just repeat them here in case anybody has them. One question was log charts. Do I always use log charts as opposed to an arithmetic scale? The answer is absolutely yes. I always use log charts. I think it's the only way to fly in this business. And another question was, what's that funny outfit you wear sometimes? And I'm a little embarrassed because, like, if you don't understand why I wear it, you must think I'm clinically insane. On really big down days, I'll sometimes wear it just for fun, but maybe I should explain that when I do so, just because people don't think I've lost it. So now you know. Okay, well, it was a pretty cool week, and it was a pretty big week. And next week, got some inflation stuff coming, and of course there's always surprises in politics and business to keep us on our toes. So let's all rest up. Don't get another holiday till Thanksgiving, and I'll see you on Monday. Bye-bye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, "You'll be in a hotel by either the first night or second night."
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
What happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
Girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back for the closing bell. E-mini S&P 500 futures, if you just kind of woke up right now and just looked at the week's price action, they've basically gone nowhere. E-mini's down 22 today. It was a big old nothing burger. NASDAQ up 7. You got the Dow down 200 and the Russell up 9. So a little bit of a mixed bag between the four indices there. Oil selling off a bit, Ford/CL down $1.53. You've got volatility futures basically unchanged because, no volatility in this market, nothing happening.
No.
Up 12 ticks on vol futures, 1665. You have the VIX itself. It's actually down 8 ticks at 1522. Bonds up over a full point, 1.5 points here at 116. We haven't seen the 116 handle in quite some time. You've got gold up $40, silver up 7 cents, and then Bitcoin bouncing back up $1,400 on the future spot, only down 200 and change. Ethereum as well, down $10. Is that how your day felt? Was it a nothing burger day in your world?
Yeah, pretty much. I mean, we did the show 3 hours ago and they were down 25 and now they're down 20. So nothing has changed really, except for the Rocket Lab position working out nicely already.
What do we got there?
We might have painted the bottom there. I did this Super Bowl short put financing a long call spread. That's up 80 cents already. So shout out to the trade idea on the YouTube chat. If you want to join us on YouTube, we're streaming live for the next 23 minutes. You can throw in your trade ideas questions in the Tasty Live chat. But yeah, I mean, not much has changed from this morning. I closed that AVGO earnings trade and everything else has been kind of just chopping around.
Yes, we also put on a bunch of FX positions. If you haven't been looking at the FX products, the Tasty FX tab on the left side here, you click that. If you don't have an account open, it'll prompt you to open an account. It's kind of similar to the crypto interface where you got to opt in, set up the account. You actually have to go through an account opening process. But once you have it set up, it's really nice feature, really awesome charts. We were trading put on some new positions in some of the currencies today because the dollar has had a huge move today. So if you look at the dollar, DXY is what I like to pull up in the platform. You plug in DXY with the dollar sign here. You can see we're back to kind of recent lows. into this move this morning. Those have since bounced back, got a couple dollars on the table in those ones. So that was a nice little scoopy. I'm going to hold them a little longer, see what happens. But that was another place that saw some whippiness in the market today. Some big moves in individual stocks. You mentioned AVGO, which had earnings today or yesterday after the close. It opened up at like 356, 355 was the high of the session. It's now trading towards the lower end, but it's been kind of chopping around this 335 mark. A big move there in AVGO. You saw a little bit of a pullback in NVIDIA. That has since kind of reversed half that move. We've been talking about that a little bit over the last like month or so of just these huge moves that you're seeing in some of these stocks that are trillion-dollar companies moving 200, $300 billion at a clip. So
Microsoft too.
Microsoft is another one that fell below 500. It's now down. You tell me in a vacuum, Microsoft's down $14. A little under 3% on the session on no news. You'd think it was not a good day for the market.
Yeah, lots of offsetting single names propping the market up. It feels like when you look at the Mag 7, like Tesla's up, Microsoft's down, Apple's flat, Amazon's down, Meta's up. So it's just like a total mixed bag right now.
Yes.
So we'll see what happens in the next couple of weeks. But we did play some trades today. I threw on that SPX 3-day Iron Condor, which brings us into Monday. I think when you look at the expected move through September 17th, which is the next Fed rate decision, 97% chance they cut 25 basis points. It's only 100 points plus or minus in SPX until that day, or through that day, I should say. So I feel like maybe we see some chop, and I'm just playing I'm going to do a bunch of 0-day Iron Condors leading up to that date, but just really small, 5 points wide, 0-day, or 1 day leading into 0-day, set it and forget it, GTC order in. We'll see what happens.
Sure. I like that. Yeah, we traded some Rocket Lab. You got long oil. I'm already long oil. Oil is another one that's kind of reaching a recent low here at 61 and change. So
yeah,
maybe there's some opportunity there. I know we closed out of a couple positions. So it's been a good day. Good little trader's day, I would say overall.
Yeah, totally. And if you've been waiting to get into some of these products like NVIDIA or Microsoft, you're getting a pretty decent discount now.
From where it's been, no doubt, for sure.
UNH finally trying to break free.
Yeah.
Break free from the chains. Yeah, someone looking at leap options, thoughts? Yeah, I mean, it's just one of these things where it's like, it's totally reliant on the DOJ being like, we're done investigating, nothing to see here. But that could take a long time. We'll see. Implied volatility is low, but you got to imagine if there is news like that, similar to the Google news, where Google, exploded to the upside after they were able to keep Google.
Chrome.
Google Chrome, yes. So like if there's a similar story like that in UNH, I mean, I wouldn't be surprised to see an upside move. These leaps are not that expensive depending on where you're buying them, but it's still risk at the end of the day.
Yeah. Some other big moves in the market. You had, or some coming up, potential big move. Oracle has earnings in the middle of next week. That's kind of the last of the earnings announcement that I've seen, but yeah, only from my Taiwanese sources, only 1.5 million SPUs trading is a relatively small amount on given the range that we've had today, almost 100-point range. You only have 1.5 million contracts traded, which is pretty average, a little bit above average, I would say, but it's not like huge volume on what has been the most interesting day of the last couple weeks. I guess Tuesday was interesting too. You had a little bit of down move.
Yeah. Maybe we get some maybe we get some stuff in the news that sends the market one way or another, but implied volatility is implied volatility, and we're not seeing any crazy numbers here.
Yeah.
So, single digit IVs next week.
Mm-hmm.
Kind of disgusting.
And you still got a pretty wide contango here in the vol futures going out through the rest of the year, almost 2-point contango. So despite what it feels like, the market is saying big old nothing burger.
Yeah.
More of the same into the future. There's definitely, even if you look out to December, a 20 vol, that's not even that's nothing spooky.
Snooze fest.
Snooze fest.
But yeah, I think, volatility, the curve of volatility is super important to look at. It can give you the signs when things go crazy, when volatility goes into backwardation. But like Nick is saying, when we're in a steep contango, something has to happen for that to change. And what that something is or when that something comes, nobody knows. But volatility, the curve of volatility will tell you when things are on the fritz.
Yes. E-minis down 25. They've been chopping around a little bit. The NASDAQ just went red again. It's down 3. Just looking at some of the biggest movers in the market here, if you go to the S&P 100 list on the downside, AMD, ConocoPhillips is in there, NVIDIA, of course, on a $4, $5 move, Microsoft, another big name, JP Morgan, some of the banks getting hit today, JP Morgan. I know some people look at SoFi, have been trading SoFi. That one's actually up on the day. But some of the bank stocks have been kind of taking it on the chin today. You got Eli Lilly in there, another one of the big names, Amazon, after squeezing higher, down a handful today. On the upside, you've got AVGO, of course, Oracle going into earnings next week. Tesla, another one that has moved pretty significantly to the upside over the last couple sessions here. I remember a couple people trying to get us into a long position there, but vol has just been super, super low. We missed out on that one.
Yeah, you win some, you lose some,
It's the way it goes, man.
But yeah, we are at the end of earnings season, basically.
Adobe and Oracle, those are the two.
And Oracle's up 10 points today.
Yes.
Very interesting. The pre-earnings pump from Oracle? What a world.
Maybe. I mean, some of these tech names, like, you look at your AVGOs, your Snowflake is another one that had, a gap higher. A lot of these kind of tech names are flying around.
Yeah, Snowflake's crazy.
Yeah.
The Pelosi Snowflake.
Did she get in that?
She got in that a long time ago, like a year ago, I want to say.
Oh, wow. Well, that worked.
Yeah, I'd say. Yeah, some people asking in the chat, saying they joined us in Rocket Labs.
They're gonna squeeze this thing higher into the close. No vol. I mean, you've had a full point and a quarter. I mean, we got as high as 1736 on the vol futures, 1610 the low. We're at 1666 right now. Volatility at 13 right here, or up 13 ticks. Tiny little up move in vol. Feels like this is about to be squoze into the close.
Definitely.
As Tom would say, they're going to goose them into the close. That's my feel right here.
Yeah. The 250 buy button. Is that what you're feeling?
I think
maybe 255.
Yeah. I think it's on the horizon here.
Speaking of on the horizon, we are going to Dallas.
Yes.
Grab your cowboy boots and your hat. We will see you in Dallas. The boys just finished their session today. A couple hours ago.
Yeah, they had I just sent around their trades. Did like 40 or 50 trades. Some people in the chat talking about it, how fun it was. So
yeah, they do a great job. Yeah. The events are always fun. So come join us in Dallas. We're not that far away. We're about a month away. October 12th, Sunday, 6 p.m. And yeah, it'll be a grand old time. Can't wait. Can't wait to go back to the rodeo.
It's going to be fun.
Love the rodeo.
If you got some suggestions for places to eat in Dallas or Fort Worth, send them our way.
Yes. We will be gallivanting. But yeah, tastylive.com/events. I've got a link pinned to the top of the YouTube chat for easy access. And yeah, it's going to be a great time. Totally free.
10 minutes into the close here, E-mini's down 24. Nothing really has happened. This move in gold has been pretty amazing. I think that's one of the lesser talked about stories of the market today. Gold has just, I mean, a 15-20% move in gold is pretty incredible when you look at volatility. So implied volatility in gold about 17%. It projects a 17% move over a year time frame. We got that in like 2 weeks.
Yeah. Yeah, gold is not behaving right now for me, but I've got a broke wing butterfly in there with the 35.50 shorts. So need a little sell off here, but we'll be okay. We'll be okay. I feel like I want to get into a long Microsoft trade.
There you go. What are you thinking? It's a better time to do it than yesterday.
Yeah. I mean, do we go long term? Do we do like a 5?
It's a little
tough.
Too expensive. You're gonna do a diagonal?
Yeah. I think
choose-
maybe, yeah, October. Yeah, this works. I'm going to do October 500, September 510 for 950.
Okay. So it's shorter duration. You kind of playing for a bounce middle of next week.
Yeah. Just got filled.
Out here. There you go. So when you use the analysis mode here, when you go to the curve, you click on analysis, you go to this Theo zone. You can add in your right side menu here like I just did. You can see just as you adjust time forward, you can see how the risk profile changes. You can adjust the volatility. So, you can take some volatility out of the long option if you want, which I don't think is going to happen with IV rank at 9. You can take some volatility out of the short as well. So you can kind of play around with these spreads and see how they change over time. So
as you just explained that, I posted it to the follow page, wrote a comment, posted it to Twitter. That's efficiency, baby.
Hey, no high fives, as Tom would say. Okay.
I'll high five myself then.
Yeah. I didn't get my little squeeze into the close. It's kind of a nothing burger into the close. E-mini's just down 26 here. Not really moving. I guess we still got 5 minutes for it to happen.
I was gonna say you still have 9 minutes left.
Yeah.
That's a lifetime in SPX.
That really is. It is an eternity.
Ooh, I like this. High Stakes should be a Tasty owned restaurant. High Stakes spelled STEAKS.
I like it.
Mm-hmm. How would you like your steak? Overstated. This has legs. I think this could work. A steakhouse with trader vibes.
I love the chat. So good.
Okay, so yeah, the Microsoft trade is just a diagonal spread.
Yeah, I was trying to show the setup here for my friends.
For my friends. Yeah. It's basically just buying a near at the money option in the longer term cycle, 42 days out, and then selling and near the expected move cycle for the 14-day. It's a 10-point wide diagonal spread that I'm paying $9.50 for. So as long as you're paying under the width of your max intrinsic value of $10, as long as you're paying under $10, you have no risk to the upside. And your profit potential comes from the decay of your short option, which is $200, plus any long option extrinsic value remaining 14 days from now. So if this trade is completely in the money, it will be worth at least $10 plus extrinsic value remaining in the long option. So let's call it let's call it $1,500. If this trade is completely in the money 14 days from now, it'll be worth $1,500, I would just guess. Because that long option is going to have $500, $600 of extrinsic value if it's in the money. And that's what you're seeing on the Theo.
Yes. I pulled that up here and I just moved forward in time so you could see kind of how that risk profile changes. E-minis limping into the close here, down 29. What do you think for next week? You think it's, you said chop fest into rate decisions. I think that's probably a good call.
Yeah, they're killing this IV already. By my when we started the show 25 minutes ago, the SPX Iron Condor was a scratch, and now it's a 40-cent winner. Of course, the micro sell-off helps, but they're taking some of the weekend out, that extrinsic value already.
We'll
see if we stand pat for Monday. But yeah, if we open around the same level on Monday, this will instantly be a 50% profit winner, I would guess. Any thoughts on Chargers Chiefs tonight? Well, Steve, I'm glad you asked.
You've been waiting for this question all day long.
I am irresponsibly exposed to Ladd McConkey and Quentin Johnson. Those are my two plant the flag wide receivers.
Is Quentin playing?
Yeah, he's healthy.
I know he had the concussion for a little while, but okay.
Yeah, he'll be fine.
Yeah.
But yeah, Ladd McConkey is my breakout star of the year. And if that happens, I will be swimming in cake.
Yeah.
But tonight, the game tonight, I'm playing for exactly that. I'm going all in on Ladd McConkey, and I think he takes them to the promised land over the Chiefs. We'll see, though.
Yeah, I like Xavier Worthy anytime TD.
Yeah.
I think that's just in the books. You maybe even sprinkle on a 2 TD prop.
Ooh.
Not the greatest cornerbacks over there, so.
Yeah, and for Ladd, I would, if you don't want to do the TDs, I would just do receptions, whatever his line is, probably 7.5, and you move that yards over 100. That's where you get your value.
Yeah, you ladder it.
Yeah, because his
70,
line,
80, 90, 100.
Yes.
Ladder that baby, like ladder puts.
His line is probably at like 70. So you bet the 70, over 70, you bet over 80, over 90, over 100. But it's crazy. When you move it from 70 to 100, the odds go from like minus 110 to plus 400.
Yeah.
And it's just one of those guys that could easily get 100 yards. He was getting 100 yards by halftime in the last 4 games of last season. So, smash.
You're gonna take, who do you like, Chiefs or Chargers? Chiefs -3.
Chargers.
Ooh, interesting. Yeah. Okay, you're fading the Kelsey Swift.
I am.
Wow.
Yeah. I think the Chargers have more to prove, and the Chiefs, I think, will stumble into the season.
Ooh, okay. Speaking of stumbling, E-minis down 27 here going into close. NASDAQ down 9. You got the Dow down 246. The Russell bucking the trend up 9 and change. You got big move in bonds up 1.5 points, leading to a little bit lower rates on the curve here. Oil 62 on the dot here, down $1.47. Volatility futures up 22 ticks. Very small move in vol futures there. Gold up 40, silver up 7 cents. You got Bitcoin actually moving towards the higher end of where it's been trading today, up $1,500 on the futures spot. Down $113. That includes the overnight session. Ethereum basically unchanged, down 14, but it was significantly higher here. So choppiness, more chop.
More chop indeed.
In this kind of market with the choppiness, you find yourself closing positions a little bit more aggressive?
Yeah, I think that's the way to do it, especially when you're at all-time highs. I mean,
yeah.
If you have bullish positions, we're at all-time highs, and then you see this kind of these knee-jerk sell-offs. I mean, and volatility is really low, so the opportunities are few and far between. You have to go to high IV equities to really force high IV situations. So yeah, I'm playing small directional stuff. I'm playing some neutral stuff, but yeah, the way that these markets have been moving, I feel like I have not waited to get a 50% profit for quite some time, unless it was just a position that was on forever and then one day it worked out.
Yeah.
But a lot of these were taking off after a week or a week and a half if they're at 30, 40%. Just to make sure our risk isn't too overexposed. Because like with the VIX so low right now, I don't want to have a million positions on if we were to get a VIX pop to 25, 30, 35, 40. So I'm bobbing and weaving.
As we go into the close here, E-minis down 26. NASDAQ basically unchanged, got big moves back and forth in many of those big names. Got any final thoughts into the weekend? You want to give me your one football take of the weekend?
My one football take of the weekend is that Green Bay destroys Detroit.
Ooh.
Josh Jacobs, 2 touchdowns.
Ooh.
And that's especially if Micah Parsons plays. He's up in the air right now. But I think Detroit, sorry for any Detroit fans out there, I actually like the Detroit team, but I think they're going to have a wake-up call with the fact that we stole Ben Johnson. My other thought is Colston. There's the bell. Look at the NASDAQ, just ripped up 50 points.
They saved it for the last minute. You know, I had to get my squeeze until the last 30 seconds, closing near the highs of the session.
Yeah. Other take, Colston Loveland on the Bears. He will be the most undervalued tight end. People are going to realize that real quick. He should not be the tight end 15. He should be the tight end 5, 6, 7 in that like Joku range. He's going way lower than him.
I like it. Well, good job out of you, Mikey. And to everybody out there, thanks for tuning in and hanging with us. We're going to take a quick little 90-second break, come back and do this all over again on Monday. You're listening to Tasty Live. Peace.